Morning, ladies and gentlemen, a warm welcome. We start Monday on a slightly cautious note as far as markets and sentiment are concerned on the Dalal Street, but broadly the rally is in shape. We look at the Nifty for you, we look at the oil prices as also the dollar index. So for the good news first, one, the dollar index continues to be bearish. That's very good news for equities. Oil is quiet. Exports from the Hormuz are increasing by the day, and it seems that we did have a closure yesterday with the supreme leader in Iran now being laid to rest. So that's some sort of a spiritual close that comes to the end of the war. Now, what do you need to do? You need to focus on 3 or 4 major indices. There are very strong breakouts happening in the Nifty Healthcare Index, the Nifty Financial Services Index, as also the Pharma Index. Lots of strength there. As also realty, please keep an eye out on it. So while the Nifty battles 200-day moving average, we have sectors such as pharma, hospitals, realty doing very good volumes and good price breakouts. What do you need to look at? You need to look at stocks such as in the banking space, South Indian Bank at about 46 rupees. There is strength coming in RBL Bank 361. Maharashtra Bank at 88 is trying to reclaim its past glory, and Karnataka Bank at 263 has very strong charts. Apart from that, if you're looking at the cable space where a lot of strong breakouts are happening, look at KEI Industries and Polycab. These are two very strong stocks which are coming up. In pharma, look at only one stock, Biocon. Lots of strength in Biocon, 426 rupees for you. Market capitalization at the moment at 69,000 crore rupees, and a lot of bullish as well as swing trades in the making. Where else are smart trades snapping up? The Financial Services Index. I'll request the PCR to kindly show us the Nifty Financial Services Index. It's primed for a breakout at a multi-month high now, and you have stocks like Bajaj Finserv doing very well. 1895 is where Bajaj Finserv is. You need to keep an eye out on that one. ICICI Bank from the financial services segment, that is also looking good. Bajaj Finance and Shriram Finance, the two largest NBFCs in top shape as far as charts are concerned. You need to keep an eye out on these two as well. What about strength coming in the capital market space? 2 stocks. Look no further than HDFC AMC. Very strong move expected. 2800 is where the price is, and of course L&T Finance, Angel One and Aditya Birla Capital. So that's the broader structure of the entire market. You have gains coming in the healthcare space, in pharma space, in financial services space, and of course realty space. We'll be looking at Vaishali Parekh. She'll be joining us shortly, VP at Technical Research and Analysis at Prabhudas Leeladhar. Hello. Yes. So that's the structure of the market. We are hoping that Vaishali will join us soon. I'm not sure whether she's with us or not. Let's check with the PCR. PCR, has Vaishali joined us? Okay. Okay. Vaishali is with us, as is Abha. Good morning to both ladies. Vaishali, a very warm welcome. A view on the Nifty and the Bank Nifty.
Very good morning to all of you. Yes, so after a very long time, we saw Nifty moving past 24,200 levels. So, well, we are quite comfortable now. We elevate our support levels for this week to 24,000. And once we see Nifty crossing 24,350, 24,400, we would be looking at the target of 24,800. So, that is the way we are looking at Nifty. Bank Nifty may consolidate, though the bias is positive. So, we maintain 57,000 as the near-term support, and gradually we would be progressing towards 59,000 and perhaps higher. So, of course, good positive news is that yes, as we spoke last week, IT index has shown exhaustion in selling, and it's attempting to show a bounce. So, I think market bias should be positive, because to support that, we are seeing good pickup coming once again in pharma, in auto, etc. So I think view is positive overall.
All right, we've got some Q1 updates starting to kick in. Let's take a look at some of those FMCG counters. We've got Dabur, Godrej, Nykaa, Senco Gold, all of these reporting. And I think we've got pretty strong numbers coming in across these names. Vaishali, can we take a look at some of these charts? Because despite concerns around cost pressures, we've actually seen pretty steady performance across FMCG.
So yes, I guess they've absorbed all the negatives and now it's trying to restore good terms. So whether we talk about Godrej Consumer, Tata Consumer, they are showing signs of reversal because talking about Godrej Consumer itself, we saw good pickup coming in last week and there is a good bullish candle. So I would say gradually I would look at a target of 1120 and that is the crucial resistance. So is the case with Tata Consumer that also has shown signs of bottoming out. So I would say that yes, it's a good opportunity to buy because overall we are looking at Britannia, we are looking at HUL, they are all attempting. In fact, the whole of FMCG counter is showing some revival. So I would say that yes, these stocks can be considered.
Okay, 8:38, ladies and gentlemen. Let's do some chart checks with Vaishali. Vaishali, Biocon for you. It's a flat move for about a month or so from June 2nd to almost early July. And then suddenly on Friday, the stock moved 2%. What are the charts telling you?
So yes, Biocon has been very huge, but now we said that yes, 428 would be the resistance. Once we see the stock going above that, we are looking at a target of 440 to 470. So view is positive on Biocon. It is a good buying opportunity with the support of 400 levels.
Okay, we also have a whole host of NBFC stocks reacting to Q1 updates today. AU Small Finance, L&T Finance, again looking, fairly positive actually. We've got Satin Credit Care, Poonawalla, Credit Access Grameen, Utkarsh SFB. All of them will be reacting on terms of Q1 updates, and most of them have brought in pretty decent numbers. I feel like Vaishali, everyone was concerned about Q1 earnings, but at least these pockets are delivering, and hopefully that's a sign for the broader markets too. What's your take on some of these NBFCs? Is it the right time now to get into them?
I definitely agree, Abha, because last week we spoke about Shriram Finance, we spoke about L&T Finance. They're already in a good, strong uptrend. In fact, in the cash counter, if you look at M&M Finance also, that also is showing a lot of strength, and there is scope of this stock also participating in a good rally. About 340, we would look at 370, 380. So overall, I do think, because of course the lead was taken by Bajaj Finance, etc. But I think gradually all these stocks are showing a lot of strength, and I do agree that yes, still there is more scope of upside.
Okay, 8:40, ladies and gentlemen, still 20 minutes to pre-open. Let's get these chart checks running. Vaishali, would you want to comment on the strength in HDFC AMC?
Definitely. So I think this too is one of the stocks which has been a laggard, and after a very long time, we are seeing good pickup coming in. And I think it is in the process. Recent data also, if we see, it is making a higher bottom formation. So 2600 acts as the near term support, and I think this stock can go towards 2950 to 3000 levels. So yes, the trend is positive, and I think it's likely to continue to do so.
Okay, that's on HDFC AMC. Vishali, we are seeing momentum picking up in the market today. It looks like a slow start, so to speak, but otherwise it looks like we're starting to see the momentum pick up. Where else would you be looking for traction? I know you've brought us several different picks over the last few weeks, but what's sort of creeping up into your radar now? Also, what about some of the auto anch or tire stocks? You've got fertilizers, chemicals with the monsoons coming in. Where should one look?
Oh, yes, we have a vast opportunity, but I think currently, as per last week's movement, I think one can look into Keynes technology. I think chartical formation is quite good. Long consolidation. So I would be going gradual on this. Once you see the stock going above 3300, 3400 levels, this has scope of going towards 4400, etc. So it makes a good value buying at these levels if the support levels are held on. And besides that, in the cash count, I mean, of course, it's also the logistics besides the sectors that you mentioned. Chemical, etc., fertilizers, they've already shown. Even tire stocks had already got into momentum. So, well, it's still a buy, and we are looking at JK tires, Apollo tires, etc. But now I would also look at Anantraj. That is one of the stocks which is showing a lot of strength. In fact, in the IT sector, if you see in the cash counter, also Intellect Design, that also is quite well placed. So I think these are the stocks I would be focusing on. Besides that, as we spoke about logistics, so there is Aegis Vopak, there is GDL, Gateway District Park. These all look good at these levels, so I would be focusing on these stocks.
6th of July, ladies and gentlemen, and about 18 minutes left for the market to open. We are doing chart checks, which might help you have a sense of where the markets are headed. Let's look at high beta, which is stocks in good momentum, but low price ticket, where a lot of traders and investors are interested. Over to you, Vaishali, and a view which you might want to share on Maharashtra Bank.
Yes, so Maharashtra Bank also is one of the favorites as far as the cash counter banks are concerned. So I would say last week also it was showing a lot of strength, and I think this can, I'll just open the chart 1 minute. Bank of Maharashtra, that is. Yes, it's closed at around 88 levels. I think so. It's consolidating, but yet a good level. So 85, 86 is the support. And gradually, as I'm looking at the weekly chart, I think there is still scope of further upside, can go to 100 levels. So yes, the view is positive with 85 as support levels.
All right. I think we've got Metropolis also coming out with a Q1 update. I'm just trying to pull that one up for you. Also tracking the rains in Mumbai this morning. It looks absolutely crazy. And red alert now that the IMD has issued. I'm just going to pull that up for a minute because it's looking fairly intense in Bombay right now. And it's red alert. Everyone's been urged to stay indoors. And today, tomorrow, both are said to have very extreme rainfall. Avoid travel. Schools, colleges are shut. It's looking, pretty grim right now. Let's just hope everyone stays safe amidst all that waterlogging and of course, the heavy downpour. Metropolis now coming out, Q1 revenue up 16%, margin expansion also being seen there for Metropolis. Let's take a look. I think it's fueled particularly by specialized testing, which is something that is key to them. How's Metropolis looking on the charts, Vaishali?
So I think right now it is just consolidating. It needs to sustain above 560, 565. That could give us an upside target of 580 to 600 for now. So yes, gradual upward move is seen, but we need for clarity to move past. But if you see Thyrocare compared to Metropolis, Thyrocare is showing a lot of strength. So yes, this is one of the stocks which we have been recommending to our clients.
Let's look at the winners that are coming out of the pharma stable. We've discussed strength which is there in Biocon, but the index as also the sector is doing immensely well. As I had pointed out, you've had an 18% uptick in the pharma index over the last 3 months or so, and needless to say, this is at a record high. Let's look at strength, which is in Oro Pharma, 1620. Vaishali, this is one of the highest beta stocks that I have ever accounted. What are the charts of Oro Pharma telling you at 1620?
I would say yes, it continues to show a lot of strength, but well, I would be quite strict in following my stop losses, and I think this can go to 1800 levels also. So it's quite a run-up stock. So I would, in fact, because even on the weekly chart, it has given a breakout. So I think 1800 can be the next target. So, but yes. Being at a breakout level, we can see some profit booking. So I would say if one has to re-enter or buy fresh, then 1520, 1550 should be the level to watch for an entry. But to those who are holding, can continue holding for a target of 1800 as the next target.
All right.
847. Abha, what are you watching?
I was just taking a look at, actually I can't get my eyes off the rains in Bombay Shell. So actually that's where all my attention is this morning. Yeah, but I think, I think we've been looking at the positive momentum that's picking up on the Nifty, and that's heartening for everybody. I think FMCG, diagnostics, some of these pockets will be reacting to Q1 earnings. NBFCs and banks will keep our eye out there as well. I think you had a list of stocks that were on your radar. We had the US shut on Friday. We had Europe higher as well. Oil continues to trend lower. So there's really nothing to worry about, so to speak, right now when it comes to market triggers. But it's now just about, I think, finding the right value picks and making sure you're in on time as momentum picks up, right?
Absolutely, Abha. I think one space that deserves a very serious mention is, again, the healthcare space. Vaishali has marked Thyrocare, but lots of strength in Aster DM, lots of strength in Fortis. These are all hospital chains, have already given multi-bagger returns to long-term shareholders. Let's check Vaishali's view on Aster DM and Fortis.
Yes, so I do agree because this is one of the sectors which was always looked into when we were seeing a lot of volatility also. So I do agree. Aster DM also, it has already got in a trend. The near-term support lies at 760. So I think 850, 880 should be the next target that one can be looking into. Fortis is another stock which also has still a scope of a lot of upside. So I would say 940 for the near term support, and I would gradually go for a target of 1050 to 1100. And the other stock, of course, not to miss is Max Health, which has been a very smooth operator. I mean, it's gone so well, and I still feel it has scope of further upside.
What about real estate, Vishali? Where do you feel the excitement is among the realty names?
So of course, it's once again a lot of stocks which are showing strength in DLF. I mean, one is DLF, the other is Loda that we are looking at. Then there was Prestige. All these, in fact, if you talk about DLF, it is already moved past the 200-day moving average, and I think gradually we can see it moving towards 720 or so. So yes, DLF is also the frontline stock, and we do like this. We started with this, and then we progressed to Loda, Phoenix, Prestige. All these are looking good.
And we have lots and lots of brokerage views coming in today on industrials. Let me just get a wider view from you on that pocket as well.
Sorry, I lost you.
I was saying we've got a whole host of brokerage views coming in on industrials, a mix of some concerns and as well as some buy calls. When you're looking at the industrial pocket of the market, anything that's catching your eye, or would you feel that there are better picks?
Well, I have not yet really seen any of the stocks right now, but
okay.
Well, I think I'll.
No worries. Shell is a completely mixed bag of views coming in. When it comes to some of the names like a Hitachi or a CG Power, there are a lot of buy calls coming in, but also some concerns being flagged. What's your sense when it comes to industrials?
Well, about two very clear points. The sector had run up immensely. I mean, you've seen 100% returns, 200% returns in the last 6 months on stocks like Power India, as also CG Power, Siemens, and stocks like even Schneider Electric. They've run up very sharply, and what the government has now done is that allowed Chinese equipment makers who have factories in India to bid for contracts where these companies are supplying, because see, these companies are not expanding, their capex is full, and the sector needs equipment. So those lofty valuations will come down, and you will have sense and sensibility in the market. But remember, the cycle is yet to play out fully. Peak EPS is yet to come. So this will be, any dip will be a sensible purchase forward. Let us see till when the dip lasts.
All right. That's the view coming in. Lots of interesting stocks there to perhaps keep an eye on and maybe get into a deeper discussion on later. Shell, when it comes to some of the stocks that you were mentioning on opening, let's just recap some of those as well.
Yes, of course. So Abha, a very strong outlook happening in private sector banks, some of them old world. Look at South Indian Bank, RBL Bank, Karnataka Bank, and Bank of Maharashtra. I must say here that the tide is now moving towards private sector banks versus PSUs, because the private sector banks show a very, very good valuation when it comes to relative to their previous performance. So the swing of money is moving towards private sector banks. Apart from that, the entire financial services space, Abha, is abuzz with gains. I'd be looking at, in the large caps, Bajaj Finserv, Bajaj Finance, and Shriram Finance, while in the smaller category, which is high beta and low ticket items, the record highs in AB Capital and L&T Finance just might get better and better. And of course, you have from the capital market space, HDFC Bank, HDFC AMC, strength in Angel One, and of course CDSL. These are the spaces that at least catch my attention right in the beginning of trade. Vaishali is with us. Vaishali, a view that you may want to offer on the rupee?
Well, so I think rupee, it would continue to show strength. It can just oscillate. Maybe it can retest once again 96 levels or so, but I think the worst is over. So we need to see a dip to coming towards 92 or so. So that would even make it better. So I will wait for that, but I think the worst is over.
Okay, fair point. What else is gathering your attention? Is the worst behind us? What are the charts telling you?
Sorry, I lost you again. There is poor connectivity.
Ma'am, the IT space.
Yes, so I just started with that, and I think the worst is over in this sector as well. And I think IT index on the whole, maybe we may not see a runaway rally, but definitely I would consider now to start cherry picking stocks. And well, as always, I would start with Persistent that we have spoken about, and very many times. So I think IT sector on the whole has made a good support at base at 26,000. So I hope this level should sustain now. And talking about Persistent, it's already showing signs of revival. As I had mentioned, even on a weekly chart, 4250 was a very crucial support. pretty close to it, held on to the 200 period moving average, and from there on it's showing a bounce. So persistent is one of the stocks. Besides that, even Infosys, I think it's worth a buy. 960, 980 should be the bottoming out levels, and we saw last week it did make a low of 980. So at these levels, I think it makes a good level to start accumulating, because this, once the going is good, we will see this going at least to 1100 as a trading strategy. From there on, we can have a relook, and it can, once we see that well, the selling is over, it can go gradually towards 1150, 1200, and so on. So according to me, IT has really been badgered, and I think these are the stocks. And even on the cash counter, as I mentioned, Intellect Design, Keynes Technology, all these stocks look good to me from here on.
Okay, fair point. We have about 3 minutes left for pre-open to be with us. Let's utilize them with the best of our ability. Let's do some more chart checks. Vaishali, a view that you may want to offer on Angel One.
Yes, so Angel One has been doing very well all this while, and it continues to show an uptrend. So now I think for the new buying opportunity, 325, 330 should act as a support, and this can gradually go towards 360, 380. I also am quite positive on CDSL. Chartically, this has not shown any run up. It is just the beginning. So I would look at CDSL with now 1300 as support, and gradually we can look at 1600 in times to come. So this is another stock which can give us a good run up from here.
Absolutely. I do agree with you on CDSL. This is something that's now perking up after a very, very strong move that has come into the markets as far as the capital market space is concerned. And these are the stocks that are doing immensely well as far as the charts are concerned. I'll repeat them. HDFC Bank, my apologies, HDFC AMC, CDSL, Angel One, Anand Rathi, and of course the swing trade is back into action in BSE and MCX. Just a minute left as far as the pre-open are concerned. Remember, we are on the start of a fresh week, and momentum seems to be favoring healthcare, pharma, mid and small health, as also the financial services space, and not to forget the momentum in the realty sector. Apart from that, Nifty is going to negotiate the 100-day moving, the 200-day moving average with strength, because private sector banks and IT are now in top form, and they should be also providing strength. Lots of numbers are coming in as far as the first quarter monthly updates are concerned. They are a cause of good sentiment in Dalal Street, as also ahead of the quarterlies. We'll wait for the markets to click, and the Nifty is about 280 points higher. We'll wait for that to settle down. But let's look at the most active counters in the NSE 500 as far as prices are concerned. A green tick on HDFC Bank, 0.7% higher. Infosys is 2% higher. BSE is 0.5% higher. MCX 1.7% higher. 10% upticks on L&T Finance and AU Bank. We'll wait for them to settle down in Sense as well. But Kirloskar Engineering 4.5% higher, 2337. Dalmia Bharat Limited 4% higher, 1807. It's a nice deep sea of green as far as markets are concerned. Real estate doing well. You have Brigade Enterprises 2% higher, 525. Sobha Developers 2.5% higher, 1480. Aditya Birla Real Estate 2.4% higher is what we are tracking, and PNB Housing 2.4% higher as far as prices are concerned. Concord Bio, Ipca Labs are the ones that are representing the pharma space. We'll do a quick break here, ladies and gentlemen, and be back shortly. The Nifty still in strength, 100 points higher.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only
on
on
India
India Today.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the center is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only
on
on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation.
Catch India's magnificent rally and make it a part of your booming portfolio.
Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, you're with us here on Business Today. I'm Abha Bakaya. Let's take a look at the headlines at this hour. Q1 earnings season kicking into high gear this week with over 20 companies set to announce June quarter results. TCS, LIC, DMart, L&T Finance and Anand Rathi Wealth will be in focus, while some firms may also announce interim dividends. OPEC Plus expected to approve another oil output increase from August, adding more crude to global markets. The move comes as oil prices ease amid the reopening of the Strait of Hormuz and improving supply conditions, according to Reuters. German auto parts giant Webasto is reportedly planning a $400 to $500 million IPO for its Indian unit by 2027. Reports say the company is expanding capacity in Haryana as it looks to capitalize on India's growing demand for premium cars and sunroofs. Reports suggest Baskin-Robbins operator Gravis Group is in talks to acquire Dunkin's India rights from Inspire Brands. The move comes after Jubilant Foodworks decides to exit the franchise, with Gravis reportedly planning to revive the brand through localized offerings. Wall Street ends mixed, but S&P 500 and Nasdaq futures extending gains after a strong week. Asian markets mixed as investors reassess AI-driven stocks. Meanwhile, Brent trending near $72 a barrel. And the currency this morning, just 2 paise weaker. That's for you on your screen. 95.23 is where we're at versus 95.21. So now very clearly at the 95 mark. Meanwhile, precious metals see a muted start today. MCX gold opening 100 rupees higher at 1.47 lakhs per 10 gram, and MCX silver opening 300 rupees lower at 2.37 lakhs per kilo. So just about flat. Prime Minister Modi has begun his 3-day visit to Indonesia today, with defence cooperation expected to take centre stage. India and Indonesia are likely to hold detailed talks on a phased procurement of the BrahMos supersonic cruise missile system, a move that could make Indonesia the missile's second foreign buyer and further strengthen strategic ties in the Indo-Pacific. Shivani Sharma is joining us with more details on this. Shivani, take us through what looks like a major defence push.
See, Prime Minister Narendra Modi's visit to Indonesia is certainly important. It's not only his first visit in last 8 years, but a lot of focus is there on defense ties with Indonesia, and especially when it comes to BrahMos missile systems. Indonesia had already confirmed in the month of March that it is going into a deal with India for the procurement of these missiles. But what the sources have now indicated, Abha, that this deal is not only for a single missile battery, but multiple other batteries also. The formats of BrahMos, be it the coastal, be it the mobile, or the enhancement in terms of the maintenance of this missile system. So when Prime Minister Narendra Modi is traveling to Indonesia, certainly there will be a focus on the defense ties, and BrahMos happens to be one of the highlights of this visit. And the experts and the sources have indicated, Abha, that this deal could go up to somewhere around 350 to 450 million US dollars. So this is a big deal. And after Philippines, Vietnam, now Indonesia is also joining the BrahMos belt to counter China. And for India, it is very important because many other countries are interested in BrahMos missiles.
All right. It's all about defense at the moment and bringing to light, a key a deal and key talks that are actually currently ongoing there. Thanks so much for that, Shivani. Shailendra Bhatnagar and Dharmesh Khan joining us this morning. Gentlemen, good to have you with us. Dharmesh, let's take a look at the setup just before we start. 2 minutes to go. How are markets looking to you this Monday morning?
Yeah, very good morning to you, Ava and Shailendra, and to all our viewers. The markets are, structurally in for a buy on declines kind of a strategy. Even you can chase the upside, I think. Going by the business updates across the spectrum, they have been very robust and strong. So Q1 numbers are likely to be good on the absolute basis. It's a surprise kind of a numbers, which most of the analysts will have to revise their, EPS estimates. Though the margins may still be under pressure, but on absolute term, the double-digit growth number on the EBITDA is likely to be there. So a constructive fish for the market. One has to be a bottoms-up market right now.
Absolutely, and interesting comment coming in there on the Q1 updates that are coming in, because yes, we are seeing double-digit growth across several of those updates, FMCG, NBFCs, auto, and we'll dive deeper into that in just a moment. But I'm just waiting for market opening right now and to take you through the opening bell as it kicks off trade for the day and for the week. Overall, yes, Q1 updates so far haven't seemed to be as weak as anticipated. We're also watching out for any interim dividend announcements, so keep an eye on that as well. As of now, markets are set for a mute start. We've seen mixed trade in Asia, and of course, US was shut on Friday. So at the moment, we're not seeing too much of green on the screen, but steady at 24,306 in pre-open. And the opening bell now, just a few seconds to go on your screens. Let's take a look at how we are shaping up for the day. All right, as expected, just about 0.2% higher, 24,311 on the Nifty. Let's take a look at some of those individual gainers and losers as well, get a sense of what the market breadth is looking like and where perhaps the strength and support is coming in. Banks are looking healthy this morning. We've got FMCG just about flat despite some very decent updates. We'll take a closer look at some of the stocks there in just a moment. We've got Axis, HDFC Bank, so banks all the way, and particularly the private ones leading the rally, NBFCs. Then we've got Zomato, Adani Enterprises at the end of that list. And on the downside, let's just pull up for you. Some private banks are sitting out as well. Kotak, in fact, down about 2%. And we've got Maruti on the downside and IT once again trending lower as well. That's a quick look at the opening setup this morning. Shell, what are you tracking?
Good morning to you, Abha, and a very warm welcome to my friend Dharmesh. Strength. Kirloskar Engineering, 5% higher, 2348. This is the resumption of the uptrend. I have a keen eye out on M&M Financial Services, 1.5% higher, 339. There is a green tick Abha on India Mart, 1900 now, 1.1% higher. And of course, in terms of most actives, as I was pointing out, there is strength in RBL Bank in the green. Banks are doing pretty well. So that is something that we need to focus on. And a very quick look at the advanced decline ratio in the beginning of the trade that will set the trend as far as the sentiment is concerned. You have 1430 stocks in the green, 1100 in the red, and of the 19 indices, 16 are in the green. The Nifty Bank leads. Abha.
So kind of a mixed bag on the Nifty Bank. Dharmesh, I want to bring you in here. We've got some of them sort of leading the way, others sitting out. What's your sense? Is it very stock specific right now? We've been waiting. All right, we've got Prime Minister Modi departing for Jakarta. Remember, defense talks are going to be focus. In fact, Shivani talking to us about the importance of that deal. It's a three-nation tour now that the Prime Minister is embarking on. He's going to be visiting Indonesia and holding bilateral talks with the Indonesian president. And defense will be a key part of those conversations as well. And in addition to that, after Indonesia, he will also be proceeding post-July 8th to two other countries. Remember, at this time, Indo-Pacific needs India and Indonesia to work more closely together, according to experts. Prime Minister Modi will be holding bilateral talks with Indonesian President Subianto and will be addressing the Indian diaspora in Jakarta. But the main highlight of the visit will be the BrahMos missiles. India and Indonesia are expected to hold detailed talks on the phased procurement of the BrahMos supersonic cruise missile systems. Defense sources say that discussions may go beyond the initial agreement reached in March, and talks are expected to explore a broader package that could include coastal and mobile launchers, surveillance radars, training, maintenance, and long-term logistical support as well. So that's what's on the anvil. The initial agreement was already reached in March, as I just mentioned, and we're now looking at a whole host of other conversations and dialogues ensuing on this. It's a three-nation tour. First stop Indonesia till the 8th. And this will be his fourth visit to the country now, but it's the first bilateral visit in 8 years. And this is at a time when experts say that the Indo-Pacific needs India and Indonesia to work far more closely together. So defense, key highlight of this visit, the BrahMos missiles, and detailed talks expected on the phased procurement of those cruise missile systems. And these discussions, in fact, may explore a far broader package, and this will help to boost India's defense sectors as well. Remember, most countries around the world now boosting their defense systems on the back of the current geopolitical environment and multiple crises around the world. All right, we have Dharmesh still with us, and I think, Dharmesh, we were talking about banks and NBFCs and the kind of mixed bag that we're seeing there in trade. How would you decode that for us?
Yeah, I mean, the updates were very strong across the spectrum of private sector, public sector, banks, and the NBFC space. Disbursements were also very robust this time around. The only catch point as far as private sector banking space is there is the CASA growth. So the CASA growth was not that high as the deposit growth. So term deposits attracted a better growth trajectory. And there, I think there would be some pressure on the NIMs. On the CASA side. So maybe anywhere between, say, 3-4 basis point to 10-12 basis point. SDFC had a major decline in the CASA growth. So that caveat has to be looked into mind before, placing a trading bet on the banks. But structurally, I think with the kind of growth pickup we have seen in the private sector banking space, like SDFC itself came out with 15% growth, Axis Bank 19% kind of a growth, which was not seen last year. So I think these are structurally in for a good, decent FY27. Buy on declines is a strategy. What we have been liking in the space, on the private banking space, has been Axis Bank and IndusInd Bank. IndusInd Bank is a story in the making. They are coming out of a problem area. And on the public sector banking space, we continue to like Bank of India. Again here, 18% plus kind of a credit growth was there. Deposit growth 15% plus. The growth, so the gap between credit and deposit growth is narrowing, and the RAM was 19.69% kind of a growth. Valuation wise, all these banks are trading at less than 20% of their mean valuation multiples 1 year forward. So catch-up trade is also out there for all of them.
All right, great. Shell, let me bring you in on anything that you're observing, as well as, of course, the fact that FMCG doesn't seem to be reacting to its updates, and IT continues to trend lower. What else are you tracking?
Well, Abha, FMCG has always been expensive. I've been observing that for the last 30 years. They just meander along. But banks, Dharmesh is absolutely right. Lots of activity in banks today, and that's because relative to themselves, HDFC Bank in particular is way, way cheaper than what it was maybe 5 years ago. So that's where money is moving in. 13 rupees higher, 814. ICICI Bank 19 rupees higher, 1430. Both of them are contributing about 70 points to Nifty's total. Axis is also in the green, and of course in defense you have BDL shooting up, missiles, you've been talking about them, 1398, 2.5% higher. Look at BEL shooting up 426, 2% higher, and of course strength in Hindustan Aeronautics as well. So that's the structure of the market, a nice shade of green. We should be hopeful of a close above 24,400 today, and that will put the 200-day DMA with the bulls, Abha. That's a very big relief.
All right. So sounding good there on the charts and the kind of levels that we're tracking. I'm just taking a look at, some of the real estate stocks, because there we're continuing to see momentum build up. Defense Shell just marked right now as well. And I think Dixon was in the news with a share price target raised. I think Investec looking at a 30% upside on Dixon, and we'll just touch upon that and bring it up for you. But real estate, that continues to be a top favorite. Does it lie on your radar as well, Dharmesh?
Definitely, yes, Ava. I mean, most of the real estate companies have reported very good pre-sales in Q1, and the collections has been also quite robust. So collection is another area which we look quite closely. But that's shaping up quite well. One thing is very clear from here on, interest rate hikes won't be there. Going forward, earlier we were expecting that there will be some more few interest rate cuts, which may still happen by the time we end the year if the monsoon progresses well. So keeping that in mind, we are bullish on the real estate space. Couple of stories on the initiating coverage we are in the making, that is the metro MMR region. So but I won't be able to take the names now because it's work under process. So, but housing finance companies, affordable housing finance is another area which one can look at. I have discussed the company's name on your channel, Aadhaar Housing Finance, around 480, 490 odd kind of a level. So trajectory remains very strong, 20-25% kind of AUM growth over next 2 to 3 years is being expected. They have been doing so for the last couple of years. The first price target is around 600 based on FY27 numbers at 2.5 times price to book value, which I think will be revised upwards as the numbers go by. So keep an eye on housing finance companies. Q4 was very strong. We have a particular liking for other housing finance in that. And real estate as a play looks quite attractive given the kind of macroeconomic tailwinds the way they are unfolding.
Okay. I think NBFCs are definitely on everyone's radar, whether it's housing finance or otherwise, but keep an eye on a whole host of those NBFCs and the broader markets. We do have a little bit of a reaction on those Q1 updates. So Senco Gold is moving higher, Godrej Consumer is moving higher, so some of those names are now reacting. We are seeing defense also moving today, as Shell pointed out. So defense is moving, NBFCs, FMCG, or some of these consumer-led stocks on Q1 updates as well. We've got Kirloskar Oil also seeing a reaction on the back of an upgrade from Jefferies. So that one's also moving higher this morning. And of course, banks is the other area that we're tracking and that we've spoken to Dharmesh about in detail. Closing comment then from you, Dharmesh, as we wind up the show today. Q1 action is picking up, monsoon fever is picking up. What's going to be on your radar as we move ahead?
So whole host of sectors are there. Definitely banks and NBFCs are there on the radar, which we have been liking for some time. Defense is another area which we have been liking, but the stock prices have not moved up that great. They have been in a range. I think this year will be a defining year from them as execution picks up. there will be a breakout happening out there. And keep an eye on some of the pharmaceutical, hospital chain, and the entire two-wheeler and four-wheeler space. Automobile is another area which we will be liking. And now all the tailwinds which should fall into place have fallen into place. Your commodity prices declined, crude oil prices are below, monsoons are catching up. At the same time, we are looking at a lower interest rate trajectory with the tailwinds of per capita income getting better is on the card. So, just be a buyer on decline in this kind of a market unless Mr. Trump chooses to surprise you again on a negative side.
Absolutely. And Shell, what should we watch out for? It's only first 10 minutes of trade, but today, of course, like I said, weak start, but we moved ahead some critical levels, so markets are expected to be in good shape.
Absolutely, Abba. And pharma all the way. Record highs on JB Chemicals Pharma 2372, as also Torrent Pharma and Lupin, Ipca Labs and Granules. So about 25 to 30% stocks in the record high list are from the pharma sector, and you heard that on the pre-open commentary at Business Today Television. Of course, Anand Rathi, and from the realty space, Phoenix Limited in fresh momentum. From the NBFC space, L&T Finance and AB Capital. Both these stocks were told to you in pre-open. Abba.
All right, gentlemen, we'll leave it there. Thanks so much for watching, and we'll be back with you at 3 p.m. for market closing.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation.
Catch India's magnificent rally and make it a part of your booming portfolio.
Look out for the next set of multi-baggers at BTTV. Morning, ladies and gentlemen. Monday starts on a fresh note as far as bulls are concerned on Dalal Street. A shade of green across the market. 24,348 is what we are tracking in terms of gains, and the Nifty is not the only index which is shining bright. You have a strong move coming into many stocks. Look at Shakti Pumps, 619 for you. This, of course, is related to the monsoon. Apart from that, you have strength in Dalmia Sugar, 5% higher, 358. Cabra Extrusions is doing well, 9% higher, 298. We have strength in companies such as Car Trade, 4.5% higher, 2829. And amongst the top traded counters, banks are pulling it up. Defense is pulling it up, and of course you have strength in the industrial infrastructural space. So broadly the markets are in good shape. The Nifty Bank is the top gainer, 0.39% higher, and you have strength in IT, you have strength in FMCG. The Nifty Healthcare Index is the top gainer, as I've been pointing out, 0.5% higher. Pharma is up 0.5%. Auto Nifty 100, Nifty Financial Services are all in the green. Would I want to mark new highs? Of course, yes. Let's just take a look. Dominated by pharma companies such as Granules India 861, Ipca Labs 1802, Lupin now kissing 2500. You have strength coming into Zydus Wellness 600 for you. From the hospital space, it's Krishna Institute of Medical Sciences 851. Phoenix Limited and AB Capital and L&T Finance are the other new highs in the market. Gainers, look no further than car trade. Look at Kirloskar Engineering and look at, from the defense space, Zen Technologies 4.5% higher, 1828. That's the strength in the market, ladies and gentlemen. Strong advance decline ratios, strong sectoral push coming on the green side, and of course the Nifty in the green, 92 points higher. We'll be waiting for our guest. We will be watching out for a guest to join us, and let's see what the markets are at this point of time. Hindalco in the green, 965, Persistent 4712, Coforge 1491, BEL HAL Mazgaon Dock. Mr. Lakshmikant Shukla joins us to read the technical charts. Good morning to you, Mr. Lakshmikant. A view that you might want to offer on HDFC Bank and ICICI Bank.
Shubhrabhat Shalenji, and good morning to all the viewer of Business Today. So talking about HDFC Bank, so HDFC Bank has seen a positive momentum in today's sessions. It has found bullish candle. I think 820 would be the crucial hurdle for HDFC Bank. From last so many times, it has faced selling pressure from these levels. But the way it has recovered from its lower level and formed bullish bell tool candlestick pattern and reclaiming this 100 DMA that is placed around the zone of 810, we expect that this time it will break this crucial hurdle of 820, and if it sustains well above these level, then I think we will see bullish momentum in HDFC Bank, and it will move forward toward the levels of 850 soon. For Axis Bank,
what are the two favorite stocks that?
So I was talking about Axis Bank. So a few days back, it has given falling trend line breakout and reached 1400 mark. Then after it has formed shooting star pattern on the daily chart and started hovering near these levels. So until it cleared this hurdle of 1400, I think we will remain on the sideways. Because on the lower side, 1320 followed by 1300 could be seen as the strong support for the Axis Bank.
Okay, what are the charts that you are watching in terms of strength?
So in terms of strength, on Friday we have seen positive momentum, few selected stocks of pharma. So I think from pharma space, Glenmark is looking good. On the daily chart, it has found support from its previous swings low, and it has given consolidation breakout on Friday sessions, and still even in today's session we are witnessing follow through momentum. I think holding this support of 2170 to 2180 view will remain positive and could move higher toward the levels of 2350 to 2380. So I think Glenmark is looking good. So one can initiate a long position in this stock. And if you look at the stock from the space of private bank, so from there recently IndusInd Bank had given good breakout from its cup and handle pattern. It has broken its previous swing high of 950 and closed above the same on the Friday sessions. So we expect bullish momentum in IndusInd Bank. On the short term basis, we are expecting the target of 1020 with the stop loss of 950 on the downside.
Okay, 935, ladies and gentlemen. It's a very, very strong move coming into HDFC Bank. 2.5% higher at 805. Let's look at the charts in terms of what the chart is saying. 805. Remember, HDFC Bank is still way below 200-day DMA, which is at 856. What you see is strength coming in at the bank. This is the highest level that we have seen since 16th of March, and the low that we saw was 734 on 2nd of April. So strong moves into HDFC Bank. About 717 crores has been traded. Let's look at another category of stocks in strength, which is BEL, 2% higher. Lakshmikanji, any stocks within the defense space that you like?
So no doubt, BL has seen a pullback move from last few sessions, but it could face hurdle around the zone of 435. That would be the immediate swing low occurred on 23rd of June. I think if it is able to cross this level, then it will give double bottom breakout on the daily chart, and then after it will move forward toward the levels of 460. So one should wait for this breakout, then after initiate long position. Apart from this, I think one can look HAL. HAL has also formed a base surpassing above it, still trading above its 220 and 200 DMA. Breakout is expected at the levels of 4,535. It has formed a strong base around the zone of 4,320 to 4,350 zone. And if it will give breakout of the levels of 4,535, we will see bullish momentum, a further acceleration of bullish momentum toward the levels of 4,660 to 4,700 zone.
Fair point. 9:38, ladies and gentlemen. Let's look at the new highs that are in the sector. 52-week highs are on Nykaa, 2.5% higher, 318.25. There is Sempro on the construction space. This is the Adani Group company that's doing immensely well. Fresh record high on a consistent level, 1506, 4% higher. Ether Industries from the chemical space, 1388. This is doing very well. And InSwift Labs, 4.5% higher, 223. Lakshmikanji, what are you observing in the market?
See, on Friday sessions, Nifty has given 13 days consolidation breakout of the levels of 24,200. When I appeared on previous week, I told that this is the crucial hurdle for the Nifty. So as it has given a decent breakout of this level of 24,200, then we expect its bullish move toward the levels of its April swing high that is placed around the zone of 24,600, and support has shifted higher toward the levels of 24,000 followed by 23,800. For Bank Nifty, the broader trend is still constructive, but it is currently lagging Nifty and trading within a consolidation range. The key support zone is placed around the levels of 57,000 to 57,200, where its 200 DMA is placed. Breakout is expected in Bank Nifty of the levels of 58,700 to 59,000 zone. If we get a decisive breakout of the levels of 59,000, then it could accelerate this rally toward the levels of 60,000. And we have now we have started seeing momentum as we have started giving business updates from the major banks like SDFC and Axis. So that could provide additional support for this Bank Nifty, and we will expect this breakout on the upside. So my bias remain on the bullish on both indices. Nifty appears stronger a little bit for the shorter term. And if Bank Nifty give this breakout of the levels of 59,000, then we expect upside move.
Okay. Mahabank, let's look at Maharashtra Bank. It's come out with its statements on its performance. This is the 5th day of fall, and this is around 200-day moving average. You have about 0.5% of an uptick. Let us see what the updates are at this point of time, and this is how prices, this is how businesses moved. Total business for the quarter gone by, which is the first quarter, is up 19% year on year. Total deposits gain 13%. Gross advances have surged 27%, and the CASA ratio is at 49% versus 50%. Let's see whether the swing trade improves for the better or not. Top traded counters for the moment. Shakti Pumps 6.5% higher. The company has won an order from Maharashtra State Electricity Distribution Company for 354 crore rupees. It's the second top traded counter on NSE, which says a lot, 353. Remember, pumps will also be used now aggressively to offset the monsoon decline, and at the moment 675 rupees, 6.8% higher at 614. Lakshmikanji, are you looking at the Shakti Pumps stock?
1 minute. So, if you look at the overall structure of Shakti Pump, from last few days, it has been consolidating after making high around the levels of 600. But today it has seen a breakthrough of these levels. So I think previous hurdle now could act as the support for the Shakti Pump. And as long as it hold this support, we will remain positive and it will move higher toward the levels of 640. So on the short term basis, I am expecting a bullish move in Shakti Pump toward the levels of 640 with immediate support of 600. Am I audible?
Okay. Rally, or you were saying something, Lakshmikanji?
I was asking that, am I audible?
Yes, sir, you are. Momentum building on strength as far as persistent is concerned. Is this a dead cat bounce or value buying? Only time will tell. Earnings are expected on 16th of July, and third day of gains, 4729 for you. The counters up 1%. Okay. What else is moving? There is strength in defense, which is Paras Defense, 1357, 5% higher. We've already marked BDL, BEL, and HAL. Zentech is also in top shape. That's the entire setup as far as markets are concerned. Even data patterns is in top form, 2.5% higher, 4622. That's the structure that is coming in. And 9:44, ladies and gentlemen, let's try and wrap up the markets. Now a 100-point uptick on the Nifty, a 250-point uptick on Nifty Bank, and IT is in the green. Apart from that, there is a strong move coming in the healthcare space, pharma space. You have the Nifty Auto Index in the green, and you have metals as the top performer. What's slipping in trade? A bit of profit booking that's happening on the FMCG index, the PSU Bank index, and the mid-cap select index. Nothing to be worried about. Broader structure of the market is good. Pharma is showing signs of blowing out. Record highs in Lupin, Granules, Ipca, JB Pharma and Chemicals, just to name a few. And of course, strong volumes coming into HDFC Bank. We'll call it time here, ladies and gentlemen. We'll be back shortly.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
The final farewell to one of the West Asia's most influential and controversial leaders, Ayatollah Ali Khamenei, is all set to begin tomorrow. Tehran is preparing for days of mourning, preparing for one of the biggest state ceremonies in its history. Funeral rites begin on July 4th and conclude with burial in Mashhad on July 9th. Iran is tightening its security with guests from 100 countries set to attend the funeral.
We have extensive experience in organizing large ceremonies and mass gatherings, and in ensuring their security in our country. Security is a comprehensive matter in which all the elements involved contribute to maintaining it. The foundation of our country's security is the people. Our security is people-based security.
For India, this is not just a ceremonial event. It is also a diplomatic moment. New Delhi will be represented by Minister of State for External Affairs Pavitra Margarita and Bihar Governor Syed Ata Hasnain, underscoring India's long-standing ties with Iran despite changing geopolitical realities.
It's not good for us because we want to participate in the funeral ceremony of our leader. In India, we have they respect to our leader and they want to attend in this ceremony.
Former External Affairs Minister Salman Khurshid will also attend to represent the Congress leadership.
It's an important message, an important outreach to Iran, with whom we have a remarkable civilizational relationship, and nobody denies that, including our government.
Iran's invitation have cut across party lines, with Mehbooba Mufti confirming attendance. Jammu and Kashmir Anjuman-e-Shari Shia Chief Aga Sayyid Hassan Musavi will also attend. An invitation has also been sent to BJP Chief Nitin Nabi. This is more than a state funeral. It is a geopolitical moment, as leaders from around the world gather in Tehran, and key interest in connectivity, energy and regional stability. New Delhi will be watching developments in West Asia closely as Iran enters a new chapter. With Geeta Mohan in Tehran, Bureau Report, India Today.
Following the G7 summit in France, which was attended by Indian Prime Minister Narendra Modi and his Japanese counterpart Sanai Takaichi, Japanese Prime Minister is on her maiden visit to India. Sanai Takaichi is the first female Japanese Prime Minister who is on a 3-day visit to India from July 1st to July 3rd at the invitation of Prime Minister Modi. She received a ceremonial welcome at the forecourt of Rashtrapati Bhavan. The warmth shared between India and Japan was reflected in the mutual respect and reference to the leaders of both the nations.
Your Excellency,
और मेरी छोटी बहन प्रधानमंत्री ताकाइची जी, नमस्कार, कोनिचिवा। वे जापान की पहली महिला प्रधानमंत्री भी हैं और एक दूरदर्शी और लोकप्रिय नेता भी हैं।
皆様、こんにちは。
Ladies and gentlemen, good afternoon and namaskar. You called me a beautiful younger sister, Prime Minister Modi. But at the small meeting before the big meeting, we confirmed that we are on the same page and developed this relationship as brother and sister. Japan and India must leverage our respective strength to become stronger and more prosperous together in the midst of international affairs in disarray.
आज के अनिश्चितता भरे युग में भारत और जापान दोनों इकोनॉमिक सिक्योरिटी और एनर्जी सिक्योरिटी का महत्व अच्छी तरह समझते हैं। इसी दिशा में आज हमने इकोनॉमिक सिक्योरिटी के लिए एक जॉइंट रोड मैप तैयार किया है। इसके माध्यम से हम सेमीकंडक्टर, क्वांटम और एडवांस मटेरियल जैसे स्ट्रेटेजिक क्षेत्रों में सप्लाई चेन रेजिलियंस को मजबूत करेंगे।
The relation between both the nations travels back to the time when Buddhism from India influenced Japanese philosophy, art, culture, and society. Prime Minister Takaichi's visit to India is also significant because of a deep-rooted connection with her hometown of Nara with India. The visit also comes on the eve of 75th anniversary of the establishment of diplomatic relations between Japan and India next year. India and Japan have walked hand in hand and taken a leap beyond traditions. A memorandum of cooperation reaffirming their commitment to deepen bilateral and global cooperation was sealed as both leaders shared a platform during the 16th India-Japan Annual Summit. Technological cooperation along with advancement in artificial intelligence have been one of their top agendas during the bilateral talks. Besides, India and Japan are also cooperating across defense, advanced technology, clear energy, resilient supply chains, digital innovation, infrastructure, maritime security, semiconductors, and critical minerals. Japan is the fifth largest investor in India. Japan has pledged 10 trillion yen or around $68 billion investment into India in next 10 years.
आज के अनिश्चितता भरे युग में भारत और जापान दोनों इकोनॉमिक सिक्योरिटी और एनर्जी सिक्योरिटी का महत्व अच्छी तरह समझते हैं। इसी दिशा में आज हमने इकोनॉमिक सिक्योरिटी के लिए एक जॉइंट रोड मैप तैयार किया है। इसके माध्यम से हम सेमीकंडक्टर, क्वांटम और एडवांस मटेरियल जैसे स्ट्रेटेजिक क्षेत्रों में सप्लाई चेन रेजिलियंस को मजबूत करेंगे।
As India is set to hold the next Quad summit, the West Asia crisis and growing Chinese challenge posed before India and Japan has prompted both the nations to further strengthen their defense cooperation and emerge as a strong defender in maritime security. Modi will next meet Australian Prime Minister Anthony Albanese ahead of the Quad summit.
Expansion of maritime security cooperation is especially important for regional peace and stability. Taking the opportunity of our visit, a destroyer of Japan's maritime self-defense force and an India Navy vessel are planning to engage in joint exercise. We will enhance exercises in the Indian Ocean.
Japan has already become one of India's largest infrastructure partners. The Mumbai-Ahmedabad high-speed rail project remains the flagship symbol of this cooperation, but Japanese investment also extends to industrial corridors, metro rail systems, urban infrastructure and connectivity projects across India. With Mahashweta Lala, Bureau Report, India Today.
let's talk about Iraq, because the photos this week are wild. Piles of cash, bars of gold. Iraq's new Prime Minister, Ali al-Zaidi, has launched what might be the biggest anti-corruption sweep the country has seen in years, and some of the details sound almost too strange to be real. At MP Hind al-Abbasi's home, investigators reportedly found $57 million in cash, 27 kilograms of gold, and gold underwear. Another lawmaker, Alia Naseef, had roughly $15 million in cash at her house. And at the deputy oil minister's home, a man already under US Treasury sanctions, over $11 million in American currency was found hidden inside the walls. Not a safe, inside the walls. Estimates on total arrests vary. Iraq's state news agency says 47. A security source told Shafaq News it's close to 67. Either way, we're talking sitting MPs, a former bloc leader, senior oil officials, people who had their legal immunity stripped hours before agents showed up. Corruption in Iraq isn't new. It's been called endemic for decades, with ministers functioning like money factories carved up under the country's power-sharing system. What's different is al-Zaidi himself. He said corruption threatens the very existence of the Iraqi state, pledged to take no salary, accept no gifts, and skip a second term. And the arrests have crossed sectarian lines. Sunni and Shia politicians both swept up, letting him frame this as rule of law, not a purge. But here's the real story underneath it. This is landing right before al-Zaidi heads to Washington. A trip happening because the Trump administration, through envoy Tom Barrack, backed his rise in the first place. And that backing isn't free. What Washington actually wants is for al-Zaidi to rein in Iran-backed militias. For years, groups under the Popular Mobilization Forces umbrella have done far more than carry weapons. They've hit the Kurdish region, been linked to a journalist's kidnapping, and repeated attacks on US personnel in Baghdad. When Washington squeezed their funding, they adapted. Checkpoints, protection rackets, entire state-linked companies built with public money. The fear in Washington that oil dollars flowing into Iraq are quietly leaking through the militia-controlled ministers straight into Iranian hands. Al-Zaidi now put a deadline on ending that. September 30th. All armed groups outside state control disarm. He says handovers have started. But as he's put it, handing in rifle is easy. Cutting a faction's loyalty to Tehran is the hard part. So Washington's bet is simple. Choke the money, choke the leverage. Whether al-Zaidi can outmaneuver the very people who put him in power, and whether Iran's grip on Iraq can really be loosened, is the story to watch. With Debangna Datta, Bureau Report, India Today Global.
Just over 2 months ago, the Delhi-Dehradun Expressway was showcased as one of the Modi government's flagship infrastructure projects. It went viral for cutting the Delhi-Dehradun journey to about 2.5 hours. Today, the same expressway is making headlines again. This time for 2 giant craters in the middle of the road. The viral video shot near Hathikadoda village in Shamli shows massive potholes on the 12,000 crore rupee expressway, barely months after its inauguration. Just a few hours of downpour, and this was the state of the road. The images triggered outrage, with motorists questioning how a newly built expressway could develop such damage so quickly. The Congress also attacked the government, alleging corruption and questioning construction quality. The National Highways Authority of India, however, has blamed heavy rainfall and water stagnation. It says the permanent drainage system could not be completed because local residents opposed the construction of a balancing culvert. NHAI says the damage was detected during routine patrols. Repaired immediately, and a 1.5-kilometer parallel drain is now being built as an interim measure. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. And as we kickstart another fresh week on the D Street, we're looking at the earnings season catching up fast, and we're approaching that, and we're going to be tracking the biggest business updates that could drive the market action in this week. We'll also be decoding what is the business update saying about 5 Vedanta Group companies. Remember, this is the first time ever that we will be looking at the earnings of all the demerged entities of Vedanta Group, and that's why all these updates are important to track. We'll also be looking at the FMCG stocks that are in focus with regards to the latest business updates, and also we will be focusing today on this discussion that why brokerage houses are turning bullish on Dixon Technologies. We have a fresh report there and fresh target upgrades that have pulled up the stock too in the session today. We'll also put the spotlight on Nykaa, where there is again strong momentum in the fashion business that's expected to power about a 30% revenue growth this quarter. That's something that the business updates are also indicating. Plus, despite the volatile markets, we are actually seeing that the retail investor participation is making a strong comeback. We'll talk to you about the latest data reveals and what it reveals about the investor sentiment as well. We will also focus on the defense sector. There are fresh defense procurement approvals boosting the sector prospects, and we look at 3 defense stocks that most of the analysts believe that could be the next big opportunities. So let's kickstart this discussion. But first up, we'll have to look at how the markets have looked at this point in time. So 24,380, we're 110 points higher in the session. First 1 hour of trade has panned out to be positive. When we also look at the Nifty Bank, that's also up by 0.65%. Let's also pull up the broader markets to see how the session is moving up. Those are the top movers as far as your market gainers are concerned. You have a lot of those banking names, HDFC Bank, BL, Axis Bank is also moving up, Bajaj Auto, ICICI Bank. Banks are forming a large chunk of the top movement in the market action today, so we'll focus on that. Let's also welcome our guest on board. We have Gaurav Sharma joining in to share with us fresh take with the markets and talk to you about all of these topics that we are going to be touching base upon today. Gaurav, good morning. How are you looking at the markets at the fresh and new week start, and what does the upcoming earnings season imply for the markets?
Hi, very good morning to you, Sakshi. Thanks for having me today. See, the markets have started the week on a reasonable note. The only worry is that we are trading very close to the resistance point, that is 24,400, 450 odd zone. It is very important that market go passes and decisively breaks this zone. This also is where the 200 period exponential moving average lies. Previously, also for a couple of occasions, we have seen some profit taking, some supply coming into markets around this zone. So a decisive breakout is pretty much needed for a further sustainable up move. The broader markets are still not performing today. They are actually underperforming, and the move is largely driven by the rate sensitive pack. It is the banking that is leading the baiting, followed by the financial services, real estate, auto. So this segment is performing exceptionally well. We find a reasonable comfort in this segment from a trading standpoint as well as from a medium to long term perspective.
Okay. Let's also now dig a little deeper and try and understand how things are moving. We're also getting to see how the retail money is flowing back. The retail investors have bought equities worth about 57,200 crores in the first half of the calendar year already. This is sharply up from what it was in the year ago period in the same quantum. So you can see same period. First half of calendar year 2025, you only saw 1884 crore rupees of investments that were poured in from the retail investors. There's a sharp jump there. In fact, the buying has rebounded after 2025 net outflows. Investor confidence seems to be improving despite the global uncertainty and the volatility, and it is gathering more momentum again. So let's try and decode that. First up, help us understand as we're moving into the second half of the calendar year, there is a slight shift. There is an improvement in the geopolitical situation globally. There is also a calmer crude oil price front. Then we are also looking at, not too much of a worry when it comes to the global rate front as well. There is some easing action there too. So looking at how all of these scenarios are developing, how are you looking at DIIs and how they will drive the markets now?
So actually, DIIs have been clearly net buyers all throughout the journey, and I think that's the actual area from where retail participation is coming into equities. Now having rates at 6.5% for the fixed deposits for the normal retail public segment, they are not left with much of the options to beat inflation. Stock markets is actually predominantly the most important one and the easier one where they can target. Mutual funds is the clear beneficiary of it. We have been clearly witnessing the AMFI data, and an uptick is what we have seen of late. Yes, geopolitical situation is now cooling out. Things are setting up normally. Crude is comfortably hovering near $72 a barrel. This is a very comfortable situation for India, who is the second, third largest importer of crude oil. The rupee is somewhat a little bit on a finer side, not too great as such, but a slide from this levels can be a healthier note towards 94.50, 94 zone will be a better prospect to look at. Apart from this, the only headwind lies is U.S. inflation. That's where I am, monitoring very closely because that is only one thing left. Because if that is risen, a steeper outflow of foreign money would be seen, and that will eventually impact commodity prices as well.
Okay. I also wanted to get a sense on the foreign investors in the same breath as well, try and understand if there is any indication that the foreign money is coming back. We are also looking at wherever the money was flowing into the first half of the calendar year and the last 1 year as well in global markets where the foreign money was chasing AI-led opportunities. There's now increased amount of volatility in those markets as well. There is some kind of a concern whether the valuation peak has already been reached. Is there any kind of a bubble territory that's being formed now? And therefore, I want to understand that whether that money will find its way back to India.
I think it is very early to say whether that money would be coming to India or not. But what we can precisely see is that it is certainly moving out of the AI and the chip market. I'm specifically talking about South Korea and Taiwan, for that matter, who have drifted lower, and India has regained the position it was earlier. I think the valuation concern that you were pointing out is very much there. This was a clear-cut bubble sentiment that drove money and very, very heavy figures towards those areas. And they are not just the markets, they are just a handful of stocks, mainly three stocks, two in South Korea and one of the Taiwanese market. So they attracted most of the money and led their markets higher. As far as when we look at India, it is a much diversified kind of a market. Nifty 50 had major contribution from BankX, followed by other aspects as well. Therefore, I think at least for the upcoming quarter, FIIs might put their investments on hold, because this is where the actual dent was seen of the ongoing Iran US war. So even I'll be keeping a close watch on how things come out in this particular quarter, and what is the extent of dent the companies have seen?
Okay, fair point. So I hope that this has also helped you out. Let's now start focusing on the key segments that we are looking at in terms of the business updates that are coming in. We'll focus on the Vedanta group first today, Gaurav. And the question here is that how does one really look at the entire group, the 5 demerged entities now? Many of these stocks have in fact done very well even post listing, but the key question will come in whether the earnings will start reflecting that the momentum can build on. So we'll talk about the Q1 business update. We are actually looking at how aluminium output has hit a record high. Aluminium production is also up by 5% year on year. The output has jumped 41% year on year. And the value added products are up 14% year on year. The premium product mix had gathered pace as well. So we'll talk about that as the Vedanta aluminium business. We'll also talk about how power and oil output, power has been up, but oil output has been down this time. We're seeing the power sales surge by 38% year on year. We're also looking at how oil and gas production has fallen by 17%, although. When we talk about the iron and steel output, that's up by 4%. And we're looking at the zinc ports also deliver mixed performance in the business updates that's being talked about. We're also looking at a start in the Q1 of FY27 on a mixed note. Aluminium, of course, is the growth engine right now. Power business has gained momentum. Oil and gas has seen some weighing on the performance. Zinc and steel have shown mixed trends. So let's try and decode for our viewers what exactly should we be looking at here. Within the Vedanta group, are there any pockets that you would be more confident than the others?
See, we have not separately started tracking the Vedanta demerged entities as yet. We don't have a coverage report going in, so I won't be able to comment on that. But as far as overall metal prices are concerned, you were speaking about aluminium. It is trading near the support zone, and a bounce is pretty much likely from those levels. 324 is the support territory. It has tested around those levels, and we expect a reversal coming in soon. We are already seeing a reversal in zinc prices. They have started gaining up, and they are trading close to their peak. Same is the case with copper. Copper is also trading just in line with aluminum near the supports, and a bounce back is pretty much warranted. Therefore, we expect the metal pack to perform. They have performed in the past 1 week. We expect the performance to continue going ahead as well. Reasonable correction in many of the metal companies have been witnessed. Our favorite being National Aluminium, Hindustan Copper, Hindalco in this space.
Okay, fantastic. I hope that this has given you some clarity, viewers. Let's talk about the FMCG space as well. We're looking at how shares of Dabur, Godrej Consumer, and even Nykaa, Senco Gold, these are all going to be in focus today. We are looking at some business updates that are coming in, so let's focus on that too. Specifically, we'll start off with the FMCG pack. Dabur is expected to report double-digit revenue growth both in consolidated basis as well as on the net profit front also for the June quarter. That's led by the robust demand across its portfolio. Recorded growth in the foods business and stable operating margins is what they are indicating. They're also talking about how their India FMCG business is expected to post double-digit growth led by the home and the personal care segment, which is likely to expand in high teens this time. When we talk about Dabur's healthcare business, they are expecting to report mid-single digit growth with sequential improvement there, while food business is set to deliver double-digit growth. The beverages portfolio has also witnessed some recovery there. The company also expects EBITDA margins to remain stable, while profit after tax is likely to grow into double digits. That's what we do know as far as Dabur is concerned first. Any suggestion on how do investors track this one amidst these business updates?
These are very encouraging numbers that you have just revealed. A double-digit growth in most of the segments is phenomenal performance, and FMCG coming in double-digit is very good. I fail to recall many companies just lie somewhere between 5 to 8% on an uptake. Even that is considered reasonable. But even Marico also came up with a double-digit figure, which is pretty much encouraging. Especially when we talk about Dabur. It is trading lower. It is a clear-cut underperformer, and I think this will actually boost the sentiment and lift the stock price upward. Considering the current price from where it is trading, it is very closer to its support zone. 400, 410 are the levels. So it is just 10% ahead of the support. So these are very much comfortable levels. So even from a medium term perspective, one can consider taking a position in this stock, given the kind of growth the company has provided in their business update. If that is culminated into their numbers as well, I think the stock will comfortably rise up towards 480, 490 zone in the coming month or so.
Okay, let's talk about Godrej Consumer Products then. And the company expects consolidated revenue growth to be in high teens in the June quarter, ahead of its full year guidance of double-digit growth. Also, underlying volume growth is expected to be in high single digits. EBITDA is expected to exceed the company's own double-digit growth guidance they talk about. However, the margins are expected to remain under some pressure due to the elevated input costs that we saw. The company has also said that the commodity costs are easing towards the end of Q1, and they expect the margins to improve from Q2 onwards. So looking at this scenario, how would you look at Godrej Consumer, and what does the stock price also indicate right now?
Nothing surprising as such. We are expecting the margins to remain under pressure at large for FMCG pack. With the rising inflation, mounting prices, only the better ones will be able to manage to hold on to their margins and actually report into their profits. So here the real test lies. Who is the one that will actually win the race is the big question. As of now, a company managing higher growth and in terms of revenue, anything closer to a double digit figure, 8 to 10% mark, is a very healthy figure. One or two more quarters of pressure is what we are expecting for the FMCG pack, which is already reeling under pressure from year and a half now. So therefore, even in this quarter, if some company manages to hold on to their margins, I think will actually lead the entire pack.
Okay, let's talk about two more stocks. One is Senco Gold. Again, this is important to look at on the back of some cooling off of the gold prices now. And of course, what does the Q1 now indicate in terms of demand trends? Is the demand going to be coming back at this point in time is something that everybody is watching out for. So Senco Gold has reported 60% year-on-year growth in its Q1 revenue, driven by strong wedding season and the festive demand. They're talking about how retail demand grew by 48%. Their same store sales growth also indicated a 38% growth from year ago period. The old gold exchange accounted for 43% of the revenue sales, and this is going to be an important trend to look at across the gold jeweler space in Q1 as well. The diamond jewelry sales volume has also increased by 40% year on year. Volumes have grown by 15%. They are also talking about how the company has added 8 new showrooms during the quarter, taking its retail network to 208 stores. The management expects the September quarter to be seasonally softer. So it remains focused on protecting its margins even in the coming quarters. That's what is the indication from Senco Gold. Let's try and decode that. Of course, we've seen last couple of years pan out to be strong ones for companies within the gems and jewelry space. The stock prices peaked in the month of January this year, and from then on we have actually seen gold and silver prices ease out. Let's try and understand how would you look at these Q1 numbers and what would that indicate in terms of how should one approach jewelry makers.
So actually, of late in the past couple of months, gold prices have been very much volatile. They have seen the sky and they have come down very quickly. Uh, Although we remain very much bullish on the largest of the pack, that is Titan. We have a coverage on it also. As far as Senco is concerned, we have not started tracking it. We haven't released a report on the same, but as far as its quarterly numbers and basic financials, from where I can see, the company is doing exceptionally well. Their margins are clearly going up, and so is their profitability. Even the last quarter, the March 26 numbers were phenomenal, over 30% top line growth. They have done a fabulous job as far as profit numbers are concerned. If they are able to continue on this path, I think considering from where the stock is lying, which is a clear underperform for quite some time, I think the stock has good room for upside move. Again, I would say we do not have a coverage on it, so I won't be recommending a buy, sell, or hold on it as of now. But basic financials look really impressive.
Okay, let's now talk about the fashion giant Nykaa. The company expects GMV, its gross merchandise value, growth in early 30s or 30% range during the June quarter, with overall net revenue growth accelerating to nearly 30% as well. They're also talking about how their beauty business continues to remain resilient. Both the net sales value and the net revenue are expected to grow in late 20% range, and the fashion segment continues to outperform now, with the net sales value growth expected in the mid 50% range now. The company has said partnership with players like Nike has delivered encouraging early results. They're talking about how the fashion net revenue is going to be looking at touching a multi-quarter high this time around as well. So let's talk about this stock. We do remember, still fresh in memory, Gaurav, how Nykaa shares have seen a very volatile recent past. There have been so many troubles that have pinned down investors' confidence in this company. But over the last couple of quarters, things have improved substantially. The stock price is also improving. At this point in time, looking at the kind of business updates we are getting, how would you approach Nykaa?
It was a much hyped up IPO, I very well remember. And post its listing, it even saw a good amount of profit taking, and gradually the stock is building up. They have done well. They have launched product with their own name under the brand Nykaa itself. They are also retailing other brands as well. They have their luxury stores also in place. So I guess they are doing it all right. With rising female population is India who are going out to work, I think the demand of cosmetic products is likely to increase, whether it is own brand products or it is other brand products. Therefore, I firmly believe that this company is doing, as of now, everything right. The sales figures are complementing the growth. They have managed to hold on to their margins and have eventually resulted in greater profitable numbers. If the same scenario continues, which I expect to continue, this stock is more likely to trade higher. 340, 360 zone is pretty much likely in the coming 1 to 2 quarters itself.
Absolutely. Let's now talk about some of the top of brokerage houses reports radar as well. Dixon Technologies from the electronic manufacturing space is in focus yet again. We're actually looking at how the Investec has turned bullish now on the company. They've reiterated a buy rating, raised the target price to 16,200. Remember, the stock price currently is under 13,000 levels. The new target implies nearly 30% upside. They're talking about how FY27 to FY28 EPS estimates have also been raised by 6 to 8% by Investec. They're talking about mobile demand is seen stabilizing. Indian EMS players again are gaining market share, and that's something that they're betting big on. They're also talking about the bull case where telecom, IT, hardware outlook has improved. The second half of FY27 earnings growth is seen accelerating as well. They're talking about EBITDA, which is expected to remain resilient. The mobile exports PLI 2.0 is the key upside trigger. The specialty EMS expansion could also lift the earnings even further from here, is something that they're betting on. Let's talk about Dixon. We do know that the stocks, in fact, had a vertical sort of a rally, doubled, tripled investors' money in a very short horizon. And thereafter, there was a question of peak valuations again on this stock. The stock has been consolidating, lying low for some time now. This fresh brokerage update with about a 30% upside in the targets that they're expecting, how would you look at Dixon as a fresh entry level? Do you think there are any chances for investors who had missed the previous rally?
So actually, Dixon is a clear example of a steeper the rise, the steeper the fall. No doubt it has been a great multi-bagger stock. In just a span of 1.5 years, the stock has folded from as low as 2,000, 3,000 odd levels, trading around in the mid of 2023. It went up to 18,000, 19,000 zone by the end of 2024. Thereafter, it went into consolidation. Currently, after a steeper slide, this stock is all set. It has spent a lot of time consolidating around the 10,000, 11,000 zone. Now it is all set. The largest EMS player in India, I think it is all set to gear up. A further up move is pretty much warranted. A lot of correction, and price wise as well as time wise, both we have seen. Therefore, a further uptick towards 14,000, 15,000 odd zone in the next 1 to 2 quarters can be seen in this particular space. The viewers who hold the stock from a medium term perspective, I advise them to maintain a stop loss at 11,000 zone.
Okay, got that. Let's also talk about defense space as a whole. That's also garners a lot of investors' interest here. Again, we are looking at how Defense Acquisition Council, the DAC, has cleared procurements worth 52,000 crores. They are focusing on drones, the electronic warfare, and missiles. We are also looking at high altitude surveillance, which is getting a push here, and 1.3 lakh crores of fast tracking pipeline right ahead. We are also looking at how Motilal Oswal Financial Services is looking at a strong order visibility for the defense pack. Their top picks they have revealed are BEL, where they have given a buy rating and a target price of 510. They are also talking about how they've already sat on 30,000 crore rupees worth of orders as far as BEL is concerned, and they're talking about how these could be fresh triggers there. On HAL, they have a buy rating, a target price of 5,500. HAL, they believe, is seen benefiting from the naval UAV program. They're talking about Astra Microwave as well, a buy rating and a target price of 1,715 here. They're talking about how the company is gaining from Akash Tarang and QRSAM opportunities as well. So those are some of the stocks that they're talking about, which could lead the growth from the fresh defense orders coming in from the government. Your sense, Gaurav, as far as the defense booster is concerned, and is this the right time to look at some of these stocks? There has been a mixed performance. HAL has underperformed over the last many months, whereas Astra Microwave has outperformed largely. So how should one be really going about picking and choosing the right set of stocks from the defense pack, looking at that the order inflow is strong?
Defense has been very volatile, no doubt about it. In the past 2-3 years, it went up sharply, then it is into a consolidation phase, just like railway, what we have seen. In the recent 1.5 years, the entire world has seen the higher requirement for having a robust defense system, air defense system, high altitude surveillance, border monitoring, unmanned monitoring is the areas that have actually gained the requirement. Therefore, we have shortlisted 3 companies where we are putting in our money and regularly suggesting our clients, namely Bharat Electronic Limited's, HAL, and Mazagon Dock. These are the 3 areas that we are specifically concentrating as far as the defense sector is concerned.
All right, okay. Thanks a lot, Gaurav, for being with us. Time out on the show, so we'll let you go right here. But do stay tuned on to Business Today viewers as the market coverage continues on the other side. We'll wrap it up on that note, but 24,400, the market is going strong, at least starting off this fresh week on a high. Let's see how things really pan out. Whether we are going to be in the better side of the 24,000 range is something that we are going to be looking at now. Stay tuned with us on Business Today.
Delhi wants to go electric. Backed by subsidies, tax exemptions, and a promise of over 30,000 charging points. The state government's new EV policy aims to make electric vehicles the preferred choice of citizens. The goal is simple: make owning an electric vehicle easier and reduce pollution from transport. But in India today, ground reality check tells a very different story. Barely 50 meters from Parliament, at the EV charging station near Central Secretariat, 5 of the 6 points are out of service.
और कितने घंटे लगते हैं आपको इसमें चार्ज करने के लिए?
1.5 घंटा चार्ज में लगता है, फिर वेटिंग टाइम लगता है, जैसे यहाँ बैठे रहते हैं वेट करते हैं 2.5-3 घंटा हो जाता है। अभी 2 घंटे बाद यहाँ पे 10 गाड़ियाँ इकट्ठी हो जाएंगी
और उन सबका वेटिंग लग जाएगा।
चार्जरों का कोई मेंटेनेंस नहीं देखता, सब ऐसे ही चार्जर खराब है। आधी दिल्ली में चार्जर खराब ही है।
The problem isn't limited to one location. At Talkatora Stadium, 3 out of 4 of the charging stations were found non-functional.
The display is non-functional, which simply means it is non-functional, out of operation, and person who is responsible at around 12 in the noon is not here. Again, there is another one. This is for the four-wheelers. For electric charging system, you require certain setup, and this is open electric gearbox, which is very hazardous. And whether it is working, well, I see this is one, but the cable, that's the cable for the electric charging, which is disconnected, which simply means this machine, the electric charging, EV charging setup, is out of function. It is not working.
At the Rajghat bus depot, just half a kilometer from the Delhi Secretariat, every charger at the station was found non-functional. EV users say the chargers were installed nearly 4 years ago, but have remained out of service for almost a year.
4-4.5 साल हो गए सर लगे हुए, और हम बड़े परेशान हैं। यहाँ पे कोई सिक्योरिटी गार्ड नहीं है, कोई कुछ नहीं। यहाँ से कनेक्टर और जो घन है वो काट ले जाते हैं, वायर काट ले जाते हैं, और कुछ नहीं सर। हम परेशान है। ये स्लो चार्जर है, ये भी कह के कई बार लगवाया सर, ये भी ऐसा है, कभी चलता है कभी नहीं चलता सर।
The story repeats at Kashmiri Gate, where 2 of the 3 chargers were found non-functional.
ये ईवी चार्जिंग स्टेशन पार्किंग में इसलिए लगाए गए थे कि जो लोग पार्किंग करने के लिए आए उनको चार्जिंग की सुविधा मिले, लेकिन इस इंफ्रास्ट्रक्चर की अगर बात करें तो 3 चार्जिंग स्टेशंस में से सिर्फ एक ही चार्जिंग स्टेशन जो है वो काम करता हुआ आपको यहाँ पर नजर आएगा। बाकी जो 2 चार्जिंग स्टेशन है वो पूरी तरीके से खराब स्थिति में आपको नजर आएंगे।
Delhi's Transport Minister responds to India Today's findings.
अब हम जो ईवी पॉलिसी लाए हैं, हम इंश्योर करते हैं आपके माध्यम से कि इंफ्रास्ट्रक्चर की कोई दिक्कत नहीं होगी। हम जो नए लगाएंगे ईवी चार्जिंग वो बकायदा इंश्योर करेंगे कि वो खराब ना हो। खराब होंगे तो उन पे पेनल्टी लगेगी, हर बार मेंटेनेंस होगा।
Experts say charging is the backbone of the EV revolution. Big promises need working infrastructure. Before building thousands of new chargers, Delhi must first fix the ones it already has. With Ashutosh Mishra and Sushant Mehra, Bureau Report, India Today.
Welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, the government has notified the new EPF scheme 2026, bringing a significant change for salaried employees. Under the revised rules, employee provident fund contribution above 1,800 rupees has now been made voluntary, giving many workers greater flexibility over how much do they want to contribute towards retirement planning. But what does it truly mean for your take-home salaries? Also, long-term retirement coffers, tax planning, and overall financial security. Should you be reducing your overall provident fund contribution or continue investing more for retirement voluntarily? That's something that we'll try to decode as to what these changes really mean for both employees, employers. And joining us today are 2 special experts on the panel. We have Mr. Pankaj Matpal and Ketan Das joining in to decode for us how do we really understand these new changes. Warm welcome and good morning to both of you. Thank you so much for taking the time out. Pankaj ji, I'll first start off by understanding from you what exactly has changed under the new EPFO rules, if you could simplify for our viewers.
Okay. See, if you see this EPF Act 2026 has replaced that old EPF and Miscellaneous Provision Act 1952. But if you see the changes as far as contribution is concerned or as far as other things are concerned, there is no much change. The changes are more of the withdrawal or compliance, legal. These things have changed, and if you combine this with the changes which we saw in October 2025, then you will feel that how you can restructure a salary that will benefit you or other things. But if you just see that what changes have now been notified and compared to others, so your take home salary, your contribution, your tax provisions, everything is almost same.
Okay, so not much change there. Ketan, let me come to you. When it comes to the EPF contribution, how was it calculated earlier and what changes for employees right now, if you could simplify that?
So right now, since the Gazette notification came in, there's a lot of news about the 1800 contribution being the mandatory cap now, and people can't contribute more than that, and it's all voluntary. But let me tell you that these provisions were back in 2014 were also the same. Its rule says that you as an employee will contribute if your salary is above 15,000. Earlier, the wage ceiling was 15,000 per month. It was hard coded in the text, but now if you look at the new gazetted notification, they've replaced the hard coded 15,000 word with wage ceiling notified by the central government. Now they have made it flexible for them so that in the future when they raise the wage ceiling, it becomes automatically applicable. So considering the wage ceiling as 15,000, the 12% contribution comes out to be 1800 per month. Now the rule says that the employee and the employer have to contribute as per this wage ceiling. If you want to contribute more into this, the employer and the employee has to explicitly submit in writing that you want to contribute higher. So the rules existed earlier as well, but right now also it's the same. It's just that the implementation of it, the mandatory written submission part of it was never implemented. So if your employer decided to contribute as per your actual basic instead of the statutory limit, then there was no written submission being enforced by EPFO. But with the new gazetted notification, if the enforcement starts now, then employees would have an option to contribute as per 1800. Well, right now it is very important for each and every employee to understand that it's well within your rights to contribute as per the 1800 ceiling and not contribute more than that. Sometimes there's a resistance from the HR team, so they can use this gazetted notification as a official document and go ahead and talk to their HRs and renegotiate their CTC so that they can structure a higher in-hand salary.
Okay, so help us understand that. In your experience, what are most employers likely to do in this case? Like you're pointing out that there is a written requirement now to save that hassle. Will most of the HRs and employers try to retain that 1800 rupee contribution and not encourage any bigger contribution or voluntary contribution? Will that happen now?
See, the bigger challenge right now is for employees who are already contributing as per the higher ceiling, right? So do they continue the same? Because as per the rules, it's all right. If you're contributing more as per your actual basic, all you have to take care is the contribution, additional contribution that you are submitting to PF has to go into EPF, not into the EPS, employee pension scheme. You can't be contributing if your salary is above wage ceiling. So, see, one bonus point is that earlier, when employees switched, let's say you were contributing as per your actual basic salary, but now suddenly you switch to the statutory limit of 15,000, your withdrawals were getting questioned. You could face a rejection stating that suddenly your contributions have dipped. Can you please clarify? So you had to go ahead and collect a clarification letter from the employers and submit it to PF office for accessing your funds. But in my opinion, with the new gazetted notification, that should not be a problem anymore. If you choose to renegotiate and start from a new financial year, suddenly you decide that I don't want to contribute more than 1800, then with the new rules, it should just be fine. And the key focus that people should be doing is on the withdrawals, like Pankaj also mentioned, it's the withdrawals that have changed, not the scheme per se, the contribution, the membership, all those rules remain largely the same.
Okay, let's first stick to this itself. Pankaj, I want to take your opinion as well. What does this ceiling of 1800 rupees contribution mandatory mean? And beyond this, does it mean that employers who are earning higher salaries can now choose to contribute less to EPF? And what will this do? Will this increase their take-home salaries? And what does it mean then?
Sakshi, see, as I said earlier also, it is more of the legal thing and compliance than the actual changes. If you see the definition of wages is 15,000, earlier also the ceiling was on 15,000. So if you take 12% of 15,000, it comes to 1,800. So it is same. Only thing is that now you have to give in writing, because between the employer and employee, earlier also if you see it was a voluntary thing. The minimum condition for contribution or to become a member of the EPF was same. If your salary is more than 15,000 rupees, in that case employer and employee have to mutually agree to that, and then only employee can offer for a deduction. So now because they have made it mandatory that you have to get in writing. So one thing, if your salary is more than 15,000 and you are joining an employment now, it is not mandatory for you. If you are already a member of EPFO, already contributing, you are changing your employment, or even in the same employment you want to continue, in that case the ceiling will apply. Now the question is whether you want to increase it. Yes, definitely. As I said, one thing that based on your basic plus DA plus your retaining allowances, whatever the total comes, 12% of that you can contribute. Beyond that, if you want to contribute, you can go for VPF, voluntary contribution. And for voluntary prudent fund, there is no limit. 100% of your basic plus DA, up to that you can contribute in that. So if employee wants to increase his retirement corpus, they are more banking on that investment, of course they can decide it. But otherwise the mandatory contribution, that as Ketan also mentioned, as I said, it is 12% of your wages, and this comes to 1,800 per month.
Absolutely. Ketan, give us an understanding of what happens on the tax front as well. In case your take-home salary increases because of this lower ceiling, what happens to the taxable component in your salary? Will you have to pay higher taxes? And also what happens to your overall long-term savings, because the contribution there is also reducing. So what happens on both these accounts?
Correct. So if you look at, the taxation standpoint, the employee contribution that is getting deducted from your salary, in the new regime, it is already getting taxed. In the old regime, you could claim it under ATC contribution, like ATC deductions, you could get a deduction from that. The employer portion, it was never a part of your in-hand salary, so it was never taxed. So now, and let's say you are contributing as per your actual basic, so a higher portion from the employer share was getting deposited into provident fund. You were compounding it over a 5-year period, and that's how you are getting some tax saving or tax benefit from the employer contribution. But now if you decide to reduce the contribution, so the employer contribution will also get capped to 1,800, as a result of which this will be added to your in-hand salary. But now every additional money that you're taking, for example, let's say your basic salary was 1 lakh, then you were supposed to contribute 12,000 into the employee share, and the 12,000 was part of the employer share. But now if you limit it, then only 1,800 from employee and 1,800 from the employer will be added. The remaining portion of it will be added to your in-hand salary. The entire part of it will become taxable as per your tax slabs. So if you're in the highest tax slab, then in a way you'll be paying 30% on that amount. So that's the first tax cut that you're going to pay. If you decide to go for a minimum contribution, in that case your tax will, in hand whatever you're getting, the tax will increase. And like you rightly mentioned, the contribution is also getting decreased, as a result of which the long-term benefit and the compounding will also go down.
So in that case, Ketan, who would you advise to stick to a lower contribution, and who should continue to voluntarily contribute more? In your opinion, how would you advise the viewers watching you right now? What should they be doing ideally?
See, if your contributions are less than 2.5 lakhs, as an employee, if you're contributing less than 2.5 lakhs in a year, then whatever interest you are getting is completely tax-free. If you're someone who's getting, contributing on a very high salary, you're contributing more than 2.5 lakhs in a year, then in that case, whatever interest also you're getting from EPFO will get taxed. So if you're in this range, above 2.5 lakhs, you can then decide to limit your contributions, take that extra in hand, and then reinvest. Because people in the category range where they're contributing more than 2.5 lakhs, I'm sure they have the wealth managers and who can advise them, of how to reinvest that funds. But for someone who is below that 2.5 lakhs limit, you don't have to worry because EPF is a government backed, it's a social security product. You're getting 8.25% interest. It's a great triple E product, and the interest is tax free. The withdrawals are tax free. The contributions also get some taxation benefit. So in a way, in the long term, this is a great thing. And one thing that is, EPF is a mandatory product, as a result of which it brings in discipline from the start itself. So, a lot of us Indians, we know that SIP rates, how many people, continue SIP beyond 5 years, right? So the discipline is missing. So if you're someone who lacks discipline, EPF is a great product. You don't have to touch it. You're below the 2.5 lakhs limit. Enjoy the tax-free interest and enjoy the long-term compounding. Optimize only for taxes in that case.
Okay, so Pankaj ji, I want to also understand from you, do you think this new rule can also encourage greater participation in other investment avenues like mutual funds or direct equity or other asset classes as well, since now people might have this chance of increasing their take-home pay, so more flexibility of how to use their money and rely on their own decision making?
Exactly, Sakshi. See, if you talk about the asset allocation, we always believe that different asset classes should be in the portfolio. So within that debt component, this EPF contribution makes sense because two things. As first thing, that tax benefit on the contribution, though that is only applicable if you are filing your ITR in old tax regime, and that also the section 123 now, which has replaced that older section of 80C. Under Income Tax Act 2025, now it's section 123, but that is applicable only if you are filing your ITR in the old tax regime. So that may not be applicable for many taxpayers. And second thing, the limit of 1,50,000 is not that great because investors or the taxpayers, they contribute in many other investment schemes as well. But yes, the benefit is the interest. So if your contribution, total contribution, employer plus employee, is 5 lakh, 2,50,000 from the employee contribution plus the employer contribution, and because employer will contribute only that 1,800 rupees per month, so the scope for the contribution of employee will be higher. So that is a great thing. So within that debt component, you should consider your VPF or EPF contribution. But yes, as I mentioned earlier, there is the importance of asset allocation, and for other thing, because if you want to achieve your long-term financial goals where you expect or you aim to beat inflation, your contribution in other asset classes should be there, especially equity. And one more thing here, because when you contribute in this EPFO, when it was mandatory to contribute more, then the means your take home was lesser. Now you have opportunity, so flexibility is more in your hand, and one should utilize that.
Okay, Ketan, like Pankaj was mentioning earlier, some withdrawal rules have also changed. So looking at that also, what do you think investors have to keep in mind?
See, I'll tell you about the new withdrawal rules that have gone in place. Earlier, there were 13 complicated different categories with each having its own eligibility criteria, the amount that you can access through that. Now they've all been merged into 3 different categories: the essential category, the housing related category, and special circumstances. And across the board now, the eligibility has been reduced to 12 months. So earlier for housing related needs or for marriage or education, you had to wait 5 years or 7 years. Now it has been standardized to just 12 months. So once after a year, you can start withdrawing your funds. And they've also standardized how much you can withdraw. So now you can withdraw 100% of eligible balance, but there's a caveat here because 25% of everything that you put into EPFO will be kept aside for your long term, and 75% would be made accessible for withdrawals. So in a way, let's say you're contributing 100 rupees to PF, then 75 is always accessible to you. The 25 is saved for your long-term retirement. It's a lock-in with that period, right? So with these new partial withdrawals, at any point in time, just expect that you can access the 75%. This is what has been promised by the EPFO under the new rules. So this solves for liquidity. Earlier, there was issues with how much you can withdraw. Most of it was through the employee share. What you have contributed, you were able to take that out. The employer share was limited. The access to that employer share was very limited. But now with this new withdrawal rule, 75% of the overall balance would be withdrawable.
Okay. Pankaj ji, if I have to understand, you've seen, from many years how things have changed, the investment scenario has changed, the opportunities have changed, more and more asset classes having introduced, and how the investment patterns have also changed. At this current stage, after this overhaul, after many decades that has taken place, what is the one thumb rule that you would advise all our viewers there when they deal with their investments, especially with retirement planning products like EPF?
See, EPF, because of mandatory contribution, and we have seen that most of the time, because of emotional biases, investors take incorrect decisions, or do not save much for their future financial goals. But here, because of mandatory contribution, not only this, Sakshi, when the ATC benefit under the old tax they were getting, so there was a more contribution. Now we see that because that is not giving much benefit, so investors are not saving only. So most of the time we see when this is become mandatory to save money, they have more money available with them for financial goals. So if you are disciplined investor, I'll say that you decide your financial goals based on that asset classes, and within that, when you think about investing in debt component, this EPFO contribution makes sense, because for last 3 years, we have 3 financial years, we have seen that rate of interest has been capped at 8.25%, which is much higher compared to other debt instruments, and that is also mostly tax free. So definitely within that condition you should consider. But if you have limited money available for investment, I will not suggest that you invest more in VPF and you skip other asset classes. Definitely in your portfolio, equity, debt or commodities like gold, silver must be there. So that is why if you have sufficient money to save, then a good part should be contributed in EPF. Otherwise, if you have limited money, does not mean that you ignore other asset classes and choose to invest through VPF.
All right. Okay. Well, time's up, but we could have gone on with this discussion. But many thanks, Ketan, and thank you so much, Pankaj ji, as well, for explaining to all our viewers how to really view these changes. What are the things one has to keep in mind when one takes a decision for their own investment portfolios as well. This truly helps clarify a lot of things. Thank you so much and appreciate your time with us on Business Today yet again, Ketan and Pankaj. We'll wrap it up on that note, viewers, on this special edition. But in case you're still confused about the EPF rules and you still need some clarity, then do write in to us with all your questions, and we'll be happy to get all these experts back to help you understand everything that you need to know about your own EPF and retirement planning. Stay tuned with us on Business Today. Much more coming up ahead.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us. Thank you. Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out, and we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through the CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for two ways. One, providing a solution to the municipal solid waste, and two, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders, BPCL, so on and so forth as well.
Look, Numaligarh refinery currently is, we are taking it from 3 million ton to 9 million ton. The expansion is on track. The crude in happened on 31st December 2025. The mother units are currently under commissioning, the CDU and VDU. And our idea is that we are already prepared ourselves with the local domestic crude as part of our commissioning process. Our idea is that early 2027, we will have the complete 9 million metric ton commissioned. As far as our 9 million ton capacity is concerned, we foresee that we will be able to source about 3.5 million metric ton from domestic crude, that is Assam Fields of Oil India Limited and ONGC, and we will import about 5.5 to 6 million metric ton, for which we are got a collaborative framework with BPCL for our crude oil sourcing, and we are building a pipeline which is about 1635 to 1640 kilometers from Paradip coast to Numaligarh, where we will be utilizing the offshore oil terminals of IOCL to source the crude oil. We will have an interim tank farm at Paradip, and then the pipeline will be used to pump the crude oil from Paradip to Numaligarh. That we intend to commission by October, November this year.
So one final question. The government is, after the West Asia crisis, has become very keen on improving our energy security, the country's energy security, and there are talks of increasing our reserves as well. Any role that Oil India is playing in order to expand our SPR to over 9 to 10 days going forward?
Look, to our understanding, it is not just SPR. It is actually inventorying carrying capacity of the country with respect to crude oil and product. As far as Numaligarh is concerned, I will talk about, that's the downstream part of Oil India Limited. We are increasing our marketing terminal, both as part of our refinery expansion capacity at Guwahati, at Dhuburi, and at a place near Silchar called Panchgram. Plus, we are also increasing our LPG storage capacity at our refinery level. Third, as part of our expansion, we are also creating additional OLES requirement in terms of our crude oil holding capacity. As far as Oil India is concerned, we are having a two-pronged strategy. One, we are enhancing our little LPG production out of our natural gas that we are producing. We are also enhancing our crude oil tank farm storage capacity as part of our energy resilient infrastructure. we are also creating a railway siding for possible transportation of additional crude from Duliajan to Numaligarh. As part of that, we are also creating additional tank farm. But most importantly, as part of energy security, as an ENP company, we strongly believe that exploration has to be the mainstay as an energy security solution.
So what will that take your crude oil storage and LPG storage to from what levels to?
As far as refinery and Oil India is concerned, those will be incremental. But I would like to.
There's no specific target.
There is no specific target. Those are all our design assumptions.
Because the word is that maybe India will increase 40 plus days of reserves going forward.
Currently, as part of our refinery operations and the SPRs, today we have about 78 days. So, as the refinery capacity will grow from 3 million ton to 9 million ton, so it's very natural that we need to create additional facilities in the similar proportionate. But I would draw your attention to something more interesting, that additional capacity to hold inventory is one part. As Oil India Limited being an upstream company, we will be focusing more on production and we will be focusing more on exploration, which is what is our mainstay. So you know that currently we are doing exploration in Andaman Nicobar, we are doing exploration in Kerala Konkan Basin, and we are also drilling an appraisal well in KG Basin. We are going to quickly start exploration activities in our Cambe acreage, which we took in OLP 9 bid round. We have already completed 2D and 3D seismic data acquisition in our OLP 9 block in Mahanadi Deepwater and KG Deepwater. So we are actually aligning ourselves the forthcoming Sagar Manthan initiative or Sagar Manthan mission of Government of India, where we will actually undertake 4+4 to start with, deep and ultra deep water wells in our acreages.
Good morning, ladies and gentlemen. A warm welcome on our special series of Market Masters, a space where the finest brains on Dalal Street get together to discuss the way forward and how to navigate the next 6 to 24 months. Joining us on the show is none other than Miss Devina Mehra. She's the founder and CMD of First Global, runs a very well-known PMS business, and is a past master at volatility, at picking the stocks at the right time and riding them to their fresh highs. Namaste Devina ji, a very warm welcome. As always, it's such a pleasure to host you. While domestic markets seem to be perking up as far as prices are concerned in the mid, small and large caps, it's this incessant, how should I say, drumbeat to invest overseas at a time when the domestic markets really haven't done much over the last 18 months. How are you watching this as a sentiment indicator for the contrary?
Namaste, Shell. Thanks for having me. And you mentioned that I run a PMS. Actually, what I have run for longer has been global portfolios and global funds. So that's a lot longer than I've run the India PMS. And we've been global since 1999. So we were not just the first Indian, we were the first Asian members of the London Stock Exchange, as Japan, and the next year of the US broker dealer, which is NASD. And we've been covering all those stocks since then. आपने बोला वो 18 months वाली बात, so you know, so I have not been advocating going global for the last few months. I have been advocating it for many years, because you know, A, you should not put all your eggs in one basket. B, India is less than 3% of the world or global market cap, so there's no reason why 90 or 95% of your or 100% of your investment should be here. And one number which I always give, that when I started working, the dollar was 12 rupees. So in the course of a career, it has depreciated, rupee has depreciated 90%. So when you're talking of financial goals, which are 10, 20, 30 years hence, you cannot forget the globe. However, right now I see a lot of people kind of hawking global investing and global products, especially gift city schemes, simply because they are not getting assets in India, because India hasn't done well. So they think they can gather assets there. And I am frankly very scared of this, because a lot of people who are doing this have no idea what they are doing. They do not have any an understanding of global markets or global stocks, and those are very complex companies. So it's very, very seat of the pants kind of thing. Or wo jo Hindi mein kahawat hai na, neem hakim khatre jaan. So that is what I see in action in all the gift city schemes. If you see, most of them for the last 6 months are down. Even though the global equity markets are up, for the last 12 months also, almost none is even close to the benchmarks. So this is the result of not really understanding what you're doing. I mean, you can't not. Some of those fund managers themselves had never invested in global markets 2 years ago, and now suddenly they are coming on podcasts and saying, I'm an expert. For example, semiconductor stocks, if you take, I mean, people thought first, let's buy the AI stocks, which is the 7 big US tech companies, the Nvidia, Meta, Google, Amazon, Apple, etc., Microsoft, Tesla. And they did not realize that story had started unraveling in 2025 itself, because 5 of those 7 stocks underperformed the S&P in 2025. 2023 and 24, they drove the S&P. But that they didn't understand. People who were investing so-called all these in these managing these global schemes. Then they thought, oh, easy thing is to go for semiconductors. Now, semiconductor, again, these are everything from Intel to AMD and Micron and Samsung, TSMC, Qualcomm, all these companies we have covered for the last over 25 years, from the early 2000s. And we know exactly how volatile these are, how cyclical this sector is. So people think, oh, semiconductor is growing very well. By growth बहुत अच्छा है, but they don't understand that these companies can equally go the other way, and that's been the long-term history. So that's what scares me. So yes, you should invest globally, but you should go with somebody who knows what they're doing. For example, right now, I don't know how many people know that the US mid and small cap index, Russell 2000, has done almost 2.5 times what the S&P has done this year. Or, totally old economy, Dow Jones Transportation Index has done better than the S&P. So, now the story is still that AI and semiconductors are the only game in town, but that's not what the actual numbers are. So, be very careful when you go global, but yes, you must go global.
Ma'am, I think the best way to look at such marketing stunts is label them as a contrary indicator. These are blooms that come at the wrong time of the market, at inflection points, and for seasoned investors such as you, they are milestones on where not to put money, and look at those sectors with a jaundiced eye. People live and learn. These kind of things will happen for the next 500 years or so. But thank you for raising this alarm bell. And actually it's an alarm bell क्योंकि मेहनत का पैसा जाता है. We are chasing fads instead of earnings, and we are chasing price instead of value. It ends very badly, as both of us and many of our peers have seen it over the last 3.5 decades. Now tell us, ma'am, what is your allocation in terms of equity, within equity, Indian equity and overseas? Are you by any chance enthused with the developments that have happened in Indian markets over the last 2-3 months or so?
Okay, so before coming to the allocation, let me just talk about the Indian market. So if you look at the major 42 country indexes in the world, this year India has been in the bottom 3-4. And normally we have seen that very often Some of the countries which are in the bottom five, 2 or 3 of them next year are in the top five. So to that extent, the underperformance is actually you can say a positive indicator. The other thing which I've been talking about last few months has been that suddenly, for the very first time, all my fellow fund managers who only used to talk about the quote unquote India growth story are now for once enumerating the risks. So that, and sentiment is a contra-indicator. I think I would have said it on your show also at some point that this is what research studies around the world show. This is not my opinion. This is that when sentiment is overbuoyant is when you should be cautious, because usually the next period returns are below normal, which was, the case if you see the first 10 months of 2024. And when sentiment is at a down, the next period returns in terms of probability are likely to be above normal. And I just collated this data and wrote about it in my Mint column, looking at mutual fund inflows from 2004 to today and mapping it onto the peaks and troughs of the market. And it is so clear that the mutual fund inflows peak after the market peaks and they bottom out after the market bottoms out. So they always lag the market. So if you look at that also, now you see the mutual fund inflows had really tapered off. I didn't see the June number, but the previous 2 months, the number of SIP accounts opening was a net negative, meaning more accounts were getting closed than getting opened. So all these are contra-indicators that show that. And March itself, I had said that our indicators are showing that the market is around the bottom range. I don't know whether it will start moving in 3 weeks or 3 months, but the downside was limited. So which is what we are seeing now. In terms of the market itself, you look at this quite closely. So I'm sure you know this, that in 2025, while the indexes in India were up, the median stock was down. And for a large part of 2025, the market was extremely narrow. Around September, I think it was like only 10 to 12% of the stocks were outperforming as against an average of 30-40%. So now the market is much broader. But right now, if you see, it is the large caps which are dragging down. Now, we were looking at the 15 heavyweights in the Nifty 50, which have about, I think, 63-64% weight. And 9 out of the 15 last I saw were negative for 2026. So, I mean, we all know of IT, but even things like, Mahindra and Mahindra or Bharti or HDFC Bank. So there were a whole lot of heavyweights which are still underwater for 2026. And, the average stock now, unlike last year, is doing better than that.
Yeah. So while this is all data which is in front of us,
I didn't answer your question on the allocation. So,
our job is to... Please continue.
Allocation question, yeah. So, see, as I said that India is only a microscopic part of the world. So, I normally anyway have 80% global, 20% in India, which because of price action last year, because last year my India multi-asset portfolio did 7%, the global portfolio in rupee terms did 42%, so average was something like 37%. So now I have an even greater allocation globally. So in our global funds, we have right now about, I think, 72% equity. We are underweight US and about half of the rest, half and half are fixed income and commodities. I mean, commodity, even if we take through equity, we treat it as a commodity exposure. So that would be broadly the breakup there. But as I said, I am heavily overweight. Always, the majority is global.
Okay, fair point. So, where within India do your statistical models prefer to put in money over the next for the next 18 months to 2 years?
We don't take a call for 2 years. We actually relook at it every quarter. So this quarter's runs are still going on. We haven't yet started the rebalance for the July beginning quarter because otherwise you get wedded to your stories and you don't change your portfolio even when the facts change. I mean, I'll give you an example. Like Tata Elxsi was a great performer for us for 2-3 years, but we didn't think, that this is like a forever stock, because nothing is a forever stock. So as of, in fact, when we've held something for a while, we keep questioning that is the story over. So I mean, last 2.5 years, we have been overweight pharma, healthcare, and auto components, and then a little bit of auto also. And that broadly continues, at least till now, as I said, rebalance still to happen. The last quarter, in fact, some additional pharma names came up because pharma did well in 24, didn't do much in 25, and 26 again, it started doing well. So that we still continue. And then, of course, mostly it is bottom up because we have a fairly diversified portfolio. So we have capital goods, we have chemicals, and some FMCG also. Banks, we are not overweight, but it would be higher than the average we would have held for 5 years. So it's a little bit higher than the average. I am always a nervous investor in banks and lenders. Just somebody said, Madam, aapka ye takiya kalam hai. I said, yes, I mean, that's the nature of the beast. It's a risky business where negative surprises abound, as even in the last 2 years, at least 3 or 4 major banks have had negative surprises. So that is how it is. So last time, I think beginning of this year, we added some power equipment and power. So in terms of change, that was one sector which started coming up more than earlier. So that would be broadly it. I mean, this year, of course, real estate has done well, but that we find a little risky sector. We don't have exposure there.
Wonderful. While markets are best explained in hindsight, they have to be invested and traded forward. At this point of time, is there a fresh exposure that you are mulling into India's IT sector, purely statistically?
So we do have some exposure to the IT sector. We are not overweight, but we do have exposure because I thought the obituary of the sort of IT services was a bit premature, because I've seen that story play out so many times. Y2K time, it was that after Y2K, what will they do? Then it became that software as a service has come. This will take them out. Cloud, digitization, a lot of things were supposed to kind of be the end of IT. And even now, till now, if you see the results, it is not as if there's any disaster that has happened. Yes, they have to adapt, which they will adapt. I for 20 years, I have not liked the fact that they didn't move up the value chain, but within their defined product, they are able to pivot. And also remember, even if like AI becomes this transformational technology, no chief technology officer or CEO of a company is going to hand over the keys to AI, because that is simply too dangerous. So they will still need an intermediary in a sense. So my concern with IT is more on a macroeconomic front, that this was one sector that was the driver of employment for India for the last 25 years, both directly as well as indirectly. You hire one IT person, along with that is food delivery, real estate, driver, nanny, all those things. So that is it's more of a macro concern. I don't have that much of a concern that the IT services companies will be able to pivot their business model. And really the valuations are quite attractive now.
Okay. Within your India portfolio, which has been an outperforming stock in the last 3 months, and do you intend to keep it?
I don't like to talk about individual stocks. I told you the broad strokes of where we are. So, and we always, I mean, our India product is called India Super 50. So, we don't have a huge, we rarely, I mean, we don't start with anything more than 4% in a stock due to price actions, which might go up. So it is not like it is not like 1 or 2 stocks which really move the needle in terms of, because we are not we don't have like 12 stocks, which means that we are playing more skill than luck, because when you have 12 or 14 stocks, you are really playing luck.
Okay. At this point of time, would you be a little hopeful on the rupee?
In the short term, yes, because you have every time you open the kind of gates for NRIs, even though this time it is not as attractive as the previous NRI schemes. And, so see, I had been talking even before this recent, like a few weeks ago, the crash in the rupee that came, that our interest rate policy will put pressure on the currency. I mean, this has been my, last few quarters with the RBI policy that we are not talking about it explicitly. But the fact is that India's interest rate had become too close to the Western, let us say the US interest rates. Typically, our interest rates used to be about 5 to 7% higher than the US interest rates. And now the difference was only 2.5% points. So these, by this special FCNR scheme and all that, where you are taking the currency risk, you are essentially increasing this interest rate differential. But still, it is not, as I said, not as attractive because really the differential is still small. That's the whole point. So earlier it was that the way NRIs would think that if I borrow 2 or 3 times and put it all in FCNR, I have a very nice looking return. This time they have to borrow 8 or 9 times to get any reasonable, very attractive looking return. So but I mean, in the short term, every time NRIs do come through, and so in the short term, it eases the pressure on the rupee because effectively you are increasing that interest rate differential, which had gone down a lot. But your longer term concerns and the pressure on the rupee, I don't think has gone away. So this is short term relief, yes. So at least you're not going down the way it was happening. I mean, structurally, your FDI, the net FDI has been doing very poorly. So nothing really is changing on that. And so this is an artificial way kind of to keep the portfolio flows high for this particular period. But you need something which is more structural than that. And also remittances will be impacted hopefully, I mean, now if the war thing goes away, not so much, but India has the highest remittances in the whole world. And just the Gulf alone was a big chunk of that. So that's another thing which is kind of a question mark this year.
Okay. How about oil? Is that something which is now no longer in the matrix of deciding factors on the short side? Is that something that's sort of eased out for you?
Yeah, I mean, we were long oil before the war started. So I mean, that was not a call on the war. It's just looked that the crude was due for a rally. So in early February, we had gone long crude. So now it all depends on whether again some US-Iran thing starts or not. I mean, there have been so many rounds of this up and down in this whole whether the war is getting over, not getting over. So one fingers crossed that that it does get over. And then, of course, there's no direct pressure on crude immediately. So but let's see. I mean, there have been so many announcements and counter announcements in the last few months. And but of course, for the US politics, 2 things matter. One is the price of gas or price of petrol at the petrol pump, and the other is interest rates. So both, that I think puts kind of the cap on how much of adventurism you go in for, because the 10-year interest rates were touching 20-year highs, and unlike 20 years ago, the US has a lot more debt now. So I think that put the brake at times on the whole the warmongering. And the other, of course, as I said, is the price of petrol. So I think that will put a cap. So let's hope this gets sorted out.
In terms of the a narrow bull market that was there in Korea, as also Japan and Taiwan, do you think that's over?
So it's not over. See, I mean, yet. I mean, as I said, you have to understand that semiconductor and semiconductor equipment are highly volatile industries. Japan, we are still a little overweight. So I mean, and I'll tell you the reason they're cyclical, because one, they are themselves very capital intensive, and most capital intensive industries from hotels to cement to steel are cyclical because the supply comes in chunks. And the other thing is that people are talking about the great growth this year. Yes, I mean this year the demand is great and they have pricing power. I mean, आप एक तरह से कहें तो महंगा दाम मिल रहा है उनको. And that is because this investment into AI just by the top 3-4 companies this year is supposed to be, the estimates from $800 billion to $1 trillion. And so that's why this demand, not just for semiconductors, but even, companies have come out of woodwork like IBM and Dell and all that. So anybody supplying electronics, hardware, anything is doing very well. But these same 3-4 companies 2 years ago, their total capital expenditure used to be $150 billion. So this year, of course, they're doing this 800 to 1,000 billion. But the point is that when you are supplying capital equipment, you start from zero every year. So it is not like selling soap or toothpaste, where if you are selling 1,000 crores, next year you're not going to come down to 100 crores. It will be plus minus from that 1,000 crores. But when you're supplying capital equipment, and 2 years ago, those companies were investing, a fraction of what they're investing this year, who is to say that 2 years later, they will be still investing $1 trillion a year? And therefore, your market can actually shrink very dramatically. So that is the thing you have to understand. So you can't just, like, for example, I mean, I was laughing, somebody said the PEG ratio, the PE by growth rate of these semiconductor stocks is looking fabulous. So it doesn't matter that the PE is high. I said, you don't have a clue. I mean, is the growth sustainable? That is the whole point.
Ma'am, one must take such comments with, a room full of salt and move on and offer sympathies quietly to the customers whose money such folks will be handling. On that note, we'll call it time. As always, it's a pleasure hosting you, and we look forward to meet in person. Thank you.
Thank you. Thank you for having me.
As always. That, ladies and gentlemen, was Ms. Devina Mehra, founder at First Global, a very well-known PMS that's doing extremely well in the markets. Thank you for watching. We'll be back shortly.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever.
किस स्केल
But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the centre is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
With each passing day, the probe teams are unearthing new clues in the Ram Mandir Chanda Chori case. All accused have been grilled by the police again inside Ayodhya jail. Each accused questioned separately after court nod. Investigators have recovered key evidence and the accused are being confronted with the same. India Today Inside Scoop reveals that in a major breakthrough, Ayodhya police, with the help of the cyber cell, has successfully recovered deleted data from the phones of the accused. This data is said to be more than 1 year old. Chats recovered from this data reveal the theft of over 2 crore rupees from the donations. Adding to the drama, Anukalp in the chat had accused Love Kush of stealing his share of the loot. Now, the bank transactions of all the accused are under scanner.
After 13 hours of police custody remand of main accused Avinash Shukla, today is the turn of 5 other accused in donation theft to be grilled. Today, Ayodhya police is questioning 5 other accused, including Ramashankar Yadav alias. Chat data backup revealed a main thing that during 1 year, more than 2 crores of rupees was stolen.
Shri Ram Janmabhoomi Teerth Kshetra Trust is holding a crucial meeting on Monday with the agenda to decide on the resignation submitted by General Secretary Champat Roy and Trustee Anil Mishra. Opposition tirade continues to intensify with the claims that crores have been stolen from the donation money. Opposition has held the BJP, VHP and the RSS responsible for shattering the belief of Ram Bhakts. On the other hand, the VHP sought proof from opposition for its claim that hundreds of crores were looted. The saffron body urged police to question Congress and SP leaders over their sensational claims.
एक ने अनेकों बार कह चुके हैं कि ट्रस्ट को भंग कर दिया जाए और एसआईटी जांच से पहले इसको भंग करना चाहिए था और जो भी ट्रस्ट में लोग हैं उनको मंदिर से बाहर रख करके तब कोई जांच शुरू होती।
प्रोफेसर रामगोपाल यादव जी ने कहा कि 20,000 करोड़ से ज़्यादा का घपला है। हमारी तो जानकारी में इतने पैसे वहाँ आए ही नहीं। प्रियंका जी ने कहा है हजारों करोड़ का चढ़ावा आता है, हमारी जानकारी में नहीं है।
As the political mudslinging continues, investigators are inching closer to the truth. The big fish be in the net next? With Santosh Sharma, Bureau Report, India Today.
Mumbai is under siege. Relentless rain has brought India's financial capital to its knees. Flooded roads, stalled trains, flight disruptions, and now a trail of deaths. From Andheri to the Worli ceiling, the maximum city is drowning. Major arterial roads are completely locked up, and airlines like Indigo, Akasa and SpiceJet are issuing frantic travel advisories about flight delays. The IMD's red alert stays slapped on Mumbai until July 6th warning of torrential rains. From Andheri subway, which is closed sporadically, to Worli, King's Circle, Bandra, Vile Parle and Vasai, streets have turned into rivers, vehicles have been stranded, and daily life has come to a grinding halt.
Around Andheri, the water levels are rising. Now, it's been said that around 80% of this month's average rainfall has already completed in 4 months. That has been the heavy downpour, and hence it is advised that be careful while they are out.
But beyond the waterlogged roads lies a far deadlier story. An 18-year-old boy was killed after a tree branch snapped and struck him while he was riding through Are Colony in Goregaon East during heavy rain. He was rushed to a nearby hospital but succumbed to his injuries, adding to the growing list of rain-related deaths in the city. Hours earlier, a 63-year-old man in Kurla, Yunus, fell prey to monsoon fatality when a massive tree crushed his shop.
ये पेड़ के एक बीच की फांदी थी जो कि बहुत ही मजबूत फांदी थी और अंकल जी जो क्या नाम था उनका यूनिस भाई वो बाइक से आए और दुकान का सामान रखने के लिए सेटर वेटर वो बाइक से उतर ही रहे थे और फांदी डायरेक्ट उनके मुंह पे जाके गिरी और मुंह पे गिरने के वजह से वो डायरेक्ट नीचे जमीन पे गिर गए।
हमारे यहाँ के नगर सेवक आरोग्य समिति के अध्यक्ष उन्होंने 2 बार प्रशासन को पत्र भी दिया था कि ये डेंजर जोन में लग रहा है पेड़, लेकिन प्रशासन ने उसके ऊपर क्यों नहीं कार्रवाई की। ये इंक्वायरी का पार्ट है, इसके ऊपर हम लोग पूरी इंक्वायरी लगा रहे हैं। लेकिन फिलहाल हम उनकी फैमिली के साथ यहाँ पे खड़े हैं। मैं आपके माध्यम से कहना चाहती हूँ कि उनको 5 लाख का जो अर्थ सहाय है वो भी मैं यहाँ पे डिक्लेयर कर रही हूँ।
It comes just days after 11-year-old Vihan Srivastava was killed when an old, allegedly inspected and a healthy tree collapsed right onto his moving bus in Chembur. And the absolute breaking point, in Sakinaka, a 55-year-old man fell to his death into an open manhole which was being cleaned then. From deaths in tree collapse to dying in manhole, the price of administrative apathy is being paid in Mumbaikar blood. The red alert will eventually pass, but the scars of this preventable tragedy will remain. With Mustafa Sheikh in Mumbai, Bureau Report, India Today. As lakhs of mourners poured onto the streets of Tehran to pay their final respects to Iran's supreme leader Ayatollah Ali Khamenei, US President Donald Trump has reignited the war of words, this time with a blistering attack on Iran. Donald Trump has claimed that the United States could have eliminated Iran's entire leadership at Khamenei's funeral in one shot. But then he chose not to.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
Trump also said he had been working on the possible removal of sanctions before Tehran's response forced him to stop. Iran hit back sharply, accusing Trump of displaying neither civilization nor honor, and calling his remarks a violation of diplomatic norms. The exchange comes amid massive funeral processions in Iran. The outpouring of grief is being projected as a show of national unity and defiance, even as tensions between Washington and Tehran remain dangerously high after the recent conflict.
I came to support my country. Yes, I came from a long, long way to come to say we are all united and we are a people. We never leave our country, our civilization. It's not a civilization for forefathers and nobody can destroy it.
The killing of Iran's supreme leader has transformed Donald Trump into the face of America's military campaign in the eyes of Tehran. Iran holds Trump politically responsible for the strikes that eliminated its top leader. It has accused Washington of pursuing regime change through military force.
We knocked the hell out of Iran. They're dying to settle.
Donald Trump's latest remarks have only intensified the anger. For Tehran's leadership and masses supporting it, the message is clear. Khamenei may be gone after the massive bombing raids, but the confrontation with America and Israel is far from over. With Geeta Mohan in Tehran, Bureau Report, India Today.
While Iran is mourning loss of their former supreme leader Ali Khamenei, the United States of America is celebrating its 250th Independence Day. During a speech near the iconic Mount Rushmore, Trump took potshots at Tehran. In his trademark style, Trump claimed that the US knocked the hell out of Iran and they gave them a week off for the funeral.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
On February 28th, Ayatollah Ali Khamenei was killed in US-Israeli strikes, which triggered a full-blown war in the Gulf. The conflict went on for 108 days until Trump and Pezeshkian finally signed a memorandum of understanding on June 17. But fragile peace continues to prevail over West Asia. Currently, a ceasefire is in place and hostilities have been paused. Key global oil route Strait of Hormuz has been reopened and a direct line of communication has been established between the US and Iran. A 60-day negotiation window underway and technical talks having begun. In fact, both nations recently concluded a round of indirect technical talks in Doha. Qatari Emir Sheikh Tamim bin Hamad Al Thani met US Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Iran's Deputy Foreign Minister Kazem Garibabadi headed the country's technical team in the talks. According to reports, both sides have decided to establish a communication channel to resolve all disputes, and then even discussed release of $6 billion in frozen Iranian funds. Both the sides have now agreed to continue talks after conclusion of week-long funeral procession of Ayatollah Ali Khamenei. But as Trump's belligerence and Tehran's bluster frequently prove, it's a fragile peace which can any day deteriorate into a full-blown conflict once again, to potentially devastating consequences. Bureau Report, India Today.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us. Thank you. Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out, and we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through this CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for 2 ways. One, providing a solution to the municipal solid waste, and 2, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders, BPCL, so on and so forth as well.
Look, Numaligarh refinery currently is, we are taking it from 3 million ton to 9 million ton. The expansion is on track. The crude in happened on 31st December 2025. The mother units are currently under commissioning, the CDU and VDU. And our idea is that we are already prepared ourselves with the local domestic crude as part of our commissioning process. Our idea is that early 2027, we will have the complete 9 million metric ton commissioned. As far as our 9 million ton capacity is concerned, we foresee that we will be able to source about 3.5 million metric ton from domestic crude, that is Assam Fields of Oil India Limited and ONGC, and we will import about 5.5 to 6 million metric ton, for which we are got a collaborative framework with BPCL for our crude oil sourcing, and we are building a pipeline which is about 1635 to 1640 kilometers from Paradip coast to Numaligarh, where we will be utilizing the offshore oil terminals of IOCL to source the crude oil. We will have an interim tank farm at Paradip, and then the pipeline will be used to pump the crude oil from Paradip to Numaligarh. That we intend to commission by October, November this year.
So one final question. The government is, after the West Asia crisis, has become very keen on improving our energy security, the country's energy security, and there are talks of increasing our reserves as well. Any role that Oil India is playing in order to expand our SPR to over 9 to 10 days going forward?
Look, to our understanding, it is not just SPR. It is actually inventorying carrying capacity of the country with respect to crude oil and product. As far as Numaligarh is concerned, I will talk about, that's the downstream part of Oil India Limited. We are increasing our marketing terminal, both as part of our refinery expansion capacity at Guwahati, at Dhuburi, and at a place near Silchar called Panchgram. Plus, we are also increasing our LPG storage capacity at our refinery level. Third, as part of our expansion, we are also creating additional OLES requirement in terms of our crude oil holding capacity. As far as Oil India is concerned, we are having a two-pronged strategy. One, we are enhancing our little LPG production out of our natural gas that we are producing. We are also enhancing our crude oil tank farm storage capacity as part of our energy resilient infrastructure. We are also creating a railway siding for possible transportation of additional crude from Duliajan to Numaligarh. As part of that, we are also creating additional tank farm. But most importantly, as part of energy security, as an E&P company, we strongly believe that exploration has to be the mainstay as an energy security solution. So
what will that take your crude oil storage and LPG storage to, from what levels to?
As far as refinery and Oil India is concerned, those will be incremental. But I would like to...
There's no specific target.
There is no specific target. Those are all our design assumptions.
Because the word is that maybe India will increase 40 plus days of reserves going forward.
Currently, as part of our refinery operations and the SPRs, today we have about 78 days. So as the refinery capacity will grow from 3 million ton to 9 million ton, so it's very natural that we need to create additional facilities in the similar proportionate. But I would draw your attention to something more interesting, that additional capacity to hold inventory is one part. As Oil India Limited being an upstream company, we will be focusing more on production and we will be focusing more on exploration, which is what is our mainstay. So you know that currently we are doing exploration in Andaman Nicobar, we are doing exploration in Kerala Konkan Basin, and we are also drilling an appraisal well in KG Basin. We are going to quickly start exploration activities in our Cambe acreage, which we took in OLP 9 bid round. We have already completed 2D and 3D seismic data acquisition in our OLP 9 block in Mahanadi Deepwater and KG Deepwater. So we are actually aligning ourselves the forthcoming Sagar Manthan initiative or Sagar Manthan mission of Government of India where we will actually undertake 4+4 to start with, deep and ultra deep water wells in our acreages, which is Mahanadi and KG basin. Plus, we intend to drill about 100 wells, which will be a mix of rank exploration, near field exploration, appraisal and development wells in our primarily PEL and PML areas. Thank you.
Thank you so much for speaking to us.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the centre is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
each passing day, the probe teams are unearthing new clues in the Ram Mandir Chanda Chori case. All accused have been grilled by the police again inside Ayodhya jail. Each accused questioned separately after court nod. Investigators have recovered key evidence and the accused are being confronted with the same. India Today inside scoop reveals that in a major breakthrough, Ayodhya police with the help of the cyber cell has successfully recovered deleted data from the phones of the accused. This data is said to be more than 1 year old. Chats recovered from this data reveal the theft of over 2 crore rupees from the donations. Adding to the drama, Anukalp in the chat had accused Love Kush of stealing his share of the loot. Now, the bank transactions of all the accused are under scanner.
After 13 hours of police custody remand of main accused Avinash Shukla, today is the turn of 5 other accused in donation theft to be grilled. Today, Ayodhya police is questioning 5 other accused, including Ramashankar Yadav alias chat data backup revealed a main thing that during 1 year, more than 2 crores of rupees was stolen.
Shri Ram Janmabhoomi Tirth Kshetra Trust is holding a crucial meeting on Monday with the agenda to
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is on your screens. This is where we can answer all your questions that you send us along with your name, location and your contact details. Remember, in case you're watching us live on our YouTube channel, you can then join us on our Daily Calls live. Use the comment section there to send us your queries as well. We'll be happy to address that over the next 50 minutes. First up, let's look at how the markets are doing. 154 points higher, 24,425 on the Nifty. You're looking at gains across real estate sector, autos, oil and gas, metals, commodities are doing well today. Even the banking names are higher, but you can see slight pullback on the IT names today, 0.8% of a fall, and PSU banks are also dragging a tad bit in the session as well. Let's also look at the top movers as far as the markets are concerned. On the markets, you have clear move that we can see from the banking names today. Look at HDFC Bank, it's 3.3% higher. M&M, Bajaj Auto from the Auto Pack are up. From the metals, you have Hindalco that's higher. Even IndusInd Bank that's up. BL is also rising from the defense pack. Reliance Industries is supporting the move as well from the heavyweight pocket, 1.2% higher. You're looking at oil and gas names like ONG is also in the bust today. But on the flip side, Kotak Mahindra Bank is in fact contradictorily lower by 3%. You can see even IT names like TCS Wipro dragging in the session as well. That's where the market momentum is losing out. You can also see Infosys dragging by 1% and Bajaj Finserv, Dr. Reddy's are some of the other names that are still lower in the session right now. Let's welcome our guest on the show then. We have Osho Krishnan joining in. He's a senior research analyst for technicals and derivatives from Angel One. Long time, Osho. How are you? And give us an understanding of how are you looking at the markets, finally picking up more momentum. We are seeing 24,400 back on the screen. Remember this level in the last couple of months, we've reached this level and again retraced. The key question then begins that this time around, do you see more strength in the markets to build on further from these levels?
Very good afternoon, Sakshi. Firstly, thank you for having me at the show. Well, I'm good, and I hope that even you are also doing great.
Absolutely fine, yeah.
So overall, the market sentiments have turned quite bullish. There has been a strong consolidation breakout. Technically, also there has been positive crossovers
Yeah.
between 20 and 50 exponential moving average. So undertone now has turned bullish after many period of time,
Yeah.
after many months of time, we have seen such kind of positive developments in Nifty. So overall, the market sentiments are now looking very positive. On the higher end, now the next potential target for Nifty is placed around the zone of 24,560, followed by 24,750 kind of levels. But now the derivative data suggests that for the day, for intraday, there is an overstretch in the parameters. Now the put call ratio is near about 1.7, which is quite overheated. So for intraday, we might see some kind of momentum slowing down around the zone of 24,400. Even the maximum pain is also around 24,400. But the positive part is put writers have taken strong positions at 24,200, 24,300, and now at even 24,400. That means now the support for Nifty is quite higher. So any dip towards the zone of 24,250 to 300 now should be auguring very well for the buyers, while on the higher end, 24,560 is the next potential target from a short-term point of view. Overall, the market structure is very positive, and I'm expecting that in the coming period, we might see strong momentum coming back for the benchmark.
Okay, got that. I hope that this is where you have understood how the market momentum is building on. Let's talk about particularly the key sectors that are buzzing in the session today. Real estate pocket, 1.5% higher. It's been building on for some days now. How are you looking at the sector right now?
See, overall, the whole reality space has been doing quite well. In this month, it is approximately 10% higher. So, whole reality space is looking very positive after a very strong period of consolidation or even some kind of recovery from the lower zone in the last four trading sessions specifically. We have seen a strong momentum building in the reality space. So, stock specific movement should be seen in this counter. But now, with the kind of 10% of movement in five to four trading sessions, I am expecting that there might be some kind of profit booking or some kind of a stagnation at higher level, but still stock specific action can be seen in from the space. So many counters are looking very positive. Lodha, DLF, these counters are looking very positive. They have emerged above the 200-day simple moving average after an elongated period of correction. So overall, I am expecting that here onwards, the bullish trend has emerged in the reality space, but not very much. One should not be very much aggressive because we have already seen a strong rally in the four trading sessions. So if there will be any kind of profit booking, slight profit booking, then one should definitely try to gauge those momentum and try to accumulate positions.
All right. Okay. Let's start taking some questions now from our viewers then and kickstart this entire space then. We have the first question for you, Osho, coming in from Satyan. He says, I hold two stocks. One is NCC and the other one is EMBDL, that's Embassy. Of course, the share, we'll just talk about that one in a bit, but NCC first. He says that I'm actually holding this stock at a 20% loss right now. Is there any scope for any recovery onto this stock, and what can I expect going forward from here? Well, for sure, Satyan, NCC, we do know for the last couple of months has been in a weak zone and investors have seen a lot of pain built up there. But this is one stock where ace investors have put in their money, and that's what real estate, that's what retail investors also followed and probably built up on as well. From the construction space, how would you look at this company right now, the technical structure, and what would you advise?
See, NCC has been underperformer. There has been a strong sell-off in the counter from the high zone, which the zone of nearly 170, 165, which is a very strong resistance level for the counter. So until it reclaims the zone of 170 on a decisive manner, the technical outlook seems to be bleak. So I'm not very much optimistic at current levels in the counter. Currently, it is hovering below the short-term moving average as well. So I will wait for 165, 170 to get broken, then only one can look for buying opportunity. And if that happens, then from there onwards, another 35 to 40 points of rally can be seen. So 200 to 210 will be the target, but not from current levels. I will be waiting for 165.70 zone to get breached out, and then only can look for buying or accumulation in this counter. Currently, it is looking quite weak. There might be some kind of a stagnation or consolidation around the zone of 145 to 142, which is a very strong support zone. So even someone is holding positions, it will be advisable to keep holding it and wait for a decisive breakthrough in the count.
Okay, got that. And what about EMBDL? The stock is currently hovering at around 63. Embassy Developments limited share. And here also, our viewer Satyan says that he's facing some losses. Any recovery expected here?
So again, EMDL is also having a very bleak technical setup. The counter has been into a strong correction zone, and even it's not very much liquid. There has been multiple circuit also in the counter. So technically, it is not looking very much sound, but overall 72 to 73 is a kind of a resistance level for the counter. If it breaches those levels, then going forward, we can see some kind of momentum coming back in the counter. But at current levels, the stock is not looking very much positive on the technical front, but the zone of 56 to 58 is a kind of a support zone. So I will advise to keep a strict stop loss below 55 and hold the positions in this stock.
All right. Okay. I hope that this has helped you out on both your queries. Let's take Mohit from Ludhiana asking the next question. He says, good morning to both of you. How are you, Mohit? Good to see your question. He wants to know about real estate sector, DLF particularly. 100 shares at 634 is what he has. He has a time horizon of 1 year and he wants you to guide him if he's in the right stock within the real estate pocket.
No doubt, real estate counters are looking very positive, as I spoke earlier also. But overall, DLF has seen a strong momentum in this month, approximately 10% higher from the zone of 600. So I'm expecting that the momentum can be seen from a medium to long term perspective. From a very immediate term, for a very immediate term time frame, 650, 640 can be seen as the intermediate support level. So if there will be any kind of correction towards these levels, that should be considered healthy. One should stay invested in the counter from long-term perspective or for 1 year kind of a time frame. 720 is the intermediate hurdle. So once it breaches the zone of 720, then we need to review that whether the momentum will persist in the counter or we need to trail our profits at those levels.
Okay, next let's take a query from Manoj. He says, I have 4,000 shares of Sandur manganese and iron ore. The stock is currently at 211, but I bought this at 228. I want to know from Osho sir, should I hold on or should I book my loss?
For this counter, I do not have a very strong technical view for the counter, but overall, I expect in a short to medium term perspective, the counter might see some kind of further consolidation. But from a longer term time frame, one may stay invested. It's not very much strong as of now, but I expect that if it holds above the zone of 180, then we might see traction coming back in the counter. So one should stay invested from medium to long term perspective.
Okay, got that. I hope this has answered your query. Next, we have a question from Arpan, who says, I'm from Kolkata. Hi, Arpan. Good to find your question. He says, I want to know about Tata Steel at the current levels and if a target can be shared with me from medium to long term perspective. How do you view Tata Steel at the current juncture and what's the kind of strategy that you would advise here?
For Tata Steel, it is placed at a very crucial support zone. The 200 is simple moving average, but overall, the support lies around the zone of 185 to 180. So one should not be very much aggressive in accumulating the counter at current levels. I expect the zone of 185, 180 historically has proven to be a very strong support zone for the counter. So in future, if there will be any kind of dip towards 185, one should stay invested and even can accumulate more. And from a shorter term time frame, 195 to 200 is the intermediate hurdle. Once it breaches the zone of 200, then from there onwards, we can see some kind of bullish traction coming back in the counter. So from medium to long term perspective, one may look for even accumulation at lower levels and one should stay invested from long term perspective.
Okay, let's take the next query. This one is from Fahim from Andhra Pradesh. He says, hi, hello to you as well, Fahim. He says, I need Osho sir's view on Azad Engineering. For short term, how do you view this share and do you think a fresh purchase can be made?
Azad engineering has seen a very strong technical setup. It is into a consolidation phase as of now. But I expect the time it breaches the zone of nearly 2270, 2280, then from there onwards, there can be strong momentum coming back in the counter because technically it will be a flat pattern breakout on the weekly time frame chart. So it will be advisable to stay invested in the counter. Even one can add positions if it breaches the zone of 2280 or 2300, and from there onwards we can expect another 400 point of rally from medium to long term perspective. So stay invested, even can add more positions at higher levels.
Okay, let's take the next query. This one is from one of our viewers. Okay, this is Gagan from Delhi. He says, "Hi Sakshi, I want to know about steel strip wheels. I have this stock at 216. I also want to ask about India Hume Pipes at 337. On both these stocks, he has a short-term view and he wants you to guide him on both these. First is steel strip wheels. He bought at 216. The stock is at 248, so he's still in profits. That's a good thing. Let's also watch Indian Hume Pipes as well. He got an entry into this stock at 337. Let's find out on both these stocks. What would your advice be?
For steel strips, the counter has seen very strong movement in the recent period. There has been a strong breakout from the zone of 225 to 230 odd levels, and since then the counter is into a strong bullish traction. So one should stay invested. If there will be any kind of correction also, that should be considered healthy, because after an elongated period, the counter has given a breakout. So I'm expecting 235 to 40 is a healthy support zone for the counter. While on the higher end, from medium term point of view, the counter can test the zone of 275 to 280. So one should stay invested in the counter from medium term point of view. Now coming to Indian Hume Pipe, then this counter has given a breakout in the recent period in the last week around the zone of 345, and currently it is showcasing a follow-up buying traction, which is a very positive sign for the technical perspective. But I expect with the kind of momentum the counter has seen and with the kind of volume it has generated in the recent period, there is high possibility for the counter to continue the momentum on the higher end. Near about 370 to 380 is the target that I'm expecting from a very short term point of view. After that, we need to review that whether the momentum still persists or one should trail their profits in the short term.
Okay, fair point. Let's take the next one. This one is from one of our viewers again, Rajesh, who says, "Sir, please बताइए, persistent systems मेरे पास है, 5650 का लिया हुआ है, मैं और 6 months इस पे रह सकता हूँ, इस पर क्या व्यू आप दे सकते हैं मुझे?" persistent systems में हमने पिछले हफ्ते डेफिनेटली एक वीकनेस देखी स्टॉक में, ख़ास तौर पर क्योंकि कंपनी ने एक बहुत बड़े एक्विजिशन का अनाउंसमेंट किया, नगारों की डील का, जिसके बाद कंपनी के मैनेजमेंट भी हमारे चैनल पर आए थे और हमने उनसे ये बातचीत भी की थी कि इन्वेस्टर्स को, एनालिस्ट को लग रहा है कि कहीं आपने बहुत ओवर वैल्यूएशन पे तो ये डील नहीं की है, या फिर इसका इम्पैक्ट आपके डेट पर क्या होगा। तो ख़ास तौर पर कंपनी के मैनेजमेंट में ने ये क्लियर किया है कि कंपनी एक ग्रोथ ओरिएंटेड कंपनी है, जिस की टॉप लाइन बॉटम लाइन स्ट्रॉन्ग है, और आगे जाते हुए विदिन 6 to 8 months वो ये वो बताना चाहते थे सभी इन्वेस्टर्स को कि परसिस्टेंट की ओवरऑल ग्रोथ में नगारों का भी एक इम्पैक्ट देखने को मिलेगा पॉजिटिव, और लॉन्ग टर्म के लिहाज के लिए काफ़ी बड़ी अपॉर्चुनिटी मिलती है परसिस्टेंट सिस्टम्स को यूरोप में अपना फोकस बढ़ाने के लिए इस कंपनी के एक्विजिशन द्वारा। तो कई नई मार्केट खुल रही हैं, कई वर्टिकल्स ऐड ऑन हो रहे हैं, और इस एक्विजिशन से डिजिटल फर्स्ट और एआई के ऊपर काफ़ी अच्छा खासा फोकस हो सकता है परसिस्टेंट का। इसलिए उनका मानना ये था कि इमीडिएट नीजक रिएक्शन को अवॉइड करके लॉन्ग टर्म की ग्रोथ के लिए इन्वेस्टर्स अभी उनके कंपनी को देखें। इस तरीके से उन्होंने शेयर होल्डर्स को हमारे चैनल द्वारा राय दी थी। फिलहाल एक एक्सपर्ट ओपिनियन लेते हैं ओशो से। आईटी स्टॉक्स के ऊपर लगातार हमने एक इम्पैक्ट देखा है पिछले कुछ महीनों से, एक साल से, और पिछली बार के जो क्वार्टरली अर्निंग्स आए थे उसमें भी काफ़ी कंसर्न था कंपनीज़ के ब्लीक फ्यूचर को लेकर। बस अब एक ही हफ्ता बचा है और इसी में हम देख लेंगे कि सारे जो आईटी कंपनीज़ हैं Q1 के भी नतीजे सामने लाएंगे और उनकी कमेंट्री कैसे रहती है, क्या सिनेरियो में कुछ बदला है जब से पीस डील अनाउंस हुई है वेस्ट एशिया में, उसके बाद से क्या पर्स स्ट्रिंग्स वापस खुलेंगी या नहीं, क्लाइंट्स की डिस्क्रेशनरी स्पेंड बढ़ेगी या नहीं, ये सब देखते हुए हम बात करेंगे। लेकिन फ़िलहाल जिसने हायर लेवल पे लिया हुआ है, जैसे हमारे व्यूअर ने, क्या राय होगी आपकी परसिस्टेंट पर?
अगर टेक्निकली देखें तो ये काउंटर में नो डाउट एक ब्रेकडाउन आया था नियरली 4800 के नीचे, एंड वहां से पिछले 4 दिनों में एक अच्छा रिकवरी फेज भी दिखाई दे रहा है। बट जब तक 4800 के ऊपर वापस से रिकवर नहीं करता है तब तक टेक्निकल स्ट्रक्चर थोड़ा सा वीक स्ट्रक्चर ही दिखा रहा है, तो मुझे लगता है थोड़ा वेट करना चाहिए। करंट लेवल्स पे एग्जिट करने की भी राय नहीं है, इवन ऐड करने की भी राय नहीं बनेगी। बट अगर 4800 को डिसाइसिवली ब्रेक थ्रू करता है, बिकॉज अगर हम हिस्टोरिकली देखें तो ये लेवल्स नियर अबाउट 4400 4500 एक काफी स्ट्रॉन्ग सपोर्ट है। हिस्टोरिकली इस लेवल से कई बार इस काउंटर में एक अच्छा बाइंग ट्रैक्शन भी बनते हुए दिखाई दिया है। तो कुछ दिन का इंतजार करना चाहिए। अगर 4800 के ऊपर एक डिसाइसिव मोमेंटम बनता है तो आने वाले दिन में एक अच्छा ट्रैक्शन बन सकता है। बट अगेन हायर लेवल्स पे 5300 से 5500 का रेजिस्टेंस है। जब तक इसे ब्रेक थ्रू नहीं करता है तब तक मीडियम से लॉन्ग टर्म के चार्ट स्ट्रक्चर पॉजिटिव टर्न अराउंड नहीं होंगे। बट करंट लेवल्स पे बिल्कुल अपने सपोर्ट जोन के पास है, तो एग्जिट करने की राय नहीं बनेगी। होल्ड करिए, कुछ दिन वेट करना पड़ेगा हमें कि अगर 53 55 को ब्रेक थ्रू करता है तब और भी पोजीशंस ऐड किए जा सकते हैं काउंटर में मीडियम से लॉन्ग टर्म पॉइंट ऑफ व्यू के हिसाब से।
ठीक है, आगे बढ़ते हैं, कुछ और सवाल लेते हैं। ये सवाल हमारे पास विनीता गुप्ता का आया है। ये आपसे एलाइड ब्लेंडर्स के ऊपर पूछना चाहती हैं। 580 के लेवल पर इन्होंने खरीदारी की हुई है और पूछना चाहती हैं आपसे कब यहाँ से निकलें, बुक प्रॉफिट अभी कर लें या फिर बने रहें अभी भी।
और सी काउंटर में काफी अच्छा ट्रैक्शन है, ये होल स्पेस में ही बहुत स्ट्रॉन्ग ट्रैक्शन बना हुआ है, सो बिल्कुल पोजीशंस में होल्ड रखना चाहिए। बहुत दिनों के बाद एक ब्रेक थ्रू हुआ है, नियर अबाउट 650 660 का एक ब्रेकआउट हुआ है काउंटर में। तो मुझे लगता है मोमेंटम में है काउंटर अभी, एंड आने वाले दिन में एक अच्छा ट्रैक्शन बन सकता है। 780 का टारगेट है इसका टेक्निकली शॉर्ट टर्म पॉइंट ऑफ व्यू से, तो 780 के टारगेट्स के लिए पोजीशन को होल्ड रखने की राय बनी।
ओके, गॉट दैट। नेक्स्ट क्वेश्चन ऋषिकेश का है। अपोलो माइक्रो पर पूछना चाहते हैं आपसे उषो, 450 के लेवल पर खरीदा है, अगले 3 महीने के लिए यहाँ टारगेट और स्टॉप लॉस क्या हो सकता है, ये आपसे जानना चाहते हैं।
अपोलो माइक्रो में काफी स्ट्रॉन्ग ट्रैक्शन है। पिछले हफ्ते अगर हम देखें तो काफी स्ट्रॉन्ग मोमेंटम में रहा है काउंटर, नियरली 12-13% का गेन हुआ है, जिसके लिए फ्रेश या ऑल टाइम हाई पे काउंटर ट्रेड कर रहा है। एंड पिछले कई दिनों से अगर हम देखें तो इसका वॉल्यूम भी काफी ज्यादा सर्ज होते हुए दिखाई दे रहे हैं। तो दैट मीन्स हायर लेवल्स पे एक ट्रैक्शन काफी अच्छा बना हुआ है, तो बिल्कुल पोजिशन होल्ड रखना चाहिए। इसका जो सपोर्ट जोन है वो नियर अबाउट 410 से 400 के हैं, तो उस सपोर्ट जोन के हिसाब से अपनी पोजीशन को शॉर्ट टर्म के लिए होल्ड करें। हायर लेवल्स पे जिस हिसाब का ट्रैक्शन बना है, जिस हिसाब के टेक्निकल डेवलपमेंट्स हुए हैं, मुझे लगता है 510 530 तक के टारगेट्स इसमें देखने को मिल सकते हैं।
Okay, got that. I hope this has helped you. Let's take the next query. This one is from Norway. Mohit is writing in. He says, I am now back in Delhi and I watch your show daily. Thank you so much, Mohit, for writing in. He says, could you please help me with a guidance on United Spirits? I bought 300 shares at 1390. I can hold for the next 1 to 2 months. What is the target and stop loss? So he's only looking for a short-term view here on United Spirits. There's some momentum today. The stock is at 1427. Since he bought at 1390, the good part is he's in profits. Do you think there is further momentum build up that you're expecting on the charts over the next 1 to 2 months here?
See, again, United Spirits has been into a strong momentum. There has been a strong recovery from the zone of nearly 1250. Now the counter is at 1430 odd levels. But there have been several positive developments. There has been positive crossovers in the moving averages. There has been a strong emergence above the 200-day simple moving average, and even double bottom kind of formation on the daily time frame chart. So overall, there has been multiple positive developments on the technical front. So I expect that in the short term period, the counter can see strong traction coming back. On the higher end, the first and intermediate target comes around the zone of 1470 to 1480. So once it breaches the zone of 1480, then from there onwards we can see higher targets as well. But from a shorter term perspective, 1480 is the first target. If it breaches, we need to review that momentum is still there, or some profit booking can be seen. Even if profit booking comes into picture, so that should be considered healthy, and one may look for accumulation at lower levels as well from medium term.
Okay, got that. I hope that this has helped you. Let's take the next question. The next one is from KD Pradhan. He says, hi, good afternoon. I want to know from Osho sir, on Vedanta Iron and Steel for 3 years time frame. How does he look at the stock? Well, these are demerged companies that have just entered into the market, and you would not have very long term charts here, but it's important to look at Vedanta Iron and Steel. Why? When we look at from the listing time till now, the stock has already jumped up substantially, giving very huge returns to investors. But from the last week on, we have seen some cool off period beginning. The stock today also is down at a 5% lower circuit. Do you think most of the good news is already in the price now? What are you advising for fresh investors at these levels for Vedanta Iron and Steel?
See, currently, technically, there is no data for the counter, so it will be very difficult to have any kind of analysis in this stock. But as you mentioned, the counter has already seen a very strong rally from 20. It went towards the zone of 45, and then it has been into a correction zone in last two trading sessions. So I expect that volatility might be seen in the short-term period for the counter. But from a longer term perspective, one should stay invested in this counter. The whole space is looking good, and I expect that from medium term point of view, one may get a decent return in the counter. So stay invested from medium to long term point of view. Short term perspective, I again expect the technical setup is not very much data centric that I can claim any support and resistance for the counter.
Okay, let's take the next one. This one is from one of our viewers, again Satya. He says, I want to know whether MOS chip technologies can be accumulated at the current market price for medium to long term time frame. What would you advise here, Osho?
Technically, the counter is looking very positive. The counter has seen very strong consolidation around the cluster of its moving averages, and from past 2 days, there has been a strong volume-based buying in the counter. So I expect that momentum is there in the counter, and one may look for even accumulation at current levels. The intermediate target comes around the zone of 248, 250 kind of levels. But if it breaches the same zone, then again 20 points, odd points of rally can be seen. So 250 followed by 270 will be the targets from medium term point of view in this counter.
Okay, let's take the next question. This one is again from one of our viewers, Sai Sharma, who wants to know about Astra Micro now. At 1353, Sai Sharma has got this stock. Wants to know, should I still hold on or should I exit this one? What would you advise here?
So see, firstly, I would like to congratulate him that he has taken position in the counter in a very strong momentum market, and from then the counter is into a strong momentum. But the only deviation that I can see on the technical front, that it is being deviated from its short-term moving average on a higher scale. So possibility of profit booking can be seen, but till the time the momentum persists in the counter, it is advisable to trail profits. So it will be advisable to trail your stop losses around the zone of 1740 for the time being and hold the counter from a short to medium term perspective.
Okay, got that. I hope that this has helped you out. And of course, congratulations to you, like Osho has said as well. Osho, now we'll come to your own top choice of stock ideas as well. That's something that most of our viewers keep waiting for. So what do you have for us today? What would you advise?
The first counter, which is looking quite positive to me, is from the pharma pack. Glenmark Pharma is looking very positive. The counter has seen very strong consolidation in last 3 weeks, and today there has been a strong consolidation breakout. So I expect the momentum can be continued in this counter in the coming period. So one may look for accumulation in Glenmark Pharma at current levels. 2260 is the current market price. So one may look to accumulate at current levels. 2210 is the advisable stop loss, and 2340 is the target that I am expecting in the counter. The second counter, which is looking very positive, is Zen Technology. Zen Technology has also seen very strong volume-based buying in today's trading session. The counter has pulled off from higher zone in today's trading session from 1870 till 1825 now. But again, 1810, 1820 is a very good zone to accumulate this counter. So one may look for buying opportunity in this counter, keeping a stop loss of 1756. And on the higher end, 1950 is the target that I'm expecting in this.
Okay, got that. I hope that this has helped you out as well. Osho, thank you so much for being with us on the program and for guiding all our viewers there with your top choice of advice as well. Always a pleasure. Thank you so much for coming. And of course, we'll look forward to having you back on another edition of Daily Calls. Thank you.
Thank you, Srinivas.
All right, viewers, we'll jump into the second segment. The markets are further building on pace. You can clearly see 24,440 on the screen, 171 point of a move up as far as the markets are concerned. So steady, strong build up. And now we are looking at Mr. Kranti Batini, Director of Research from Wealth Mill Securities, to join in for the second segment of the edition and to share his take on the markets too. Welcome to you, Mr. Batini. Good to have you with us. How are you looking at this fresh wave of momentum on the markets? And we are further building on strength. Where do you think this will take us? Just days from now, we will start getting in earnings season, which will have its impact in its own way on specific stocks and sectors. But your own sense of where are the markets going from here? What's your own strategy on the markets from here?
Sakshi, hi, good afternoon to you. Yeah, markets have been climbing all the wall of worries, and markets are decisively about 24,400 level. That's a very positive sign for the market, and the investors, whoever believed on India's growth story and bought at dips, they are rewarded well in the medium to short term also. Now, the crucial levels I look forward for the markets is going to be around 24,500 to 24,750. This is the strong resistance zone for the market in the medium to short term. In the earlier times, in the past 3 months, market tried to surpass this level, but it found a strict resistance in this range. This is the time different. Definitely, it can be the different time because of the softening of the crude oil prices. If we can get support from the earning season and the large cap stocks are concerned, definitely we can see the markets are heading, inching towards the higher range of the market. Most probably, as the momentum is building up and the geopolitical escalations have came down drastically, and the Strait of Hormuz is giving a way to the ships and the movement. We can expect the crude to further cool off and supply chain management to resume in the coming days. So we can see the markets are inching towards the higher range. But right now we need to see how the support from the earnings that's going to come for the market, that is crucial for next couple of weeks, the momentums to sustain. And also what market is going to look forward is the earnings commentary and the management commentary for the next couple of quarters. That is going to change the market sentiment. Right now, the market sentiment turned from negative to positive. So these are the levels one need to look forward and keep tracking the earnings season. We are going to have a very busy earnings season in next coming days as the companies are going to announce their results.
Okay, got that. I hope this has given a good overview to our viewers. Let's start taking some questions now with you, Mr. Batini. We have our first question for you from Jatin Dave. He says, Mr. Batini, good afternoon. I want to know about NetWeb Technologies and how do you view this stock for short to medium term perspective? And do you think this stock is good to invest even now?
Actually, the stock, if you see, the volatility in this stock is very much high. But you also need to understand, in the last 1 year, the stock has risen from the level of around 1,500 to it touched a high of 5,000 level. We tend to see some kind of a profit booking in the medium to short term. The stock has corrected in the last 1 month around 10% from its peaks. But it is right now at the supporting zone. To make any kind of a serious investments in NetWeb, the last quarter results have been quite promising for NetWeb, resilient quarter for NetWeb. So going from here, I would be seeing how the earnings commentary and also with respect to the present quarter results are going to concern. So he can keep this range as the first entry level. He can, if he want to buy 100 shares, he can start accumulating. But to make further accumulation, to increase any kind of a significant quantity, to make any kind of a serious investment decision, I wait for the earnings for the stock.
Okay, let's take the next question. This one is from, all right, we have a question coming in from one of our viewers on our YouTube. Raju Tiwari. He says, I want to know about Supreme Industries from a fundamental point of view. If you could advise me whether this stock is a good one, can I start buying it in a staggered May for long term?
Uh, Sakshi, given the kind of cool of what we are seeing in the crude oil prices, definitely it's going to be a positive for the plastic and plastic related stocks, paint related stocks are concerned. So, Supreme Industries, he can start accumulating at this price range at this point of time, Sakshi. In a staggered manner, as the investor rightly mentioned, he can start accumulating Supreme Industry. With respect to last quarter results are concerned, they're quite good for Supreme Industries. If the same kind of a earnings momentum going to sustain for Supreme Industries, definitely the stock can bottom out and it can inch higher from these levels.
Okay, I hope that this has helped you. Let's take the next question. This one is from again Namish, from one of our regular viewers as well. Welcome to you, Namish. He says this is a very useful show for us. Thank you for writing in. He says, I want to know about two stocks. One is Rolex Rings. I bought this at 155. I can hold on. What's the target here that you can advise me? The second one is Muthoot Microfinance.
Sakshi, with respect to Rolex Rings, the stock is concerned, the stock is witnessing high volatility and some kind of a speculative activity also you tend to see in Rolex Rings. The last quarter results are quite disappointing for the stock. That's where we can see some kind of a consolidation in the stock. He can hold on to the stock and wait for the results to see any kind of a further momentum in the stock. But at this price range, he can hold on to the stock.
Okay, got that. I hope that this has helped you. Muthoot Microfinance, he got at 222. If you could advise that one, Mr. Batini as well. Muthoot Microfinance. Currently, it's at 217.
Yes, actually, the stock has been rising from 180 levels at this point of time and strongly holding the higher levels. If the stock could able to sustain the range of 230, that's where the last time the stock has came down. We can see some kind of a further up move in Muthoot Finance, but in terms of the results are concerned, the last quarter results have been quite good for Muthoot Finance. If the company can replicate the same kind of result in the current quarter also, we can see a much higher range for Muthoot Finance. It's a buy and dips kind of a stock at this point of time, Sakshi.
Okay. Let's take another question. This one is from Lavisha from Jalandhar. She says, Kranti sir, can you advise on Bell Rise? I have this stock in my portfolio at 234. I can hold on. Should I average at the current levels as well? Would you advise it?
Belrise is the stock, actually. This has been outperforming very well. The stock has risen very steeply from the time it got listed. And the momentum in the auto ancillary stocks also has been helping this stock. The last quarter results have been good. So this is a stock at this point of time. One can buy on dips for a medium to long-term perspective. The valuations are concerned if the company can surprise with respect to the earnings are concerned, we can see the stock to rise from here also 10 to 15%. That's what I can expect in the medium to short term. So buy on dips is the strategy one can use for well-rise industries are concerned.
Okay, let's take the next one then. This one is from Rishabh. He's from Mumbai and he says, hi Sakshi, I want a short-term view on Jupiter Wagons from Kranti sir. I bought this at 596. The stock has already fallen about 66% from its all-time high of 748 rupees. What should I be doing at this point in time? Well, Rishabh, you've been actually holding on all through this while when the entire sector has underperformed. Yes, there was a time when all these stocks were rallying substantially and you bought it at 596, which was right on its way up, to the peak. And from then on, there has not been, in the last 1 year, absolutely any kind of a rebound of sorts there. It's been a painful one. Let's try and find out if there is any way to stay on because you've already held on for so long to see the recovery, or is it better to switch and sometimes we have to take the bitter pill and we have to cut our loss. We have to take our losses as well. So let's try and understand from Mr. Batini what's the right advice for you here.
Yes, actually, as you rightly mentioned, these stocks have been in a momentum zone. In fact, if we see the last 5 years, how the way these stocks have risen, they have risen from 100 rupees levels to it went into 700 levels, and that's where the entire the market momentum and market has been chasing these stocks. From there onwards, we are witnessing a long consolidation in Jupiter Wagons. Last quarter results have been tepid quarter for Jupiter Wagons, but given the kind of the current capex with respect to the railway stocks are concerned on a medium to longer term basis, one can hold on to the railway stocks and one can accumulate if there is any dip in the railway stocks if he is if he is a investor. Or else, if you want to chase the momentum, exit the stock on rallies, and he can get into some other stocks which are outperforming at this point of time. But if the investor is a long-term investor, one can buy these stocks for a long-term perspective on a 3 to 5 years horizon, time horizon. I would be accumulating railway stocks because we can tend to see the valuations got moderated and also the order book has been building up for these stocks and the earning visibility is quite strong for these companies. But one thing, what's missing where the investors got disappointed with these stocks is you can't expect every stock to outperform on every day. There would be a leadership rotation on the longer term basis. 1 year, these stocks have been in a momentum zone, and from there onwards, as the valuations got peaked out for majority of these railway stocks are concerned, and what we are witnessing is a reversal for those momentum that is a long consolidation, Sakshi. So on a longer term basis, buy on dips is the strategy for the railway stocks are concerned.
All right. Let's take the next question. This one is from one of our viewers, Vishal, who says, Kranti sir, can you advise on Shriram Properties? I bought this stock at 96. What stop loss and target should I maintain? I can hold on for medium term.
With respect to the medium term is concerned, Sakshi, the stock has risen from the range of around 60, now at consolidating at 90. We are seeing a higher tops and higher bottoms for Shriram Properties are concerned. It's a decent stock. What we witnessed is the real estate stocks in the medium to short term, they have been in a consolidation phase. And Shriram Properties, the last quarter results have been good for the company. So he can hold on to the stock. He can expect the stock to cross in the coming weeks and months around 100 levels. If the stock would able to hold on to the range of 100, we can see some kind of a further upward momentum for Shriram Properties on a medium to long term perspective.
Okay, got that. I hope that this has also helped you. Let's take the next question. This one is from, again, one of our viewers on our YouTube. This is Kaushik Rana, who says, Good afternoon, Kranti sir. I have Larsen and Tubro at 3,500. I have 20 shares right now in my portfolio. Is it still good to buy at the current market price? Should I add on to my portfolio or should I wait for earnings? What would you advise?
Sakshi, with respect to L&T is concerned, I would be the net buyer at every dip. If there is any dip in the stock, definitely I would be accumulating for a medium to long term basis. The valuations are quite favorable, and given the kind of the business momentum for L&T is concerned, I would be buying at every dip on a medium to longer term basis. Absolutely not for short term. If the investor have a time horizon of 2 to 3 years, definitely L&T is a warranted buy at every dip.
Okay, got that. I hope this has also helped you. Let's take the next one. This one is from Ankur Modi. He says, Hi Sakshi, hope you're doing great. I'm very well. Thank you so much for asking, Ankur, and I hope the same for you too. The question is on Ashok Leyland for you, Mr. Batini here. He asks you, in fact, Ashok Leyland and Som Distilleries, both these stocks for fresh investment and for long term, do you advise either of these to be looked at the current market price?
Ashok Leyland, Sakshi, at this price range, I would be guiding the investor to buy at dips at this price point. He can keep the the current price is the first entry level for a medium to longer term perspective. With respect to some distilleries are concerns, actually, I would be uh, uh, avoiding some distilleries at this point of time, even though the stock got corrected from its peak around 160. I would be wait on to some distilleries and wait for the management guidance and buying some distilleries post results. That's where are better to accumulate or buy some distilleries post results. One can buy, but in the medium to short term perspective, I'd be avoiding some distilleries at this price point and at this point.
Okay, I hope that this has advised you well. Let's take the next query. We also have a lot of our queries coming in on our WhatsApp as well, so we'll take as many as possible. We have Surendran from Chennai asking on PCBL. He bought this stock at 263, 25 shares. Right now he's on 20% profit as well. He wants to know, is it the right time to book out with the profits or should he wait?
With respect to PCBL is concerned, actually, we witnessed a strong recovery with respect to Phillips carbon block is concerned. The cool off of crude oil prices will be positive for the stock, and also the emphasis towards the EV space will be helping PCBL. The carbon block business is concerned. I would be holding the stocks actually for a medium to longer term basis. If he's a short term investor, he can book he can book some profit from the table, but for a medium to longer term, he can hold on to the stock.
Okay, let's take the next one. This one is from one of our viewers again. This is all right, Firoz Ahmad from Jammu and Kashmir, Srinagar. He's writing in. Good to have your question, Firoz. He asks you on Hindustan Copper. He's bought this, 613 shares. In fact, 50 shares is what he would have bought, if I'm not mistaken, at 613 he's saying. What should he do? Can he average right now or not is his question on Hind Copper. We do know in last 1.5 years, the stock has had a great run up also because of the copper prices hitting record highs. This stock almost had a vertical rally, but it's cooled off from its peak. If we see starting January, there's been a drop down from its peak. How would you look at it? Despite that, it's still up 80%. So you can clearly see what kind of a rally it would have seen. Mr. Patini, what would you advise?
Yes, actually, neatly mentioned. The stock have witnessed a strong performance during the year. In fact, if you see the price action in the last 3-4 years, the stock has been a multi-bagger from its lows. But we can see some kind of a cool off in the global copper prices in the medium to short term. Definitely on a longer term perspective, given the kind of the current emphasis towards the data center and power equipment and power business is concerned, the copper demand is expected to go up on a medium to longer term basis. So he can hold on, and if he want to accumulate, he can accumulate the stock on dips also. So we can see some more upside with respect to the copper prices and Hindustan in copper is concerned. So buy on dips is the strategy he can have for in copper on a medium to longer term perspective.
Okay, let's take the next one. This one is from one of our viewers, Piyush, who says on Navkar Corp, he has 3,000 shares at 102 levels. Any target and stop loss that you can advise for the next 1 year into this stock?
We can see some kind of a revival with respect to the logistics and freight container stocks are concerned, Sakshi. So you can expect the stock to deliver around 10 to 15% from this range also. That's what we can expect in Navkar Corporation. But the earnings are quite crucial for this stock. Last quarter has been a decent quarter, but you also need to understand it's a fully priced in stock. The PE around at a higher note at this point of time. So you can expect 10 to 15% from the stock at this from the current price range.
Okay, got that. I hope that this has also helped you out as well. Let's take the next one. This one is again from our viewers on our WhatsApp as well. Badri from Bengaluru, he says, "Hi Sakshi, I'm holding 50 shares of Infosys. My buying price is 1110. The stock has been very volatile. What's the long-term outlook? Should I accumulate at these levels or not?" That's a valid question. Mr. Batini, we do know how IT stocks have had, a rough run from last couple of months, disruptions from AI, bleak guidance being given, and yet again we are at the brink of another quarterly earnings going to be coming in soon. That's again making the investors nervous, cautious right ahead of the earnings, whether there will be any more negative surprises in terms of commentary from the companies, or will there be any signs of revival, in terms of how the pain has been panning out. How would you advise on Infosys?
Sakshi, on a medium to longer term basis, it's a contrarian view. I'd be buying Infosys at this price range. Or in fact, if there is any further dip, I would be accumulating only for a longer term perspective. The reason is it's a contrarian view. These stocks have strong business models, strong cash flows, and the missing parts of AI, the companies are trying to cope up with respect to the AI rallies or the AI business perspectives are concerned. This would be taking some kind of a time to adjust the business models with respect to AI is concerned. Even in fact, any kind of AI further momentum that can help these stocks on a longer term basis. But medium to short term, definitely there are overhang with respect to the AI worries and also the US growth rates, and also how the budgets of the Fortune 500 companies and the corporates in US, how they are going to increase their IT budgets. These are the things that are going to play an overhang on Infosys in the medium to short term. But for a longer term basis, because these stocks have been trading at their long term averages, so it's a contrarian buy for a medium to longer term perspective, Sakshi.
Okay, got that. All right, Mr. Bedini, we'll leave you at that. Thank you so much for being with us on the show and for guiding all our viewers there with all the questions that they have brought in. Hopefully, we'll get you back very soon, another edition of Business Today and Daily Calls as well. Thank you so much for being with us on the show. All right, viewers, we are now wrapping up the Daily Calls edition right here. We can look at 24,433 right now on the Nifty. So we've held on to where we started off this show about 50 minutes ago. And you can clearly look at how the market momentum is sustaining, at least for now. Remains to be seen whether we can see further build up from here or no. Last 2.5 hours remaining. Let's see what really happens into the market. Stay tuned with us on Business Today to track all the market momentum.
Mumbai is under siege. Relentless rain has brought India's financial capital to its knees. Flooded roads, stalled trains, flight disruptions, and now a trail of deaths. From Andheri to the Worli ceiling, the maximum city is drowning. Major arterial roads are completely locked up, and airlines like Indigo, Akasa and SpiceJet are issuing frantic travel advisories about flight delays. The IMD's red alert stays slapped on Mumbai until July 6th warning of torrential rains. From Andheri subway, which is closed sporadically, to Worli, King's Circle, Bandra, Vile Parle and Vasai, streets have turned into rivers, vehicles have been stranded, and daily life has come to a grinding halt.
Around Andheri, the water levels are rising. Now, it's been said that around 80% of this month's average rainfall has already completed in 4 months. That has been the heavy downpour, and hence it is advised that be careful while they are out.
But beyond the waterlogged roads lies a far deadlier story. An 18-year-old boy was killed after a tree branch snapped and struck him while he was riding through Are Colony in Goregaon East during heavy rain. He was rushed to a nearby hospital but succumbed to his injuries, adding to the growing list of rain-related deaths in the city. Hours earlier, a 63-year-old man in Kurla, Yunus, fell prey to monsoon fatality when a massive tree crushed his shop.
ये पेड़ के एक बीच की फांदी थी जो कि बहुत ही मजबूत फांदी थी और अंकल जी जो क्या नाम था उनका यूनिस भाई वो बाइक से आए और दुकान का सामान रखने के लिए सेटर वेटर वो बाइक से उतर ही रहे थे और फांदी डायरेक्ट उनके मुंह पे जाके गिरी और मुंह पे गिरने के वजह से वो डायरेक्ट नीचे जमीन पे गिर गए।
हमारे यहाँ के नगर सेवक आरोग्य समिति के अध्यक्ष उन्होंने 2 बार प्रशासन को पत्र भी दिया था कि ये डेंजर जोन में लग रहा है पेड़, लेकिन प्रशासन ने उसके ऊपर क्यों नहीं कार्रवाई की, ये इंक्वायरी का पार्ट है, इसके ऊपर हम लोग पूरी इंक्वायरी लगा रहे हैं। लेकिन फिलहाल हम उनकी फैमिली के साथ यहाँ पे खड़े हैं। मैं आपके माध्यम से कहना चाहती हूँ कि उनको 5 लाख का जो अर्थ सहाय है वो भी मैं यहाँ पे डिक्लेयर कर रही हूँ।
It comes just days after 11-year-old Vihan Srivastava was killed when an old, allegedly inspected and a healthy tree collapsed right onto his moving bus in Chembur. And the absolute breaking point, in Sakinaka, a 55-year-old man fell to his death into an open manhole which was being cleaned then. From deaths in tree collapse to dying in manhole, the price of administrative apathy is being paid in Mumbaikar blood. The red alert will eventually pass, but the scars of this preventable tragedy will remain. With Mustafa Sheikh in Mumbai, Bureau Report, India Today. As lakhs of mourners poured onto the streets of Tehran to pay their final respects to Iran's supreme leader Ayatollah Ali Khamenei, US President Donald Trump has reignited the war of words, this time with a blistering attack on Iran. Donald Trump has claimed that the United States could have eliminated Iran's entire leadership at Khamenei's funeral in one shot. But then he chose not to.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
Trump also said he had been working on the possible removal of sanctions before Tehran's response forced him to stop. Iran hit back sharply, accusing Trump of displaying neither civilization nor honor and calling his remarks a violation of diplomatic norms. The exchange comes amid massive funeral processions in Iran. The outpouring of grief is being projected as a show of national unity and defiance, even as tensions between Washington and Tehran remain dangerously high after the recent conflict.
I came to support my country. Yes, I came from a long, long way to come to say we are all united and we are a people. We never leave our country, our civilization. It's not a civilization for forefathers and nobody can destroy it.
The killing of Iran's supreme leader has transformed Donald Trump into the face of America's military campaign in the eyes of Tehran. Iran holds Trump politically responsible for the strikes that eliminated its top leader. It has accused Washington of pursuing regime change through military force.
We knocked the hell out of Iran. They're dying to settle.
Donald Trump's latest remarks have only intensified the anger. For Tehran's leadership and masses supporting it, the message is clear. Khamenei may be gone after the massive bombing raids, but the confrontation with America and Israel is far from over. With Geeta Mohan in Tehran, Bureau Report, India Today.
While Iran is mourning loss of their former supreme leader Ali Khamenei, the United States of America is celebrating its 250th Independence Day. During a speech near the iconic Mount Rushmore, Trump took potshots at Tehran. In his trademark style, Trump claimed that the US knocked the hell out of Iran and they gave them a week off for the funeral.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
On February 28th, Ayatollah Ali Khamenei was killed in US-Israeli strikes, which triggered a full-blown war in the Gulf. The conflict went on for 108 days until Trump and Pezeshkian finally signed a memorandum of understanding on June 17. But fragile peace continues to prevail over West Asia. Currently, a ceasefire is in place and hostilities have been paused. Key global oil route Strait of Hormuz has been reopened and a direct line of communication has been established between the US and Iran. A 60-day negotiation window underway and technical talks having begun. In fact, both nations recently concluded a round of indirect technical talks in Doha. Qatari Emir Sheikh Tamim bin Hamad Al Thani met US Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Iran's Deputy Foreign Minister Kazem Garibabadi headed the country's technical team in the talks. According to reports, both sides have decided to establish a communication channel to resolve all disputes, and then even discussed release of $6 billion in frozen Iranian funds. Both the sides have now agreed to continue talks after conclusion of week-long funeral procession of Ayatollah Ali Khamenei. But as Trump's belligerence and Tehran's bluster frequently prove, it's a fragile peace which can any day deteriorate into a full-blown conflict once again, to potentially devastating consequences. Bureau Report, India Today.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us.
Thank you.
Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out. And we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through the CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for two ways. One, providing a solution to the municipal solid waste, and two, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders, BPCL, so on and so forth as well.
Look, Numaligarh refinery currently is, we are taking it from 3 million ton to 9 million ton. The expansion is on track. The crude in happened on 31st December 2025. The mother units are currently under commissioning, the CDU and VDU. And our idea is that we are already prepared ourselves with the local domestic crude as part of our commissioning process. Our idea is that early 2027, we will have the complete 9 million metric ton commissioned. As far as our 9 million ton capacity is concerned, we foresee that we will be able to source about 3.5 million metric ton from domestic crude, that is Assam Fields of Oil India Limited and ONGC, and we will import about 5.5 to 6 million metric ton, for which we are got a collaborative framework with BPCL for our crude oil sourcing, and we are building a pipeline which is about 1635 to 1640 kilometers from Paradip coast to Numaligarh, where we will be utilizing the offshore oil terminals of IOCL to source the crude oil. We will have an interim tank farm at Paradip, and then the pipeline will be used to pump the crude oil from Paradip to Numaligarh. That we intend to commission by October, November this year.
So one final question. The government is, after the West Asia crisis, has become very keen on improving our energy security, the country's energy security, and there are talks of increasing our reserves as well. Any role that Oil India is playing in order to expand our SPR to over 9 to 10 days going forward?
Look, to our understanding, it is not just SPR. It is actually inventorying carrying capacity of the country with respect to crude oil and product. As far as Numaligarh is concerned, I will talk about, that's the downstream part of Oil India Limited. We are increasing our marketing terminal, both as part of our refinery expansion capacity at Guwahati, at Dhuburi, and at a place near Silchar called Panchgram. Plus, we are also increasing our LPG storage capacity at our refinery level. Third, as part of our expansion, we are also creating additional OLEs requirement in terms of our crude oil holding capacity. As far as Oil India is concerned, we are having a two-pronged strategy. One, we are enhancing our little LPG production out of our natural gas that we are producing. We are also enhancing our crude oil tank farm storage capacity as part of our energy resilient infrastructure. We are also creating a railway siding for possible transportation of additional crude from Duliajan to Numaligarh. As part of that, we are also creating additional tank farm. But most importantly, as part of energy security, as an E&P company, we strongly believe that exploration has to be the mainstay as an energy security solution. So
what will that take your crude oil storage and LPG storage to from what levels to?
As far as refinery and Oil India is concerned, those will be incremental. But I would like to...
There's no specific target.
There is no specific target. Those are all our design assumptions.
Because the word is that maybe India will increase 40 plus days of reserves going forward.
Currently, as part of our refinery operations and the SPRs, today we have about 78 days. So as the refinery capacity will grow from 3 million ton to 9 million ton, so it's very natural that we need to create additional facilities in the similar proportionate. But I would draw your attention to something more interesting, that additional capacity to hold inventory is one part. As Oil India Limited being an upstream company, we will be focusing more on production and we will be focusing more on exploration, which is what is our mainstay. So you know that currently we are doing exploration in Andaman Nicobar, we are doing exploration in Kerala Konkan Basin, and we are also drilling an appraisal well in KG Basin. We are going to quickly start exploration activities in our Cambe acreage, which we took in OLP 9 bid round. We have already completed 2D and 3D seismic data acquisition in our OLP 9 block in Mahanadi deep water and KG deep water. So we are actually aligning ourselves the forthcoming Sagar Manthan initiative or Sagar Manthan mission of Government of India, where we will actually undertake 4+4 to start with deep and ultra deep water wells in our acreages, which is Mahanadi and KG Basin. Plus, we intend to drill about 100 wells, which will be a mix of rank exploration, near field exploration, appraisal and development wells in our primarily PEL and PML areas. Thank you.
Thank you so much for speaking to us.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the centre is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
With each passing day, the probe teams are unearthing new clues in the Ram Mandir Chanda Chori case. All accused have been grilled by the police again inside Ayodhya jail. Each accused questioned separately after court nod. Investigators have recovered key evidence and the accused are being confronted with the same. India Today inside scoop reveals that in a major breakthrough, Ayodhya police with the help of the cyber cell has successfully recovered deleted data from the phones of the accused. This data is said to be more than 1 year old. Chats recovered from this data reveal the theft of over 2 crore rupees from the donations. Adding to the drama, Anukalp in the chat had accused Love Kush of stealing his share of the loot. Now, the bank transactions of all the accused are under scanner.
After 13 hours of police custody remand of main accused Avinash Shukla, today is the turn of 5 other accused in donation theft to be grilled. Today, Ayodhya police is questioning 5 other accused, including Ramashankar Yadav alias. Chat data backup revealed a main thing that during 1 year, more than 2 crores of rupees was stolen.
Shri Ram Janmabhoomi Tirth Kshetra Trust is holding a crucial meeting on Monday with the agenda to decide on the resignation submitted by General Secretary Champat Roy and Trustee Anil Mishra. Opposition tirade continues to intensify with the claims that crores have been stolen from the donation money. Opposition has held the BJP, VHP and the RSS responsible for shattering the belief of Ram Bhakts. On the other hand, the VHP sought proof from opposition for its claim that hundreds of crores were looted. The saffron body urged police to question Congress and SP leaders over their sensational claims.
एक ने अनेकों बार कह चुके हैं कि ट्रस्ट को भंग कर दिया जाए और SIT जांच से पहले इसको भंग करना चाहिए था और जो भी ट्रस्ट में लोग हैं उनको मंदिर से बाहर रख करके तब कोई जांच शुरू होती।
प्रोफेसर रामगोपाल यादव जी ने कहा कि 20,000 करोड़ से ज़्यादा का घपला है। हमारी तो जानकारी में इतने पैसे वहाँ आए ही नहीं। प्रियंका जी ने कहा है हजारों करोड़ का चढ़ावा आता है, हमारी जानकारी में नहीं है।
As the political mudslinging continues, investigators are inching closer to the truth. The big fish be in the net next? With Santosh Sharma, Bureau Report, India Today.
Mumbai is under siege. Relentless rain has brought India's financial capital to its knees. Flooded roads, stalled trains, flight disruptions, and now a trail of deaths. From Andheri to the Worli ceiling, the maximum city is drowning. Major arterial roads are completely locked up, and airlines like Indigo, Akasa and SpiceJet are issuing frantic travel advisories about flight delays. The IMD's red alert stays slapped on Mumbai until July 6th warning of torrential rains. From Andheri subway, which is closed sporadically, to Worli, King's Circle, Bandra, Vile-Parle and Vasai, streets have turned into rivers, vehicles have been stranded, and daily life has come to a grinding halt.
Around Andheri, the water levels are rising. Now, it's been said that around 80% of this month's average rainfall has already completed in 4 months. That has been the heavy downpour, and hence citizens have been advised that be careful while they are out.
But beyond the waterlogged roads lies a far deadlier story. An 18-year-old boy was killed after a tree branch snapped and struck him while he was riding through Are Colony in Goregaon East during heavy rain. He was rushed to a nearby hospital but succumbed to his injuries, adding to the growing list of rain-related deaths in the city. Hours earlier, a 63-year-old man in Kurla, Yunus, fell prey to monsoon fatality when a massive tree crushed his shop.
ये पेड़ के एक बीच की फांदी थी जो कि बहुत ही मजबूत फांदी थी और अंकल जी जो क्या नाम था उनका यूनिस भाई, वो बाइक से आए और दुकान का सामान रखने के लिए सेटर वेटर वो बाइक से उतर ही रहे थे और फांदी डायरेक्ट उनके मुंह पे जाके गिरी और मुंह पे गिरने के वजह से वो डायरेक्ट नीचे जमीन पे गिर गए।
हमारे यहाँ के नगर सेवक आरोग्य समिति के अध्यक्ष उन्होंने 2 बार प्रशासन को पत्र भी दिया था कि ये डेंजर जोन में लग रहा है पेड़, लेकिन प्रशासन ने उसके ऊपर क्यों नहीं कार्रवाई की। ये इंक्वायरी का पार्ट है, इसके ऊपर हम लोग पूरी इंक्वायरी लगा रहे हैं। लेकिन फिलहाल हम उनकी फैमिली के साथ यहाँ पे खड़े हैं। मैं आपके माध्यम से कहना चाहती हूँ कि उनको 5 लाख का जो अर्थसहाय है वो भी मैं यहाँ पे डिक्लेयर कर रही हूँ।
It comes just days after 11-year-old Vihan Srivastava was killed when an old, allegedly inspected and a healthy tree collapsed right onto his moving bus in Chembur. And the absolute breaking point, in Sakinaka, a 55-year-old man fell to his death into an open manhole which was being cleaned then. From death century collapse to dying in manhole, the price of administrative apathy is being paid in Mumbaikar blood. The red alert will eventually pass, but the scars of this preventable tragedy will remain. With Mustafa Sheikh in Mumbai, Bureau Report, India Today. As lakhs of mourners poured onto the streets of Tehran to pay their final respects to Iran's supreme leader Ayatollah Ali Khamenei, US President Donald Trump has reignited the war of words, this time with a blistering attack on Iran. Donald Trump has claimed that the United States could have eliminated Iran's entire leadership at Khamenei's funeral in one shot. But then he chose not to.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
Trump also said he had been working on the possible removal of sanctions before Tehran's response forced him to stop. Iran hit back sharply, accusing Trump of displaying neither civilization nor honor, and calling his remarks a violation of diplomatic norms. The exchange comes amid massive funeral processions in Iran. The outpouring of grief is being projected as a show of national unity and defiance, even as tensions between Washington and Tehran remain dangerously high after the recent conflict.
I came to support my country. Yes, I came from a long, long way to come to say we are all united and we are a people. We never leave our country, our civilization. It's not a civilization for forefathers, and nobody can destroy it.
The killing of Iran's supreme leader has transformed Donald Trump into the face of America's military campaign in the eyes of Tehran. Iran holds Trump politically responsible for the strikes that eliminated its top leader. It has accused Washington of pursuing regime change through military force.
We knocked the hell out of Iran. They're dying to settle.
Donald Trump's latest remarks have only intensified the anger. For Tehran's leadership and masses supporting it, the message is clear. Khamenei may be gone after the massive bombing raids, but the confrontation with America and Israel is far from over. With Geeta Mohan in Tehran, Bureau Report, India Today.
While Iran is mourning loss of their former supreme leader Ali Khamenei, the United States of America is celebrating its 250th Independence Day. During a speech near the iconic Mount Rushmore, Trump took potshots at Tehran. In his trademark style, Trump claimed that the US knocked the hell out of Iran and they gave them a week off for the funeral.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
On February 28th, Ayatollah Ali Khamenei was killed in US-Israeli strikes, which triggered a full-blown war in the Gulf. The conflict went on for 108 days until Trump and Pezeshkian finally signed a memorandum of understanding on June 17. But fragile peace continues to prevail over West Asia. Currently, a ceasefire is in place and hostilities have been paused. key global oil route, Strait of Hormuz, has been reopened and a direct line of communication has been established between the US and Iran. A 60-day negotiation window underway and technical talks having begun. In fact, both nations recently concluded a round of indirect technical talks in Doha. Qatari Emir Sheikh Tamim bin Hamad Al Thani met US Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Iran's Deputy Foreign Minister Kazem Garibabadi headed the country's technical team in the talks. According to reports, both sides have decided to establish a communication channel to resolve all disputes, and then even discussed release of $6 billion in frozen Iranian funds. Both the sides have now agreed to continue talks after conclusion of week-long funeral procession of Ayatollah Ali Khamenei. But as Trump's belligerence and Tehran's bluster frequently prove, it's a fragile peace which can any day deteriorate into a full-blown conflict once again, to potentially devastating consequences. Bureau Report, India Today.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us.
Thank you.
Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out, and we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through this CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for 2 ways. One, providing a solution to the municipal solid waste, and 2, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders, BPCL, so on and so forth as well.
Look, Numaligarh refinery currently is, we are taking it from 3 million ton to 9 million ton. The expansion is on track. The crude in happened on 31st December 2025. The mother units are currently under commissioning, the CDU and VDU. And our idea is that we are already prepared ourselves with the local domestic crude as part of our commissioning process. Our idea is that early 2027, we will have the complete 9 million metric ton commissioned. As far as our 9 million ton capacity is concerned, we foresee that we will be able to source about 3.5 million metric ton from domestic crude, that is Assam Fields of Oil India Limited and ONGC. And we will import about 5.5 to 6 million metric ton, for which we are got a collaborative framework with BPCL for our crude oil sourcing. And we are building a pipeline which is about 1635 to 1640 kilometers from Paradip coast to Numaligarh, where we will be utilizing the offshore oil terminals of IOCL to source the crude oil. We will have an interim tank farm at Paradip, and then the pipeline will be used to pump the crude oil from Paradip to Numaligarh. That we intend to commission by October, November this year.
So one final question. The government is, after the West Asia crisis, has become very keen on improving our energy security, the country's energy security, and there are talks of increasing our reserves as well. Any role that Oil India is playing in order to expand our SPR to over 9 to 10 days going forward?
Look, to our understanding, it is not just SPR. It is actually inventorying carrying capacity of the country with respect to crude oil and product. As far as Numaligarh is concerned, I will talk about, that's the downstream part of Oil India Limited. We are increasing our marketing terminal, both as part of our refinery expansion capacity at Guwahati, at Dhuburi, and at a place near Silchar called Panchgram. Plus, we are also increasing our LPG storage capacity at our refinery level. Third, as part of our expansion, we are also creating additional OLES requirement in terms of our crude oil holding capacity. As far as Oil India is concerned, we are having a two-pronged strategy. One, we are enhancing our little LPG production out of our natural gas that we are producing. We are also enhancing our crude oil tank from Duliajan to Numaligarh. As part of that, we are also creating additional tank farm. But most importantly, as part of energy security, as an E&P company, we strongly believe that exploration has to be the mainstay as an energy security solution.
So what will that take your crude oil storage and LPG storage to, from what levels to?
As far as refinery and Oil India is concerned, those will be incremental. But I would like to...
There's no specific target.
There is no specific target. Those are all our design assumptions.
Because the word is that maybe India will increase 40 plus days of reserves going forward.
Currently, as part of our refinery operations and the SPRs, today we have about 78 days. So as the refinery capacity will grow from 3 million ton to 9 million ton, so it's very natural that we need to create additional facilities in the similar proportionate. But I would draw your attention to something more interesting, that additional capacity to hold inventory is one part. As Oil India Limited being an upstream company, we will be focusing more on production and we will be focusing more on exploration, which is what is our mainstay. So you know that currently we are doing exploration in Andaman Nicobar, we are doing exploration in Kerala Konkan Basin, and we are also drilling an appraisal well in KG Basin. We are going to quickly start exploration activities in our Cambe acreage, which we took in OLP 9 bid round. We have already completed 2D and 3D seismic data acquisition in our OLP 9 block in Mahanadi Deepwater and KG Deepwater. So we are actually aligning ourselves the forthcoming Sagar Manthan initiative or Sagar Manthan mission of Government of India, where we will actually undertake 4+4 to start with deep and ultra deep water wells in our acreages, which is Mahanadi and KG basin. Plus, we intend to drill about 100 wells, which will be a mix of rank exploration, near field exploration, appraisal and development wells in our primarily PEL and PML areas. Thank you.
Thank you so much for speaking to us.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the centre is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
With each passing day, the probe teams are unearthing new clues in the Ram Mandir Chanda Chori case. All accused have been grilled by the police again inside Ayodhya jail. Each accused questioned separately after court nod. Investigators have recovered key evidence and the accused are being confronted with the same. India Today Inside Scoop reveals that in a major breakthrough, Ayodhya police, with the help of the cyber cell, has successfully recovered deleted data from the phones of the accused. This data is said to be more than 1 year old. Chats recovered from this data reveal the theft of over 2 crore rupees from the donations. Adding to the drama, Anukalp in the chat had accused Love Kush of stealing his share of the loot. Now, the bank transactions of all the accused are under scanner.
After 13 hours of police custody remand of main accused Avinash Shukla, today is the turn of 5 other accused in donation theft to be grilled. Today, Ayodhya police is questioning 5 other accused, including Ramashankar Yadav alias. Chat data backup revealed a main thing that during 1 year, more than 2 crores of rupees was stolen.
Shri Ram Janmabhoomi Tirth Kshetra Trust is holding a crucial meeting on Monday with the agenda to decide on the resignation submitted by General Secretary Champath Roy and Trustee Anil Mishra. Opposition tirade continues to intensify with the claims that crores have been stolen from the donation money. Opposition has held the BJP, VHP and the RSS responsible for shattering the belief of Ram Bhakts. On the other hand, the VHP sought proof from opposition for its claim that hundreds of crores were looted. The saffron body urged police to question Congress and SP leaders over their sensational claims.
एक नहीं अनेकों बार कह चुके हैं कि ट्रस्ट को भंग कर दिया जाए और एसआईटी जांच से पहले इसको भंग करना चाहिए था और जो भी ट्रस्ट में लोग हैं उनको मंदिर से बाहर रख करके तब कोई जांच शुरू होती।
प्रोफेसर रामगोपाल यादव जी ने कहा कि 20,000 करोड़ से ज़्यादा का घपला है। हमारी तो जानकारी में इतने पैसे वहाँ आए ही नहीं। प्रियंका जी ने कहा है हजारों करोड़ का चढ़ावा आता है, हमारी जानकारी में नहीं है।
As the political mudslinging continues, investigators are inching closer to the truth. The big fish be in the net next? With Santosh Sharma, Bureau Report, India Today.
Mumbai is under siege. Relentless rain has brought India's financial capital to its knees. Flooded roads, stalled trains, flight disruptions, and now a trail of deaths. From Andheri to the Worli ceiling, the maximum city is drowning. Major arterial roads are completely locked up, and airlines like Indigo, Akasa and SpiceJet are issuing frantic travel advisories about flight delays. The IMD's red alert stays slapped on Mumbai until July 6th warning of torrential rains. From Andheri subway, which is closed sporadically, to Worli, King's Circle, Bandra, Vile Parle and Vasai, streets have turned into rivers, vehicles have been stranded, and daily life has come to a grinding halt.
Around Andheri, the water levels are rising. Now, it's been said that around 80% of this month's average rainfall has already completed in 4 months. That has been the heavy downpour, and hence it is advised that be careful while they are out.
But beyond the waterlogged roads lies a far deadlier story. An 18-year-old boy was killed after a tree branch snapped and struck him while he was riding through Are Colony in Goregaon East during heavy rain. He was rushed to a nearby hospital but succumbed to his injuries, adding to the growing list of rain-related deaths in the city. Hours earlier, a 63-year-old man in Kurla, Yunus, fell prey to monsoon fatality when a massive tree crushed his shop.
ये पेड़ के एक बीच की फांदी थी जो कि बहुत ही मजबूत फांदी थी और अंकल जी जो क्या नाम था उनका यूनिस भाई वो बाइक से आए और दुकान का सामान रखने के लिए सेटर वेटर वो बाइक से उतर ही रहे थे और फांदी डायरेक्ट उनके मुंह पे जाके गिरी और मुंह पे गिरने के वजह से वो डायरेक्ट नीचे जमीन पे गिर गए।
हमारे यहाँ के नगर सेवक आरोग्य समिति के अध्यक्ष उन्होंने 2 बार प्रशासन को पत्र भी दिया था कि ये डेंजर जोन में लग रहा है पेड़, लेकिन प्रशासन ने उसके ऊपर क्यों नहीं कार्रवाई की, ये इंक्वायरी का पार्ट है, इसके ऊपर हम लोग पूरी इंक्वायरी लगा रहे हैं। लेकिन फिलहाल हम उनकी फैमिली के साथ यहाँ पे खड़े हैं। मैं आपके माध्यम से कहना चाहती हूँ कि उनको 5 लाख का जो अर्थसहाय है वो भी मैं यहाँ पे डिक्लेयर कर रही हूँ।
It comes just days after 11-year-old Vihan Srivastava was killed when an old, allegedly inspected and a healthy tree collapsed right onto his moving bus in Chembur. And the absolute breaking point, in Sakinaka, a 55-year-old man fell to his death into an open manhole which was being cleaned then. From deaths in tree collapse to dying in manhole, the price of administrative apathy is being paid in Mumbaikar blood. The red alert will eventually pass, but the scars of this preventable tragedy will remain. With Mustafa Sheikh in Mumbai, Bureau Report, India Today. As lakhs of mourners poured onto the streets of Tehran to pay their final respects to Iran's supreme leader Ayatollah Ali Khamenei, US President Donald Trump has reignited the war of words, this time with a blistering attack on Iran. Donald Trump has claimed that the United States could have eliminated Iran's entire leadership at Khamenei's funeral in one shot. But then he chose not to.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
Trump also said he had been working on the possible removal of sanctions before Tehran's response forced him to stop. Iran hit back sharply, accusing Trump of displaying neither civilization nor honor and calling his remarks a violation of diplomatic norms. The exchange comes amid massive funeral processions in Iran. The outpouring of grief is being projected as a show of national unity and defiance, even as tensions between Washington and Tehran remain dangerously high after the recent conflict.
I came to support my country. Yes, I came from a long, long way to come to say we are all united and we are a people. We never leave our country, our civilization. It's not a civilization for forefathers and nobody can destroy it.
The killing of Iran's supreme leader has transformed Donald Trump into the face of America's military campaign in the eyes of Tehran. Iran holds Trump politically responsible for the strikes that eliminated its top leader. It has accused Washington of pursuing regime change through military force.
We knocked the hell out of Iran. They're dying to settle.
Donald Trump's latest remarks have only intensified the anger. For Tehran's leadership and masses supporting it, the message is clear. Khamenei may be gone after the massive bombing raids, but the confrontation with America and Israel is far from over. With Geeta Mohan in Tehran, Bureau Report, India Today.
While Iran is mourning loss of their former supreme leader Ali Khamenei, the United States of America is celebrating its 250th Independence Day. During a speech near the iconic Mount Rushmore, Trump took potshots at Tehran. In his trademark style, Trump claimed that the US knocked the hell out of Iran and they gave them a week off for the funeral.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
On February 28th, Ayatollah Ali Khamenei was killed in US-Israeli strikes, which triggered a full-blown war in the Gulf. The conflict went on for 108 days until Trump and Pezeshkian finally signed a memorandum of understanding on June 17. But fragile peace continues to prevail over West Asia. Currently, a ceasefire is in place and hostilities have been paused. Key global oil route Strait of Hormuz has been reopened and a direct line of communication has been established between the US and Iran. A 60-day negotiation window underway and technical talks having begun. In fact, both nations recently concluded a round of indirect technical talks in Doha. Qatari Emir Sheikh Tamim bin Hamad Al Thani met US Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Iran's Deputy Foreign Minister Kazem Garibabadi headed the country's technical team in the talks. According to reports, both sides have decided to establish a communication channel to resolve all disputes, and then even discussed release of $6 billion in frozen Iranian funds. Both the sides have now agreed to continue talks after conclusion of week-long funeral procession of Ayatollah Ali Khamenei. But as Trump's belligerence and Tehran's bluster frequently prove, it's a fragile peace which can any day deteriorate into a full-blown conflict once again, to potentially devastating consequences. Bureau Report, India Today.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us.
Thank you.
Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out. And we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through the CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for 2 ways. One, providing a solution to the municipal solid waste, and 2, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders.
Hello and a warm welcome back on Business Today Television. Ladies and gentlemen, we continue with our effort to get you to understand what the finest brains on Dalal Street are doing to clients' portfolios at this point of time. How are they deploying fresh capital and where exactly are earnings growth as well as the possible upside in the markets are accompanying. It gives me great pleasure to welcome Ms. Aparna Shankar. She is the Chief Investment Officer for the equity business at the Wealth Company Asset Management Company. While Wealth Company AMC is a new kid on the block, but Ms. Shankar is an old hand at investing. She spent 17 years at SBI Mutual Fund. Before that, she was working with Birla Global and Sahara Mutual Fund. A very warm welcome, ma'am, and it's always wonderful to host you. Are you breathing a little easier these days, given that the tenor of the market has changed and the underlying granularity seems to be improving for bulls? How do you feel at this moment?
Oh, it's been wonderful. First, wonderful because then we have, in Mumbai, we have good spell of monsoon. That's, we have, all the moods are up. Plus, then, markets are not correcting too much. That is another, good respite for us. In fact, post-March, we haven't seen, huge correction. I think the last correction what we saw when at the outbreak of the West Asian war, and post that, Indian markets have been really very resilient. I have always believed in that, the strength of the Indian markets, that it has been a very resilient. And for us, leading indicator is, kind of what is the retail investor is doing, what kind of SIP inflows we see. And that has laid a strong foundation for us. So first of all, Bhatnagarjan, thank you so much for having this discussion again. And well, company mutual fund अभी तो young kid नहीं रहा, काफी सारे बच्चे उनके बाद मतलब आ गए हैं. And you rightly pointed out, I have been in the industry for almost 3 decades plus. Unit Trust of India was my first organization, and sorry.
Okay. So let's take this discussion forward as to what the wealth company AMC is doing in terms of deploying fresh capital. You have 10 funds. The largest of them is the liquid one. The second largest is the flexi cap product. And of course, to complete your portfolio, I'm sure a lot of new launches are there in the pipeline. I'm just wondering how are fresh deployments happening in the flexi cap fund, which is AUM of about 231 crores, and it's 8 months into existence.
Yes, that's the oldest fund we have. FlexiCap was one of the funds when we launched 4 products on the same day. A very unique thing. No other AMC had done that, kind of launches at so many launches on one single day. And FlexiCap, as its category, the attribute of that category is that fund manager has a discretion to navigate between different market caps, like large cap, mid cap, and small cap, depending upon the opportunities the market is showing us. In fact, at the initial deployment of the funds, we were almost around 23-24% into small cap. We took it to almost around 31%, and then we started trimming our position, booking some profits, and we switched that into large and mid cap. But now also, currently also we are looking at, there is lot of potential in small cap category, and we can really go bottom up here, which is what we strongly follow. In fact, it's a fusion of top down and bottom up investment philosophy at the Wealth Company Mutual Fund, and we are looking at small cap because the universe is also very huge, 5,000 plus companies, and we being selective, we have a lot of potential to identify new businesses, potentially, great businesses, great valuations, and that's how we are going ahead.
Right. So let's look at the FlexiCap fund, the top 1, 2, 3, 4, 5. Actually, out of top 12, 10 are large caps and 3 are, super large mid caps. Be that as it may, how are you looking forward to Q1? What are the points of concerns that your research team has? Where are they deploying their maximum firepower? Which sector catches your attention?
So, if you look at, India's GDP also, 2 segments like services and products. So these are the 2 segments. We believe that there is a huge potential for, keep contributing a lot to the GDP of the nation. And when I said, we have this approach of a fusion of top down and bottom up, we are seeing that these are the 2 segments which are going to help us to identify many new businesses. And when you go bottom up, then there are very different segments which are emerging, like capital goods have been manufacturing. When you talk about manufacturing, I think everything falls into many of the sectors fall into the manufacturing. So even if it is a EMS, even it is a if you say frugal engineering or data center, all these segments finally lead to manufacturing. And we believe that there are many subsectors which we talk about, like EMS or data center or power generation, power transmission, defense. I mean, not only defense, the major businesses, but even the defense ancillaries, like the way the auto ancillary has expanded. I mean, so many companies are fall into this auto ancillary segment. There is an emerging segment which is a defense ancillary, and lot many businesses will are coming up in that segment, and lot many will come. So these are, I think, 4 or 5 major themes what we look at, which look very promising considering next 3, 4, 5 years horizon.
Okay. Ma'am, when you look at the overall portfolio of the wealth company, what are the sectors that you are avoiding at this point of time? What is the view that you have on IT? This is a space which is now trading at 15-year low valuations, both on price to equity as also price to book. A view that you may want to offer to our viewers?
Yeah. So for us, IT has become a very tactical play. It's not a core holding, and I tell you why. If you look at last few years, not even these few months, not even the time from the time when the AI threat has started emerging, but even if you look at last 4 or 5 years, what most important factor, or maybe many of us would not have spoken very loudly about it, is that the kind of ROEs these companies has been making. So there has been a sharp decline in the kind of ROEs these companies have been making. I think many of us would have missed that point of thing, and it was leading to the derating of the premium valuations. I think these threats are maybe transitionary, but long-term trend, if you look at, these companies had been facing some margin pressures, some business pressures, and then the ROEs and ROCs and the kind of money and cash flows these companies were making were trending down, and it was obvious that the PE derating would happen. Because of AI, it has become very fast. It got accelerated, and now we are seeing that these companies at, as you rightly mentioned, at a 15 years low valuations. But as a fund manager, my dilemma is that are there enough triggers for these companies to move off from here? Are there enough triggers for this company to keep generating better ROEs and ROCs by virtue of which they were commanding this kind of premium valuations? I am not finding those clear answers, and unless and until we find those clear answers, this sector may not be a core holding sector. There could be tactical some plays, sometime you see that, okay, this has fallen to the 15 years low, it has close to some technical factors, and then there would be some bounce up, but that's it. I mean, I would like to wait for at least 2-3 quarters to have a decisive allocation to this sector.
Fair point. Basically, a popular trade is where you make less money, and the more uncertainty you buy, of course you carry a higher risk, but that also involves a better return, be that as it may.
No, but with those uncertainties, there has to be some pinch of certainty. Maybe after some time, or maybe after a few quarters, that trend has to reverse. I'm really grappling that. I'm not finding that kind of the thing happening in this sector, at least.
No worries. Let's look at the other parts of the segment. Banks, of course, are heavily weighted in across your portfolios, whether it's a flexi cap fund or the multi-asset fund. What is the view within a wealth company about the valuations at which large private sector banks are available at this point of time? Are they offering maybe sustained growth over the next 2, 3, 5 years compared with the rally that we've seen in PSU banks?
Yes. I think exactly this is what is happening, which is not happening in IT sector, which is happening in the private sector banks. So there is, there is a visible, visible signs of that these banks would, have a. Of course, this sector will have a better times ahead. The growth will be much better. I think we are maybe the street is around 15, 16. We anticipate maybe it could be 1 or 2% higher than that also, maybe 17, 18%. And it's, the private sector, leading private sector banks are really at a very huge discount, or, they should catch up. And that's where the main reversion trade is happening.
Okay, perfect. Aparna ji, rupee has somehow provided stability to the market over the last 15 trading sessions. We see some sanity within the FII numbers as well. How are you looking at the currency from the standpoint of an investment manager? Is it something which is providing comfort at levels?
We are not of the view that it's going to be, appreciating. What should I say? Maybe it's rupee is not going to appreciate a lot from here. Maybe it will keep consolidating here, is what we believe. Not even much of a depreciation. And if I has always had sanity, I feel they they are great asset allocators, and they will come back to us only when India starts growing again. Is at least we in-house, that strong view we have in-house. So it's not going to happen in a hurry maybe, but intermittently there would be, at least the outflow will not be huge. And that itself is a very respiting, factor for us.
Aparna ji, what will make India going? I am taking a question from your last answer. While a large percentage of FIIs have the global market as their playground, Indians typically are inward looking, and while some have the option to invest overseas, लेकिन बहुत लोग दलाल स्ट्रीट पर ही निर्भर हैं. What are the 3 points you think will make Dalal Street going?
So first of all, we intermittently talk about this, but maybe sometimes we lose our confidence in this. Major factor is about demographic dividend our country has. For at least next 20-30 years, that could be a major factor for us to leverage upon, because there are many major nations which are into, the working population is aging, while we will still keep contributing and adding to our working population. What does it mean for us and for other countries is that we are going to continue to be a very highly consuming country, be it again products or services. I want to divide it broadly, everything into products and services, and all those products and services we will be consuming a lot. Either we'll produce them in-house or in our country, or many countries have to keep supporting us, and that means the inflows will keep coming. And since if you look at it as a big market, I think, and different nations are, service providers or product providers to our country, there will continue to be an interest, and will keep growing. As we have been growing, maybe a little better than this. These are, not the problems what we are facing are not because of the difficulties in-house in domestic environment, but it's all because of the kind of coupling we have with in the global environment, and we are going through that transitionary phase, and that's how we are getting affected. Crude has been a big factor to which has impacted a lot. But I think since it has already started easing, we will again focus back on how we, government will also again focus back on the how the domestic growth will happen. And that is the time I think even the FIs and will start coming back to us. And I mean, they're not going to buy us cheap. देखिए कोई अच्छी चीज सस्ती नहीं मिलनी चाहिए और नहीं मिलेगी. I think that's the truth.
Okay, fair point. अच्छी चीज़ कभी भी सस्ती नहीं होती और we've seen that happen over the last 35 years in the market that for something which is good, it's cheaper relative only to itself, not to the worldwide market. So be that as it may. Ma'am, a view that you might have on defense, I see one major defense stock in the top 5 as far as your portfolio is concerned in the flexi cap space. How are you treating this segment?
Defense is the segment, I think, which we cannot depend upon the outside, whatever happens outside India. I think whatever happens, whatever that technology, kind of getting the technology, indigenizing the technology will happen in India. And as I said, this is the segment which is going to grow, defense ancillaries. It's not maybe few years back when we used to talk about defense, we used to talk majorly about only one company. That is not the case today. There are many companies which have got listed where the government, shareholding has been, there is public shareholding also in those companies. But there are, the way the auto ancillary segment has grown, there is a defense ancillary segment which is growing, which is going to start fitting into all this, mainstream defense segment. So I think a lot of things will happen there, and even the major companies will continue to depend upon the internal expertise rather than, because it's all about security. I mean, the environment which has helped us, everybody, each and every nation to understand is that we need to have these capabilities in-house, not that we can depend, anybody can hold us, for a ransom. I mean, somebody can tell, okay, we are not going to give you this. So what happens? So I think this is going to be a very rewarding journey. Maybe next 3 to 5 years, there will be a lot of things, lot of companies will emerge and a lot of companies will become very big in this segment. And that's why we are very bullish on this segment.
Okay. Ma'am, there are lots of strong offshoots of strength that are coming into the pharma space, yet pharma is more or less absent in many of the large portfolios that you have. Any reason why the Wealth AMC continues to avoid pharma? For instance, in the top 20 stocks in your largest fund, there is absolutely no representation of the pharma company or even, a hospital stock. This is a rally that you've missed.
No, we haven't missed that rally. But, as I mentioned, we have 13 products in last 9 months. And we have been of a view that the portfolio should not have a huge overlap. See, SEBI has started talking about it now, but even my earlier organization, I used to follow this strategy, is that my portfolios should not look alike. They should differentiate based on the strategy. So we have a lot of stocks in, lot of exposure in pharma, in small cap and large and mid cap. And just to be, we have, of course, some stocks in, some exposure in flexi cap also. Maybe you are looking at top holdings. Maybe that's why it may not be appearing. But do we have exposure in pharma sector in flexi cap also, and across the funds we have. But there is also a thought that what we have, what we like, should not happen that we like something and we have it across all the funds. That is not the strategy we are following. We want to have some unique ideas in every fund, and maybe that is the that's why you are not seeing lot of exposure to pharma in flexi cap. But do we have We have exposure to hospitals, we have exposure to mid and small cap pharma also, and even large caps.
Okay, fair point. A couple of last questions, ma'am. Your view on the interest rate cycle, where do we stand at this point of time within India? The rates differential between India and the US has shrunk considerably. That adds to a lot of our problems.
Correct. I agree with you, but we are of the view that again, this rate revision, upwards revision is not going to happen in hurry. There is an anticipation the rates will, improve or, increase from here. But I think RBI is also looking at those data points. I mean, crude would have been, major decisive factor for them also to decide about what is the kind of rate trajectory we should have. With that easing, I feel the increasing the rate, would have got delayed for some more time.
No, fair point. And the last thought is on this FCNR B deposit. The reason why I ask this question, of course, is that you have your roots in the largest bank, and that over a long term has provided a lot of support globally to the FCNR B plans in 2013 as well. How are you assessing this RBI move? How much do you think should come in? Will that be helpful for the rupee and therefore the market?
It's a wonderful move. It's a very positive move. I think hats off to RBI for getting their actions together. This is going to contribute a lot. I am not able to give you any exact number because I think, but it's going to be very helpful for the rupee as that's what we are seeing. All these factors, all these initiatives are actually taking away that pressure of firefighting, I think. And now the government and everyone can focus on the domestic growth. And that's why I'm, becoming more positive going forward rather than being negative and being worried about the valuations.
Right. Aparna ji, on this note, we'll pause it. As always, it's very interesting to talk to a person heading a new AMC, but having such deep roots into investment. It's always a pleasure to host you, ma'am. Have a nice day.
My pleasure. My pleasure. Thank you so much. Take care.
That, ladies and gentlemen, was Ms. Aparna Shankar. She's the CIO of a newly minted wealth management company called the Wealth Company AMC. Thank you for watching. Stay glued on Business Today Television.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the centre is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running. Bureau Report, India Today.
With each passing day, the probe teams are unearthing new clues in the Ram Mandir Chanda Chori case. All accused have been grilled by the police again inside Ayodhya jail. Each accused questioned separately after court nod. Investigators have recovered key evidence and the accused are being confronted with the same. India Today Inside Scoop reveals that in a major breakthrough, Ayodhya police, with the help of the cyber cell, has successfully recovered deleted data from the phones of the accused. This data is said to be more than 1 year old. Chats recovered from this data reveal the theft of over 2 crore rupees from the donations. Adding to the drama, Anukalp in the chat had accused Love Kush of stealing his share of the loot. Now, the bank transactions of all the accused are under scanner.
After 13 hours of police custody remand of main accused Avinash Shukla, today is the turn of 5 other accused in donation theft to be grilled. Today, Ayodhya police is questioning 5 other accused, including Ramashankar Yadav alias. Chat data backup revealed a main thing that during 1 year, more than 2 crores of rupees was stolen.
Shri Ram Janmabhoomi Tirth Kshetra Trust is holding a crucial meeting on Monday with the agenda to decide on the resignation submitted by General Secretary Champat Roy and Trustee Anil Mishra. Opposition tirade continues to intensify with the claims that crores have been stolen from the donation money. Opposition has held the BJP, VHP and the RSS responsible for shattering the belief of Ram Bhakts. On the other hand, the VHP sought proof from opposition for its claim that hundreds of crores were looted. The saffron body urged police to question Congress and SP leaders over their sensational claims.
एक ने अनेकों बार कह चुके हैं कि ट्रस्ट को भंग कर दिया जाए और एसआईटी जांच से पहले इसको भंग करना चाहिए था और जो भी ट्रस्ट में लोग हैं उनको मंदिर से बाहर रख करके तब कोई जांच शुरू होती।
प्रोफेसर रामगोपाल यादव जी ने कहा कि 20,000 करोड़ से ज़्यादा का घपला है। हमारी तो जानकारी में इतने पैसे वहाँ आए ही नहीं। प्रियंका जी ने कहा है हजारों करोड़ का चढ़ावा आता है, हमारी जानकारी में नहीं है।
As the political mudslinging continues, investigators are inching closer to the truth. The big fish be in the net next? With Santosh Sharma, Bureau Report, India Today.
Mumbai is under siege. Relentless rain has brought India's financial capital to its knees. Flooded roads, stalled trains, flight disruptions, and now a trail of deaths. From Andheri to the Worli ceiling, the maximum city is drowning. Major arterial roads are completely locked up, and airlines like Indigo, Akasa and SpiceJet are issuing frantic travel advisories about flight delays. The IMD's red alert stays slapped on Mumbai until July 6th warning of torrential rains. From Andheri subway, which is closed sporadically, to Worli, King's Circle, Bandra, Ville Parle and Vasai, streets have turned into rivers, vehicles have been stranded, and daily life has come to a grinding halt.
Around Andheri, the water levels are rising. Now, it's been said that around 80% of this month's average rainfall has already completed in 4 months. That has been the heavy downpour, and hence it is advised that be careful while they are out.
But beyond the waterlogged roads lies a far deadlier story. An 18-year-old boy was killed after a tree branch snapped and struck him while he was riding through Are Colony in Goregaon East during heavy rain. He was rushed to a nearby hospital but succumbed to his injuries, adding to the growing list of rain-related deaths in the city. Hours earlier, a 63-year-old man in Kurla, Yunus, fell prey to monsoon fatality when a massive tree crushed his shop.
ये पेड़ के एक बीच की फांदी थी जो कि बहुत ही मजबूत फांदी थी और अंकल जी जो क्या नाम था उनका यूनिस भाई वो बाइक से आए और दुकान का सामान रखने के लिए सेटर वेटर वो बाइक से उतर ही रहे थे और फांदी डायरेक्ट उनके मुंह पे जाके गिरी और मुंह पे गिरने के वजह से वो डायरेक्ट नीचे जमीन पे गिर गए।
हमारे यहाँ के नगर सेवक आरोग्य समिति के अध्यक्ष उन्होंने 2 बार प्रशासन को पत्र भी दिया था कि ये डेंजर जोन में लग रहा है पेड़, लेकिन प्रशासन ने उसके ऊपर क्यों नहीं कार्रवाई की, ये इंक्वायरी का पार्ट है, इसके ऊपर हम लोग पूरी इंक्वायरी लगा रहे हैं। लेकिन फिलहाल हम उनकी फैमिली के साथ यहाँ पे खड़े हैं। मैं आपके माध्यम से कहना चाहती हूँ कि उनको 5 लाख का जो अर्थसहाय है वो भी मैं यहाँ पे डिक्लेयर कर रही हूँ।
It comes just days after 11-year-old Vihan Srivastava was killed when an old, allegedly inspected and a healthy tree collapsed right onto his moving bus in Chembur. And the absolute breaking point, in Sakinaka, a 55-year-old man fell to his death into an open manhole which was being cleaned then. From death century collapse to dying in manhole, the price of administrative apathy is being paid in Mumbaikar blood. The red alert will eventually pass, but the scars of this preventable tragedy will remain. With Mustafa Sheikh in Mumbai, Bureau Report, India Today. As lakhs of mourners poured onto the streets of Tehran to pay their final respects to Iran's supreme leader Ayatollah Ali Khamenei, US President Donald Trump has reignited the war of words, this time with a blistering attack on Iran. Donald Trump has claimed that the United States could have eliminated Iran's entire leadership at Khamenei's funeral in one shot. But then he chose not to.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
Trump also said he had been working on the possible removal of sanctions before Tehran's response forced him to stop. Iran hit back sharply, accusing Trump of displaying neither civilization nor honor, and calling his remarks a violation of diplomatic norms. The exchange comes amid massive funeral processions in Iran. The outpouring of grief is being projected as a show of national unity and defiance, even as tensions between Washington and Tehran remain dangerously high after the recent conflict.
I came to support my country. Yes, I came from a long, long way to come to say we are all united and we are a people. We never leave our country, our civilization. It's not a civilization for forefathers, and nobody can destroy it.
The killing of Iran's supreme leader has transformed Donald Trump into the face of America's military campaign in the eyes of Tehran. Iran holds Trump politically responsible for the strikes that eliminated its top leader. It has accused Washington of pursuing regime change through military force.
We knocked the hell out of Iran. They're dying to settle.
Donald Trump's latest remarks have only intensified the anger. For Tehran's leadership and masses supporting it, the message is clear. Khamenei may be gone after the massive bombing raids, but the confrontation with America and Israel is far from over. With Geeta Mohan in Tehran, Bureau Report, India Today.
While Iran is mourning loss of their former supreme leader Ali Khamenei, the United States of America is celebrating its 250th Independence Day. During a speech near the iconic Mount Rushmore, Trump took potshots at Tehran. In his trademark style, Trump claimed that the US knocked the hell out of Iran and they gave them a week off for the funeral.
2 world wars, the Cold War, left America's enemies in the depths of history. We beat Venezuela in one day, and we knocked the hell out of Iran. They're dying to settle. They want to settle so badly. We gave them a week off for a funeral because we're nice.
On February 28th, Ayatollah Ali Khamenei was killed in US-Israeli strikes, which triggered a full-blown war in the Gulf. The conflict went on for 108 days until Trump and Pezeshkian finally signed a memorandum of understanding on June 17. But fragile peace continues to prevail over West Asia. Currently, a ceasefire is in place and hostilities have been paused. key global oil route, Strait of Hormuz, has been reopened and a direct line of communication has been established between the US and Iran. A 60-day negotiation window underway and technical talks having begun. In fact, both nations recently concluded a round of indirect technical talks in Doha. Qatari Emir Sheikh Tamim bin Hamad Al Thani met US Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner. Iran's Deputy Foreign Minister Kazem Garibabadi headed the country's technical team in the talks. According to reports, both sides have decided to establish a communication channel to resolve all disputes, and then even discussed release of $6 billion in frozen Iranian funds. Both the sides have now agreed to continue talks after conclusion of week-long funeral procession of Ayatollah Ali Khamenei. But as Trump's belligerence and Tehran's bluster frequently prove, it's a fragile peace which can any day deteriorate into a full-blown conflict once again, to potentially devastating consequences. Bureau Report, India Today.
Chairman, Oil India, Mr. Ranjit Rath is joining us here on Business Today. So many thanks for speaking to us.
Thank you.
Here at the conference, you spoke about the importance of CBG, working with state governments, achieving that 15 MMT target. What's your target in terms of your company, Oil India, and what talks are ongoing as of now?
Look, first of all, thank you very much. We were immensely happy and we are immensely contributed or convinced that compressed biogas is one such renewable molecule which can actually supplement the energy security and more specifically the gas-based economy. As far as Oil India is concerned, our target is to do about 25 such CBG plants pan-India. As we speak, 2 CBG plants, one in Bhubaneswar is in construction, advanced construction. One in Tinsukia is in advanced construction. In 2 places, the letter of award has already gone. We are currently working closely with the government of Assam, government of Odisha, government of Chhattisgarh, and some more other state governments where we are going to announce. The collaborative MOU is getting worked out, and we strongly believe that compressed biogas is not only act as a pivotal role as far as gas-based economy is concerned, this will also be a solution provider to the municipal solid waste that our cities, both metros and tier 1 and tier 2 cities, are to negotiate. In addition, we also see lot of valorization of the agri residue which can happen through this CBG movement. So we are actually looking at both municipal solid waste as a feedstock and also agri residue as a feedstock as part of our CBG initiative.
So I remember at the India Energy Week, the model CBG was being discussed among many stakeholders. Government is keen on sort of ramping up this policy and for OMCs also and other companies as well to adopt this. Talk to us a little bit about what's the mandate there and what kind of capex are you looking at for CBG expansion?
Look, I would believe in a two-way approach. One is a mandate. Now, to me, the mandate is CBG is to be used as a blending obligation, CBG blending obligation, which we know it will be about 5% by 2029. But I would take it more as a societal commitment as an oil and gas company for 2 ways. One, providing a solution to the municipal solid waste, and 2, to supplement the gas-based economy. As far as Oil India is concerned, we have earmarked about 3,000 to 4,000 crore rupees as part of our CBG initiative.
So you also spoke of the Numaligarh refinery and the significance of it being probably one of the largest pipelines as well. Talk to us about where it stands so far and the expansion, your collaboration with some other stakeholders, BPCL, so on and so forth as well.
Look, Numaligarh refinery currently is, we are taking it from 3 million ton to 9 million ton. The expansion is on track. The crude in happened on 31st December 2025. The mother units are currently under commissioning, the CDU and VDU. And our idea is that we are already prepared ourselves with the local domestic crude as part of our commissioning process. Our idea is that early 2027, we will have the complete 9 million metric ton commissioned. As far as our 9 million ton capacity is concerned, we foresee that we will be able to source about 3.5 million metric ton from domestic crude, that is Assam Fields of Oil India Limited and ONGC, and we will import about 5.5 to 6 million metric ton, for which we are got a collaborative framework with BPCL for our crude oil sourcing, and we are building a pipeline which is about 1635 to 1640 kilometers from Paradip coast to Numaligarh, where we will be utilizing the offshore oil terminals of IOCL to source the crude oil. We will have an interim tank farm at Paradip, and then the pipeline will be used to pump the crude oil from Paradip to Numaligarh. That we intend to commission by October, November this year.
So one final question. The government is, after the West Asia crisis, has become very keen on improving our energy security, the country's energy security, and there are talks of increasing our reserves as well. Any role that Oil India is playing in order to expand our SPR to over 9 to 10 days going forward?
Look, to our understanding, it is not just SPR. It is actually inventorying carrying capacity of the country with respect to crude oil and product. As far as Numaligarh is concerned, I will talk about, that's the downstream part of Oil India Limited. We are increasing our marketing terminal, both as part of our refinery expansion capacity at Guwahati, at Dhuburi, and at a place near Silchar called Panchgram. Plus, we are also increasing our LPG storage capacity at our refinery level. Third, as part of our expansion, we are also creating additional OLES requirement in terms of our crude oil holding capacity. As far as Oil India is concerned, we are having a two-pronged strategy. One, we are enhancing our little LPG production out of our natural gas that we are producing. We are also enhancing our crude oil tank farm storage capacity as part of our energy resilient infrastructure. We are also creating a railway siding for possible transportation of additional crude from Duliajan to Numaligarh. As part of that, we are also creating additional tank farm. But most importantly, as part of energy security, as an E&P company, we strongly believe that exploration has to be the mainstay as an energy security solution.
So what will that take your crude oil storage and LPG storage to, from what levels to?
As far as refinery and Oil India is concerned, those will be incremental. But I would like to...
There's no specific target.
There is no specific target. Those are all our design assumptions.
Because the word is that maybe India will increase 40 plus days of reserves going forward.
Currently, as part of our refinery operations and the SPRs, today we have about 78 days. So as the refinery capacity will grow from 3 million ton to 9 million ton, so it's very natural that we need to create additional facilities in the similar proportionate. But I would draw your attention to something more interesting, that additional capacity to hold inventory is one part. As Oil India Limited being an upstream company, we will be focusing more on production and we will be focusing more on exploration, which is what is our mainstay. So you know that currently we are doing exploration in Andaman Nicobar, we are doing exploration in Kerala Konkan Basin, and we are also drilling an appraisal well in KG Basin. We are going to quickly start exploration activities in our Cambe acreage, which we took in OLP 9 bid round. We have already completed 2D and 3D seismic data acquisition in our OLP 9 block in Mahanadi Deepwater and KG Deepwater. So we are actually aligning ourselves the forthcoming Sagar Manthan initiative or Sagar Manthan mission of Government of India, where we will actually undertake 4+4 to start with, deep and ultra deep water wells in our acreages, which is Mahanadi and KG Basin. Plus, we intend to drill about 100 wells, which will be a mix of rank exploration, near field exploration, appraisal and development wells in our primarily PEL and PML areas. Thank you.
Thank you so much for speaking to us.
A world battling an energy shock. But India seemingly insulated from it all. Addressing a public gathering in Rajasthan after inaugurating the state's long-awaited refinery project, Prime Minister Modi said that the war in West Asia pushed the global economy into turmoil, triggering what he called the biggest energy crisis of the 21st century.
पश्चिमी एशिया में युद्ध की वजह से पूरी दुनिया में हाहाकार मचा है। इस युद्ध ने 21वीं सदी के सबसे बड़े ऊर्जा संकट को जन्म दिया। नए भारत की इच्छा शक्ति और भारत के प्रयास इस संकटों पर भारी पड़े हैं।
After war escalated across West Asia, Iran tightened its grip over the Hormuz Strait, disrupting energy markets and sending shockwaves through economies worldwide. Even after the June 18th understanding between US President Donald Trump and Iranian President Masoud Pezeshkian, Tehran has continued to project control over the waterway as a strategic lever. But Prime Minister Modi asserted that India weathered the storm through swift decision-making and coordinated planning.
जो हालात थे उनमें घरेलू गैस सिलेंडर की कीमत 2000 रुपये तक जा सकती थी, लेकिन हमारे यहां अभी भी घरेलू एलपीजी सिलेंडर 950 रुपये से भी कम में दिया जा रहा है। कई देशों में तो डीजल पेट्रोल कोटे के आधार पर मिलने लगा था। डीजल पेट्रोल में 75,000 करोड़ रुपए से ज्यादा का घाटा कंपनियों को उठाना पड़ा और इस घाटे को पूरा करने की जिम्मेदारी सरकारी खजाने से उठाई गई।
The Prime Minister also took aim at the opposition, accusing what he called was certain forces of spreading rumors and fueling panic while the government worked behind the scenes to safeguard the nation's energy security.
जब सार्वजनिक तौर पर कुछ ताकतें अफवाह और आशंका फैलाने में व्यस्त थी, तब किस स्केल पर दिन रात काम हो रहा था, किस तरह स्थिति को संभाला जा रहा था, कभी न कभी इतिहास लिखेगा। ये सब अभूतपूर्व है।
As the world continues to navigate an uncertain global landscape, the center is projecting India's handling of the West Asia energy crisis as proof that strategic preparedness and not panic kept the country's engines running.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Hello and good afternoon, viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Markets begin the new week on a strong note, extending the winning streak for the fourth consecutive session. Sensex has surged by 450 points to now trade at 78,200 mark, while the Nifty has climbed 130 points to trade near 24,400. Autos, real estate, oil and gas and consumer durable stocks are leading the rally amid improving monsoon hopes and renewed foreign investors buying. Amid concerns over oil supply disruptions from the Strait of Hormuz, India's electric and alternative fuel vehicle segment has seen a robust 40% jump in June. Passenger vehicle retail sales have risen nearly 29%, while overall auto sales have climbed 22%. Defence stocks surge after the Defence Acquisition Council has cleared 52,000 crores worth of procurements. The approvals include anti-drone systems, missiles and advanced warfare technology to boost the Army, Navy and the Air Force readiness. Samsung Electronics is reportedly set to raise DRAM memory chip prices by nearly 20% in the July to September quarter. The move comes amid tight global supply and strong AI-driven demand and could eventually make smartphones, laptops and many other consumer electronics more expensive. And in the financial capital, heavy monsoon continues to disrupt normal life and flight operations at Chhatrapati Shivaji Maharaj International Airport. Airlines have also issued fresh advisories, warning of delays, while the IMD has sounded a red alert. Authorities have also advised work from home for private offices as the city braces for extremely heavy rainfall and strong winds. We'll straight away look at how the markets are trading in the last 25 minutes of trade, viewers. Kshitij Mahajan, CEO Complete Circle, is also with us to give us a fresh take on the markets as well. Welcome to you, Kshitij. Good to have you with us. Well, we are seeing some strong momentum built on for 4 last trading sessions on the markets. We're back above 24,400. But a lot of avid traders would want to know that every time we've seen this level in the past couple of months, the markets have retraced and there's been a strong resistance around these levels. What do you think will be the strategy and the trajectory of the markets from here on? Do you think there is enough strength to build on from where we are at?
Well, Sakshi, hi. Thanks for having me. Always a pleasure. So, good last 4 sessions, and I agree with most of the traders and investors what they're looking at. And there's a lot of resistance earlier at 24,000 level, and now at 24,300. So, I think unless and until there'll be short position which are in excess, which are around 90% now, and normally we see this short covering when the expiry is there, and there's now multiple expiries which are there. So you see normal market falling on those days. Good part is after this FCNR, we have seen flows coming in. Somehow currency needs to be stabilized. It's again above 95. So I think once the real impact will start coming in, because there will be a lot of confusion about how the leveraging part of FCNR will work, and globally money comes through leverage only. And now it's been clear, and we'll see some flows coming in. So you'll see market stabilizing to some extent. 3 key parameters which one should keep an eye. One is obviously oil price, which is around 70, which is in a comfort zone. Second is your currency movement, which my sense is because of FCNR, it should stabilize. It will if some soap's been given on the equity side in terms of the taxation to global investors as well as domestic participants. I think you will see currency recovering also, appreciating also. I'm talking about rupee against dollar. And obviously third is US and India FTA. I think these are the key parameters right now which we should keep a close watch on. Obviously oil price has to do with your Middle East escalation. So I think once you have these 3 things, and obviously, after so much of correction and time as well as price correction, still you are a little elevated, and hardly after 20 years, hardly we have gone on nominal GDP, which is less than 10%. But last year was one of the years where we were less than 10%. So if earnings is not there and there's not supporting nominal GDP, nobody would like to come. But seems like this year is going to be good, and first quarter is done. Let's see and wait and watch for the plans.
Yes, actually, that was my next question to you on the upcoming Q1 earnings. What are your big bang expectations? Any preference in terms of sectors that you believe are likely to report stronger set of numbers, and therefore one can have a tactical play?
So my sense, auto should do well. You mentioned in your starting statement only overall growth by 20%. And your EV sales are by 40%. Auto should do well last quarter. One is obviously EMI's burden is less as rate of interest is less in India as we speak. Second, obviously defense as a sector, there's clear-cut push of government should do well. Third is manufacturing as a whole. There is a lot of soaps from government as well as it's one of the PLI key factor. It should do well. And fourth is obviously your BFSI as a sector should do well. I think you will see a better sector on the BFS side in this running quarter, as there will be a lot of benefits come to bank because of FCNR, as it's not a part of your SLR and CRR. They can lend as much, they can procure through FCNR. And at the same time, if markets will recover a bit, then you'll see many of the asset management company and insurance companies also making some dent in terms of positive dent on their earning estimates and numbers. So I think broadly these sectors are what we are looking at.
Okay, let's in fact also look at how the sugar sector is also looking at, of course, the ethanol story blending up, and we are looking at India's sugar industry seeking a hike now in procurement prices for ethanol produced from sugarcane juice and B-heavy molasses, citing rising production costs. The industry now says sugarcane prices have increased by 20% since ethanol prices were last revised 4 years ago, impacting the visibility of ethanol production and the ability of mills to make timely payments to the farmers. Let's in fact listen into a conversation which Business Today Chetan Bhutani had with Deepak Bhalani, the Director General of ISMA, to talk about the same.
Our primary responsibility is the domestic consumption, followed by the ethanol diversion, and only after that, if we have surplus, we'll be able to export. So I believe we are okay as far as the
sugar industry
dynamics are concerned.
As far as the sugar industry goes, sir, how much percentage are you keeping for domestic consumption for retail, and for how much are you diverting to OMCs for ethanol? Only for ISMA I'm asking this.
No, this year, if you talk about 25-26, which is the current year, so out of the total gross production of around 310 lakh tons, around 280 lakh tons has been for the domestic consumption. 8 lakh tons is something which we have exported, and around 29 lakh tons, 28 to 29 lakh tons will be able to divert to ethanol.
Okay.
Yeah, so we have a fairly good situation as far as the sugar sector is concerned.
But
we'll have to see how.
But the industry has sought a hike in the prices of procurement prices for ethanol. Why is that, and how will it eventually help the consumer and the government? Because that might lead to a hike at retail prices for ethanol. So how does the whole math work out, and why is the hike needed?
See, the ethanol program was brought in by the government to take the sugar industry out of the cyclic problem. If you remember a decade back, there was always a problem of payment to the farmers, specifically in the sugarcane areas. To be able to bring some respite in terms of economics for the sugar mill so that they can pay on time, the entire ethanol program was conceived. And that has really helped the mills and the farmers, because almost 1.5 lakh crore of economics or perhaps revenue has been passed on to the farmer because of the ethanol program alone. Now, ethanol, we must understand the cost of production of ethanol. The feedstock plays a very, very important role. And as I said, the last time the ethanol prices was increased was 4 years back, when my FRP was very low. Since then, FRP, the sugarcane cost, has been increased by the government to the tune of 20%. So the cost of production has gone up by almost 20%. If you talk about only the feedstock, if we ignore the other cost, which is obviously also increased, the conversion cost, the chemical cost, the manpower cost, everything. So that has really affected the entire dynamics. And please understand, the industry has put in almost 40,000 crore capacity in the industry to put up the distillation capacity. So unless the industry is able to make money or at least recover the cost of production, it's very difficult for us to pay to the farmers on time. That's why we have sought the correction of the price of ethanol.
Right, Kshitij, let me come to you and try and understand from you when it comes to the entire ethanol blending, the kind of demand that is coming in from the entire auto industry as a whole. The government is pushing for flex fuel, biofuel, all those experiments right now. What does it mean for the sugar sector at large at this point?
Well, actually, it's too early to say that what type of demand is going to get generated. When EV started, making dent across the globe, and everybody was talking about that EV is the next thing, and there is no second thought about it. But I'm saying everything's going to coexist. In India, you see, there's a lot of revenue which gets generated through oil, petrol and diesel. So unless and until you don't have another stream through which you can generate that type of revenue for the government. I have my doubts that very soon you'll see these two giants getting replaced by ethanol or EV, because there are a lot of freebies and there are a lot of revenue pressure which is there on government, push them to generate have their taxes on all these petrol and diesel. So I think ethanol as a product, it has a very strong future, because if you make a dent also, let's say if you take 5% market share also, whether there's overall consumption, we're the largest country in terms of population, and so I think it has a lot of scope building up. But the MSP for sugar is capped, and how much margin the manufacturer will have its own side. I hope that there will be no capping on that coming from government side, because it's a very sensitive industry, if you ask me. And we have seen in the past also the regulation which have been guiding how things will shape up. But yes, seems like government is very serious about it. They want to have another source of fuel, and not only from sugar, ethanol. Can be generated from other source also. So let's see how things will shape up. But it's too early to say.
Too early. Let's actually talk about the auto space at large as well, because we are clearly seeing a lot of momentum there too. India's auto market has kicked off the new financial year on a strong note. Vehicle retail sales have risen across major segments, but one trend that's standing out is the rapid shift towards alternative fuel passenger vehicles, CNG, hybrid, electric vehicles that have accounted for about 40.35% of the total passenger vehicle sales in the month of June. It's in fact crossed the 40% mark for the very first time as well. We've also seen CNG remain a large contributor to the gains, while EVs as well as hybrids have also increased their share of our passenger vehicle market as well. So let's try and decode that as well. We'll be shortly joined by Chetan to give us more details on that. But Kshitij, to you first, when we are looking at this entire shift, how would you read it from the space of market participants selecting the key auto stocks for their portfolios? Of course, all the auto sector companies are slowly and gradually stepping up their efforts to ensure they have some or the other meaningful segment of either hybrid or EV or CNG to be able to catch up on that demand as well. But looking at the speed at which the government is also pushing for these flex fuels and alternative fuel usage, how are you looking at which are the companies that are best placed to drive this shift?
Sakshi, well, if you ask me, if you see the maths, if you do the maths between ICE engine or a EV engine, you'll see a remarkable difference in terms of the saving which you can have. Now, the maths totally depends what's the cost which you are paying initially to have a EV car, and there are tax benefits by the government which is there. So you say 11-12 average car, kilometer per liter car, you say 7-8 rupees or 8.5-9 rupees, let's say 8 rupees per kilometer is what you're paying. For EV, on the average, 1 to 1.5 rupees what you're paying for. If you don't need a car to go out of city, and many places now, intercity also connectivity is very good. You go to major cities like from Mumbai, you go to Pune, or from Delhi, you go to Jaipur or Chandigarh. There are EV charging stations in between also. So I totally echo that yes, on the retail segment especially, people are looking at value buying as well as value running also. So one is value buying and second is value running cost also is they are looking at, and the trend is stepping up. If they have one car, the second car for sure is a hybrid or a EV car is what they are looking at, where they are looking at a fuel efficiency, and which will happen in the future also. So I think this trend will go. Many players are there in India, especially I think two listed names. One of them is Mahindra. Mahindra is a part of our portfolio. I'm not going to talk about stocks, and there's no recommendation. But I'm telling you that the company which can gain from this entire shift, you'll see a lot of foreign players coming to India also, and they will also gain. But I'm saying there's enough space. Before COVID, we were selling around 40 lakh cards. Now it's around 44 lakh cards. China had the same population, almost 2 crore cards. So I think with the per capita GDP stepping up, second, with government new norms of income tax, third, the GST cut, lot of push will come. It is just that because of this war escalation and commodity prices stepping up, you have seen that and oil prices stepping up. We've seen that there's little slowdown on the stepping up of commercial sales of autos, two-wheeler as well as four-wheelers. But now you will see that impact coming, and that impact will be seen in next couple of quarters. So my sense is this is a sector to watch. Auto has been doing otherwise also good, but now it will further step up. We're around $2,600 per capita GDP.
Yeah.
Once this will step to 3,000 plus, we will see further escalation and further increase in stepping up of auto numbers.
Right. Chetan is all right. We'll quickly look at how the markets are looking at this point in time as well. Let's look at the auto sector and see where's the entire move being seen as well. Let's talk about names like M&M, Maruti. Let's also see the EV players, Ather Energy, Ola, as to how are they doing. The index itself is up by 1.3 odd percent. You can see M&M up by 2 odd percent. Let's also look at some of the other four-wheelers and two-wheelers there. And we'll be able to see there is slight softness today. Ather and Ola had actually run up pretty sharply in the last 1 week, and we've seen some cool off happening on that front. All right, we'll also look at how the markets are. All right, let me also look at some of the auto ancillary space, because that's something that we need to also look at, because a lot of beneficiaries will also be coming in from the auto ancillary pack as and when the shift is happening to this entire hybrid space. So companies which furnish a lot of EV parts, engines will also be in focus there too. So let's pull up of some of the stocks there as well and see how things are panning out on the auto ancillary parts as front as well. Samvardhan Motherson, look at Sona BLW. These are the stocks that you could definitely track. We also have, I think, Chetan with us on the program. All right, Chetan, if you could highlight for us when it comes to the kind of data points and the indications coming in there. For the first time ever, 40% kind of contribution coming in from the alternate fuel vehicles, particularly on that front. What are you hearing from the companies? Are they increasing their, entire segments that totally contribute to the revenues, now focused towards these alternative fuel passenger vehicles and even two-wheelers too, for that matter?
Well, absolutely, Sakshi. Before I address that point of yours, I would like to also highlight that passenger vehicle actually led the growth story this time. It's actually outperforming every major vehicle category with 28% year-on-year growth. Now, coming to your point of alternate fuel vehicles, Sakshi, CNG is doing the heavy lifting here with 24% contribution to the 40% plus, formulation. Hybrids are doing 8%, but the greater story here is actually electric vehicles. The share of contribution of electric vehicles has literally doubled from last what we reported to 4.2% to right now standing at 7.75%. So electric vehicles are now bound to, of course, add more to it, especially with the whole chaos and issues regarding the E20 vehicle is concerned. But yes, hybrids are also doubling their market share, nearly doubling the market share to say so. But CNG remains the hero of the pack. Of course, rural demand is one thing that I would want to highlight, because rural demand is now outperforming the urban demand, the 35% growth for rural and 24% in urban. So despite the weak monsoons and weak recovery towards the farmer-led economy, the rural market is actually buoyant and buying more cars. So that's a good consumption sentiment that we are seeing in the auto space. But yes, we have to wait and watch out as to how the monsoons really cover the entire India in the coming months.
All right. Thanks a lot, Chetan, for getting us all of those updates as well. Let's shift focus and help you understand from the overall macro perspective how are things shaping up. Remember, the West Asia calm right now is improving the fiscal outlook back home. The lower oil prices are aiding the government finances. In fact, financial year 2027 fiscal glide path has gotten a boost as officials now see moderating fiscal risks for the economy. The global oil stability is definitely looked at as a key for financial year 2027 targets, and government is now sticking to 4.3% fiscal deficit goal as well. In fact, fiscal deficit is at 1.62 trillion rupees by the end of May, and fiscal deficit is at 9.6% of FY27 budgeted estimates, and the deficit is improving as well from April data. Let me go across to Karishma Sudani, who's been waiting by with more details on the same. Karishma, this is definitely a big positive for the economy that was already looking at deep risks emerging from the West Asia war. Now that the situation is improving, we're also getting to hear that the fiscal risks for the economy have also reduced.
Actually, we are picking up from our sources that since the de-escalation of the West Asia crisis, government is now moderately confident on the fact that they'll be able to make their fiscal deficit goal. And if we go by the data that has been latest released just on latest notes, by May end, the fiscal deficit has been met by close to 9.6%. While the 4.3% target is still something that they are cautious about, they say that in absolute numbers they will be able to, if the situation does not re-escalate and if they're able to manage the excessive expenditure with increased revenue.
All right. Okay. Thanks a lot, Karishma, for getting us those details. This is definitely good news coming in. Kshitish, let me come across to you as well to see how market participants like you would be gauging such news flow, for the economy. By the start of this calendar year, there was a lot of kind of diffidence in the market and the economy, and there was a lot of talk about how there could be prolonged impact even if the war was to end. Now that we are already looking at, of course, higher chances of the war completely concluding, the peace deal has been floated, although it's still vulnerable, but we're still looking at how things are improving on ground. And you've heard how Karishma is talking about the government is now positive about, sticking to the fiscal glide path for the economy as well. What does that mean for a market participant?
Sakshi, it's a very welcome and positive news. Having said that, we have to wait and watch how Middle East escalation will cool off, because this to and fro is going on between both sides. As I said, first thing is oil, and oil has a lot of relevance because our 85% of oil has been imported, and that's one dependence which we have across, and it is one of the main key instrument of your inflation also. So I'm saying when you have such a dependency on this factor, I think that is very important. If it's done, then I think it's very positive for India. Second is, as I said, currency. So seems like we are back on track with regard to our GDP part also, and numbers are looking up. I think, as you rightly mentioned, many of these auto ancillary will actually gain, because they will not keep the commodity price hike to themselves. They will pass on to the original OEMs, or let's say auto manufacturers. So I think they will also gain. Seems like, and if there are gaps in the numbers, that's been discovered for in the market. And third part is, I think, FTA sign, which is required. So there are sentiment which are negative for India with regard to US, which one can make out. Once you have the FTA coming in your way, I think that will be very, very, very positive for India. And yes, IT is one part where we have not seen numbers, and overall today also, if you see, we are not very, very reasonable with regard to other markets, but seems like there's some part of index which is doing reasonably well, and that's how you have to be stock specific or a sector specific rather than be index specific. So yes, there are pockets, there are opportunities which should be very good, and then one has to select it wisely. If you can do this diligently, do that. Otherwise, take an index fund or a mutual fund or a PMS or AF, whatever suits you.
Sure.
So I think that's the right way to invest.
All right. And viewers, we have to share with you that the latest edition of the Business Today magazine is also now out on the stands. And this time, our cover story is on Anil Agarwal's Vedanta and its landmark corporate restructuring. This is more than just a demerger story. It's a reflection of India Inc.'s evolving global ambitions as well. Remember, the journey began in 2003 when Vedanta became the first Indian listed company to list on London Stock Exchange in pursuit of global capital and better valuations. Of course, in 2018, the company delisted from London, betting on the growth story of India's capital markets, and now Vedanta has entered a new phase altogether, completing a major restructuring that has created 5 listed companies with the aim of unlocking shareholder value. But the key question now is, how will Vedanta fund its ambitious $20 billion expansion plan? The latest issue of Business Today magazine has all the answers to that. Let's take a look there. Let's quickly look at how the markets are shutting shop for the session today, viewers. We are at 24,422, about 0.6% higher in the session. So we maintained that move on the positive end, and we are nearing the high point of the day as we close the session. Remember, it's the Nifty Bank that's also inched up about 0.5%. That's contributed smartly to the session today. Auto stocks, of course, have driven in the fast lane, 1.3% higher. When we look at the real estate sector, that's the one that is top the charts among the top sectoral movers, 1.7% higher for this one. We've also seen the mid and the small caps inch about 0.5% higher, maintaining a good run up in the session today, barring IT and PSU banks. Rest all of the pockets have actually given you good set of returns in the session today. And we've also seen the lot of movers on your screens, IndusInd Bank, HDFC Bank, a lot of these private sector banks that have led the show today as far as the market movers are concerned. Oil and natural gas, you're looking at Bajaj Auto and M&M as some of the other stocks that have gained. It's time to take a short break right here. We'll be back shortly.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group.
Right, we also have some queries now coming in, viewers, for our guests here. Pavan Jaiwal from Jaipur has the first question for you, Kshitij, and this one is on the real estate and the cement space that we were just pointing out at as the top moving sector for the markets today. The question that Pavan has is, are real estate and cement stocks good buys at the current market levels?
So I think companies which are into commercials, you can look at that because I think residential, there's a lot of escalation across key towns where we see some bubble which is there. And if IT will keep on struggling over a period of time, now it totally depends a lot on the IT sector, because one of the key buyers in your high-end real estate is your IT sector employees. So I think if IT will keep on struggling, then you might see some sort of pain or some sort of underperformance in that sector. It has a lot of relevance in what is happening in the economy. If some economy is doing well, if your nominal GDP is around 11-12%, you might see things moving up in the right direction. Otherwise, just look at where the commercial space is there, and as well as companies which are actually focusing on data center side of the story also, because that side of the commercial will do very well, because that's one of the key things when you have to raise a data centers, and there's a clear-cut focus of government till 2047. There are no taxes on that business. So I think just keep on looking, do some homework, look at businesses which are looking at that side of the story. Cement will keep on doing well. We have to build the entire country. A lot of development is going on, but a lot need to be done, as well as on the commercial, as well as on the industrial side, as well as on the infrastructure side. So cement will keep on doing well. Just look at the right metrics to see what type of capacity they are running at in terms of their overall capacity which they have. And that's one of the metrics that you should look at. EV to EBITDA is another metric that you should look at. So whenever you are buying stock, just don't buy because someone is coming to screen and saying something and someone has advised you. Do the right practice, do deep dive, go level 2, level 3 when you buy a stock, because it's your hard-earned money, and after that only just take a bet.
Okay. We also have Pratik Jadhav from Mumbai asking you the next question. He wants to know, is it worth investing in railway stocks at the current market price? Well, okay, we'll try and address that, especially after a gap of almost 1.5 years, almost 2 years, when railway stocks have hardly performed. And that's been a pain point, because I think just about 1.5 years ago, everybody was betting big on the railway story. These stocks were also giving massive returns, rising every day. And that's where investors probably entered at a time when the stocks stopped performing at all. Is there any kind of a trigger that can bring back the lost glory days for the railway pack?
I will not talk about the stock. I'll tell you about the sector. Here it was undervalued. It was more of a value pick when 2020, 21, the entire value stock started doing well. I think from here onwards, look at stocks with growth, where there is a clear-cut growth, where you see that company is doing its top line, growing at 15-16%. Its earning growth number is around 15-16% with expanding profitability margin. Look at those sectors. If you really want to play the value theme, then rather than playing a theme or a sector, just buy a fund or do an index for them, because I don't see any trigger, as you asked me, for the sector to do. Maybe it will do well, but there are many other growth sector will do much better than what the sector will do.
Okay, thanks a lot, Kshitij, for being with us on the show and for sharing all these insights for our viewers. Always a pleasure to have you. Viewers, in case you too have any questions about your investments in stock markets, in mutual funds or gold, then you can send us your queries on the number that's flashing on your screens. We'll be happy to address that with our top market experts who join in on the program. With that, we wrap up today's Business Today edition right here, but stay tuned as much more comes up right on your screens ahead. And of course, we'll be tracking the stock market coverage from 9 a.m. tomorrow morning on India Today.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE